Adani Energy launches a $1 billion QIP, prices the issue at 1,027 rupees a share. And Prime Minister Modi asks captains of industry to participate in a big way with the government to achieve Viksit Bharat goal. Now, in global equity markets, volatility continues ahead of the outcome of the Federal Open Market Committee meeting in the US, and that is going to decide the course of monetary policy. Of course, the expectation is of a pause this time around, but an indication of a cut in September. The Dow gained overnight, ending higher by 0.5%, while the S&P 500 and the Nasdaq dropped 0.5 and 1.3% respectively. Asia markets are mixed ahead of the Bank of Japan rate decision. And speaking of key rate decisions, I already mentioned, in fact, the Federal Open Market Committee decision. In fact, the Nikkei 225 was the only one out of the three early risers that were lower at the start today. It was down about 0.9% at the start. In fact, let's move over and talk about the big story this morning. The first step has finally been taken to curb excesses in the derivatives market in India, and this has come in the form of a consultation paper from the Securities and Exchange Board of India. A total of 7 measures have been proposed, and first let's look at what they are, and then we'll discuss the implications. Charu joins in with more on this. Charu, what are the main announcements here?
Good morning, Alex. So as we know that almost all the market leaders were warning about the macro level of the surge in the F&O trade. This consultation paper has now come, which says a lot of very important things which are protective and restrictive in nature and yet not very barring in nature. So let's see. Sebi plans to raise the minimum contract size from 5 lakh to 15 to 20 lakh. Extreme loss margin to increase by 3% before expiry day and 5% on the expiry day. Upfront option premium required. Strike intervals standardized to 4% around index price and fewer distance strikes. An initial limit of 50 strikes and new strikes to be added daily. Now this is to have an effort to cut the volatility, limit retail risk, and in no manner is it supposed to be an exclusion to the small investors, but it is a measure from Sebi to basically keep the trade open to only those who are ready to handle the risks involved in it, so that the family savings are not going at this level towards speculative spending.
Right. Thanks so much, Charu, for getting us those details. What are the implications of each of these 7 measures? We've got Agam joining in to tell you about some of that. Agam, the question is, and the implication is immediately that volumes could be affected.
Yeah.
But how do you read into each of these?
Well, there are far-reaching and very wide implications when it comes to these 7 measures. I'll start off with the first 2. First one is the options rationalization, and the second one is an upfront collection even from option buyers, because so far we've only had margins collection as far as option sellers go, and naturally even buying and selling futures involves the collection of margins, but that's not the case for option buyers who will now have to pay upfront, at least as far as the proposal is concerned. The option strike rationalization will actually mean that there will be more liquidity when it comes to strikes closer to the underlying, and also that there will be a little bit of a reduction in margins because you will have less far out of the money options to deal with. Well, we move on and talk about perhaps the more impactful of the proposals is that at the moment, remember that the NSE has 4 actively traded weekly options expiries. The BSE has 2. And according to one of these proposals is to bring this down to 1 weekly options expiry per exchange. And this will obviously have more implications for brokers and exchanges in terms of the revenues that they get. But it perhaps could be a positive because it'll be that much less to play around with as far as the retail participation is concerned. And the final bit comes down to, your reduction in margins. So there are several measures. One of them, of course, is reducing near-term expiry margins, increase near-term expiry margins. That is a positive because, the near-term expiries are always a lot more volatile. You will not have a calendar margin benefit on the day of expiry as well. And of course, the fact that you actually do see the notional value of all these, derivative contracts go up substantially. 6 months down the line, of course, it would also double level would also mean a higher margin requirement in general for derivatives tractions. That's could likely keep a lot of traders at bay, and they'll certainly have less in terms of position taking ability and hence lesser risk as far as trading in futures and options is concerned, Alex.
All right. So, but let's also listen to what SEBI chairperson Madhavi Puri Butch had to say when she talked about the rationale for introducing measures to reduce excessive speculation in the F&O space.
If there is 50,000, 60,000 crores of losses by individual households in the F&O segment, what would you say to that? If 50, 60,000 crores in a year is going away from household saving into losses in F&O segment, whereas that could have been productively deployed as a part of maybe the next IPO round, maybe the mutual funds, maybe more productive uses for the economy. Why would you say that that's not a macro issue? At 50, 60,000 crores, that's pretty macro according to me. This is not about some 200, 600 crores.
Yeah, think about that, 60,000 crore being lost by households in speculation in the F&O market. Let's talk about the Qs though, and let's zoom into what happens later today. Of course, on the global stage, there's lots to watch out for, as I pointed out at the start. But Agam, what are the major Qs? We've seen very narrow ranges over the last couple of days, and that move to 25,000. Of course, it's inexorable. It'll happen at some point. The question is, will it happen this week?
But yesterday was the second straight day of that tease playing out, right? 25,000, close but no cigar there for yet another day. And I reckon that while the cigar boxes will be outside, people will still have to wait for them to light them up. Well, again, yesterday was a day of trade where we had marginal gains and the Nifty did try and make an attempt to hit 25,000. That wasn't the case. We saw a sharp drop, in fact, on an intraday basis. We did see about a 2% increase there as far as OI is concerned. Bank Nifty, again, this is where we saw marginal moves, a lot more unwinding coming through. As far as the option market goes, and well, naturally, yesterday was the second straight day where we saw further strengthening of the 25,000 call strike. And remember now, if we actually do see the Nifty move above that mark, there will be a very, very sharp move above that, as far as the up move is concerned. On the lower end, we continue to see a lot more writing on expected lines when it comes to your lower level puts. Finally, coming down to stocks, well, we have plenty of action when it comes to longs in India Mart, and we'll react to earnings today as well. GNFC, Godrej Properties, Chamal Fertilizers among stocks which are unwinding. Let's pull that list up as well. And there was a lot of short covering for Colgate, Naveen Fluorine, SBI Cards, Crompton and Bandhan Bank. Stock-wise, Alex, will be about earnings. And on the index, of course, once again, keeping an eye on the Nifty 50 and, well, it moving towards 25,000.
All right. Thanks so much, Agam, for getting us those details. Let's turn to earnings, as Agam pointed out, because that continues to be the focus with individual names. A lot of the ones that he mentioned were ones that reacted to earnings. Tata Consumer is in focus on the back of the first quarter earnings as well, where revenues and EBITDA saw double-digit growth. Mahima is joining in to tell you about the fine print here. Mahima, we've seen a couple of surprises. Was this one?
Absolutely, Alex. So it was a mixed quarter for Tata Consumers. While revenue and EBITDA, like you rightly mentioned, grew in double digits, net profit has taken a hit of around 12%. Now PAT is missed on account of a couple of reasons. First one is higher other expenses. Second, amortization costs are really high on the new acquisitions of Capital Foods and Organic India, and the third one is rise in tea and coffee prices. Now, key highlights for the result, well, organic growth of 10% and acquisitions growth added around another 6%, so overall growth of 16%. Volume growth for food business was around 10%, salt grew around 9%, and international business recorded a 10% growth, which was 8% constant currency growth. Now, tea, Nourishco and Starbucks volumes had taken a hit because of the heat wave, and overall because of the tea and coffee prices, especially Robusta coffee, they were 50% higher than they were 2 quarters ago. So this is one of the reason why the PAT was a miss. And overall in con call highlights were 2 main highlights. Right issues, they have gone ahead and done a right issue to repay the short-term debt that they've taken for acquisitions. And secondly, they are launching 2 pilot programs to expand distribution to pharmacies, foods and food services channel. So this is the overall view of how the results for Tata Consumers Q1 FY25 have panned out to be.
Absolutely. Thanks so much for telling us about that. But there is also, Mahima, a couple of brokerages that have released their first cut of the review of Q1 earnings. There are, of course, quite a bit more to go. But then there are quite a few revisions in the EPS estimates, I believe. What are you picking up?
Right. So there are 2 brokerages notes to be specific. First one is MS on Q1 review. They've said that there's a marginal beat on the top line for most of the earnings so far. Margins have expanded for 3 out of 8 sectors. Industrials, gas utilities, consumer discretionary and technology have led the beat versus their analyst expectations. Now in terms of earnings revision, well, Ashok Leyland, Coforge and Interglobe, they have revised the earning estimates by 7% and 5% respectively, and they've narrowed down the EPS estimates for IDFC First, Cyient and SBI Cards. Similarly, Citi has also come out with its Q1 review where they're saying that Q1 earnings are largely in line with the estimates except for OMCs, which have already had a growth in the past 3 to 4 quarters. The EBITDA and PAT growth at 7% and 7% YOY, and what they're saying is that industrials have delivered earnings beats. Energy is among the key misses, and June 25 Nifty target is 4,000, and this is trading at this will trade at a multiple of 19 times. Now they said that they are overweight on PSU utilities, defense, industrials, banking and insurance, and underweight on consumer discretionary, IT, services and metals. They've also revised estimates for Interglobe, PNB, HDFC, AMC, Bajaj Auto and SRF positively. This ranges between 4 to 17%, and they've cut down the EPS estimates for JSW Steel, BPCL, Ultratech, Asian Paints and RIL anywhere between 37% to 6%. So this is the overview of what Citi and MS is making out of the earnings that have come so far.
Significant. Thanks so much for getting us those details. Now, it's going to be a week to focus on automotive and particularly the four-wheeler space. Today, of course, you're going to have Maruti Suzuki as well as Mahindra and Mahindra. Let's talk about these 2 numbers. And Puneet is joining in to tell you about the key monitorables. Let's first talk about Maruti Suzuki, Puneet. So we have a sense of volumes, but what's the earnings monitorables?
Well, thanks for that. So it is expected to report a decent set of numbers. This will be led by strong profitability. So revenue is expected to rise about 7%. EBITDA is expected to come in around 4,600 odd crores, while margins will have a strong beat with coming in growing roughly 420 basis points from the same time last year, coming in roughly 13.4%. Now, last year the margins were around the 9 to 10% range, so this is a very strong numbers coming in from Maruti Suzuki. They are expected to report 38% rise in profitability to come in at roughly 3,496 odd crores. Now, we have the numbers for the volumes, as you rightly said, 5% growth coming in at roughly 5.22 lakh units. And the other things that we can look at is also launches, which has been in this particular quarter, specifically the Dream series, which is at the entry level space to coming at roughly 4.99 lakh rupees per car. Now, there are multiple launches in this particular space, and the management had highlighted earlier on that they are expecting a strong response from this. They also had launched the new Swift in this particular quarter in the month of May, which has got really strong responses, around 30,000 units already sold. Apart from that, Nomura also sees a very positive impact led by price hikes as well as a favorable mix of SUVs in this particular quarter.
Right. Puneet, there's also Mahindra and Mahindra to talk about, and not just, of course, the automotive segment, also the farm equipment segment. How is this looking for M&M?
A really strong quarter again from M&M. They're continuing the momentum from the previous fiscal year. So revenue growth is expected around 16%. While EBITDA growth is going to be slightly lower at 8% because they have done a lot of investments in this particular quarter. Margins are expected to rise to roughly around 13.7%, or 30 basis point positive impact, while profitability will also come in at roughly 2,800 odd crores. Now, for M&M specifically, it's been a very decent quarter. They have had the launch of the 3XO, which is been, gotten a very strong response of only 50,000 units in just the first hour. They have, now being taken more bookings in this particular quarter, and we'll see what kind of final number we can come to. Nomura also sees a very positive impact for the company because of strong operating leverages, apart from the 3X. So there are also some media reports of a launch of the Thar, and they've released the first teaser of that. So some more update on that will be key. Apart from that, we will be seeing any update or any kind of new launches from Mahindra and Mahindra. The farm equipment space might be a little slow this quarter, but we are seeing a good response going forward in this particular year from what management has spoken to us previously.
Yeah, green shoots in the rural space. Thanks so much, Puneet, for getting us those details. Now, it's time for a quick break on the program, but before we head into that, take a look at what Chairperson of Sebi, Madhavi Puri Butch, had to say about the centralized KYC issue. She says that Sebi will not allow a PTM type of situation to emerge.
Will not allow a PTM type of contamination in our market. Okay, so we all saw what happened in PTM. Now, because in the banking system, there is no KRA type system, so a problem of PTM stays in PTM. It doesn't contaminate other banks. But if we allow PTM to come into our system and then no KRA and then it contaminates the whole system, how can we allow that? So we cannot allow that. So we will always have our KRA sitting in the middle to make sure that things are validated. Otherwise, you can have any one mischievous player coming and contaminating the whole system. We will not allow that.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
When you talk about somebody being empathetic, okay, of course that depends on, again, which stage of your life you are on. Okay, so if, you've kind of finished the Maslow stage of roti kapda makan that you need.
Sure.
Now you've done you with your savings, and then after that you say, okay, why am I saving all this money? Let me start giving it away.
Welcome back. You're watching All You Need to Know. It's time to focus on the earnings that, or rather, it's time to focus on commodity stocks. And first up is Coal India, which will report its earnings later today. And we've got Mihika joining in to tell you about what to expect. Mihika, what are you picking up? Morning.
Yes, morning. So when you look at the broader numbers, according to Bloomberg consensus estimates, revenues may rise 9% on a year-on-year basis to over 36,000 crores. However, EBITDA may fall 3.2% and margins could also see a contraction from 31.8% previously to 28.2%, and net profit may fall 4% on a year-on-year basis. When you talk about the key expectations, now brokerages do expect a 6 to 7% year-on-year decline in EBITDA, and this is mainly due to lower realizations from e-auction sales. Now, according to Axis Securities, the e-auction premium could be around 60% versus 66% in the previous quarter. Note to viewers, an e-auction premium is basically the additional amount buyers are willing to pay for coal compared to the base price set by the company, and higher premiums means more revenue for Coal India. EBITDA could also be the EBITDA impact based on the low volumes could also be offset by the higher volumes. These factors could lead to flat revenue growth sequentially.
Right. So, Mihika, let's also talk about Tata Steel and what it's going to be posting this time around. Is there going to be a headwind from the overseas business again?
Yes, you could see that, but also prices play a key role. Now, according to the broader numbers, Bloomberg estimates say that revenues may fall 4.5%, EBITDA may rise 23%, margins could also improve to 11.3% versus 8.8% the previous year, and net profit could almost double to over 1,200 crores. Now, when you talk about the key expectations, according to Nuvama, EBITDA of the steel players could fall 5 to 13%. But this would be on a sequential basis, and this is mainly due to lower volumes and lower product prices. But it's key to know that the year ago base is lower, and margins could get some more support from the lower coking costs that we have been seeing. According to systematic institutional equities, Tata Steel could see an annual uptick in EBITDA. That's how the Bloomberg consensus estimates also look like, but a decline sequentially. The top line to see a single-digit downtick on suppressed volumes and suppressed prices as well, and the lower volumes will be due to the planned shutdowns that were done by the company. And lastly, when you talk about the overall volumes, they have increased for the company according to systematics.
All right, thanks so much for getting us those details. Let's talk about a few other stocks to watch in trade today, and we've got the likes of Indus Towers as well as Vedanta to talk about, and Vedanta in particular on account of a tax demand. Rucha is joining in at the start to tell you about that. Rucha, what are you picking up?
Good morning, Alex.
Morning.
So I'll start with Indus Towers. Indus Towers reported its first quarter FY25 numbers. Revenue was below estimates while margins and profits were above estimates. Now moving on to numbers, revenue was up around 3% while margins came in at 62% versus estimates of 54%. Now this is also on a quarter-on-quarter basis. Net profit was up around 4%, but this is largely because of the reversal of provision for Vodafone Idea's past dues which the company had made. Indus has now recovered around 1,300 crore of past dues from Vodafone, and the remaining amount left is 4,600 crore, which is expected to be recovered from Vodafone Idea. Another important thing over here is the board approved buyback of up to rupees 2650 crore worth of shares. Now this is the first payout in 2 years and the first buyback of Indus Towers. Next is Titagra Rail Systems. Again, it reported its numbers. Revenue and profits were below estimates. However, margins were above estimates. Moving on to numbers, revenue was down slightly, about 0.9% on a quarter-on-quarter basis. Talking about order book, the company received order worth of 350 crore rupees during the quarter. Talking about segment-wise performance, the freight rolling segment, which accounts for majority of the revenue, grew about 13% on a year-on-year basis, while the passenger rolling segment, which accounts for 7% of the revenue, de-grew about 60%. The call is scheduled today at 10:30, wherein we'll get more highlights from the management themselves. Next on my list is Mahindra and Mahindra Finance. The company has approved to raise up to 1,500 crore of bonds. Size of the issue is around 250 crore with a green shoe option of up to 1,250 crore. Lastly, Vedanta. Now the company has received creditors' approval for demerger. The company will be split into 6 separate companies, and shareholders will additionally get 1 share of each new listed company. Now this enables direct investment in the pure play companies, and also vertical split enables better organizational structure. Now the companies that are to be formed is the Vedanta Aluminium, Vedanta Oil and Gas, Vedanta Power, Vedanta Steel Ferrous Materials, Vedanta Base Metals, and Vedanta Limited as well. So this is what we have on our stocks to watch.
Thanks so much for getting us those details, Rucha. Let's talk about more stocks on the back of earnings, and we've got Varsha joining in to round off the list. Varsha, what are you picking up?
Yeah, good morning, Alex. So let's start with Navin Fluorine. Weak set of numbers. If you see, revenue was up 6.6%, but EBITDA was down 12% and net profit was down 16%. Now, if you see, specialty chemical sales were impacted due to inventory level realization. We all are seeing the pressure that we're seeing in the chemical segment. If you see the key highlights, the EBITDA impact was led by exceptional gas pricing witnessed in last year and lower specialty sales and some impact from lower CDMO mix. Also, company remains on track to improve it gradually during the year. As we see, year on year EBITDA is down, but sequentially company has improved. If you see the con call highlights, there are signs of recovery in the refrigerant gas market with respect to pricing. There are R22, which is again a refrigerant gas which is used in ACs, is the pricing environment has improved in the exports market, and management also expects that agrochemical demand to recover from the end of Q2 FY25. Overall, if you see, many chemical companies, many chemical managements are saying that H2 will be better as compared to H1. Then we have Macrotech Developers, wherein profit rises almost 165% but misses estimates. Revenue was up 676%, margin was 26% versus 20% last year, and If you see the key highlights, the pre-sales were up 20% at 4,000 crore. Collections were up 12%. And if you see the net debt to net equity stood at almost 0.24 times. And the company has maintained their pre-sales guidance of FY25 at 17,500 crore and FY26 at around 21,000 crores. And they expect an operating cash flow of around 6,500 crore in FY25. Then on my list, I have Waaree Renewables, wherein good set of numbers. Revenue was up 83%, EBITDA margin was 17% versus 10% last year. The key highlight, interesting thing is that unexecuted order book stands at around 2,000 megawatt to be executed in next 9 to 12 months. If you see the per megawatt realization that company does is around 1.2 crores. So good set of numbers we can see in FY25. Bidding pipeline remains robust at 15.5 gigawatt. And this is all we have on earnings today.
Absolutely, Varsha. Thanks so much for getting us those details. Of course, also watch out for RR Kabel, which saw its revenue rise as much as 13% and net profit was down by about 13%. There's lots to talk about on India Market Open before the start of trade, particularly the implication of the consultation paper on the curbing of speculation, excessive speculation in the F&O space. Do stay tuned. All of that lined up for you on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome. You're watching India Market Open. We are still in the midst of the earnings season, but there's enough and more happening on the regulatory front to protect retail participation, which I think is the big one. I know it's a recommendation paper yet, so what actually comes through is going to be anybody's guess. But apart from that, three big central bank meets as well. So there's enough and more to tap this morning.
Yeah, 24 hours of central bank meeting, and maybe the Sebi thing. I mean, the first of the salvos, maybe there is more in store.
Yeah.
Let's see what kind of an impact does it have today and over the course of the next few days, weeks, months, depending on what more they do after this initial consultation paper.
Well, one thing I think we can say with certainty is that it's more. It should be taken more seriously than just a consultation paper.
Yeah.
Just look at the series of events, the statements coming in from all of the regulators. What Finance Minister Nirmala Sitharaman told us in the exclusive to NDTV after the budget, saying that it's to the regulator to take decision, but this is an indication that we've given by increasing STT.
Exactly, yeah.
So more indications in place. Could we see something in October later? Of course, we'll wait to see. So a lot to unpack. I'll very quickly go through the global cues. And I think, yes, the big one is all the central bankers meeting and what indications they're going to give. Obviously, no clear direction ahead of those key meets across global markets. So let me start with US markets, which were completely mixed. The Dow was the only one up in the green, but the Nasdaq really slid, and that rotation out of mega cap tech stocks continues. Microsoft numbers, which came in after closing bell, were disappointing. Their cloud revenues have not been on par. Big slide in the futures, and you'll see that playing out tomorrow in the cash markets in the US as well. So tech stocks are going to continue to be under pressure. Is that an indication for us? We'll have to obviously wait and see. Bond yields as well, quite benign actually, not half bad ahead of the Fed meet at 4.14 at the 10-year Treasury. And just look at what the key indicator really is. Later tonight, India time, you will know what Jerome Powell wants to do, and that will be the big one. Crude prices actually have recovered after a bit of a slide. China consumption has been a big question, but there was a recovery there, and you're seeing that on the NYMEX crude numbers as well, the Brent at 79.20, but that recovery has come after a fair amount of a dip. And Asia is interesting this morning. Japan definitely under pressure, down nearly a percentage on the index, on the Nikkei, ahead of that Bank of Japan meet. But yeah, 3 key central bank meets ahead, and that's what's going to be in focus. I'm going to quickly pull up the implied open for you. We look like we're starting positively, which I think is good. In the middle of all of this, we'll have to wait and see how much of an impact Sebi guidelines or recommendations, actually guidelines, it's a discussion paper right now, have, if at all, and what pockets of stocks are impacted. That's what we'll have to wait and see. But in terms of what yesterday's markets looked like for fund flows, we should pull that up because it's an interesting picture. It's a complete balancing act, I would say. FIs were selling, they were dumping, and DIs were buying. So you had, a complete balance over there. DIs, in fact, have bought 23,000 crore rupees in July so far. So domestic investors and mutual funds are really piling it in. So those were some of the big indicators.
Yeah, most certainly. Okay, very quickly the trade setup. I mean, frankly, not too much to add, but for the fact that on a consolidation day, the Nifty PCR went inched up to about 1.09 or 1.10. Typically at 1.3, 1.4 is when the worrying bells come in for now. Inching higher, not quite out there, but I mean, enough and more people will tell you that now we are finding resistances. I mean, just look at the Nifty Bank yet again. Second day on a trot, you see the levels from where the Nifty Bank retreated. It's 52,000. It's clearly finding resistance there. And now the trader, the trading mentality might be that it's a sell on rise coming near to 52,000. Good time to initiate some shorts there. So it's seeing that 2 days on a trot. Lower highs, lower lows, 2 days on a trot now. So keep an eye out for Bank Nifty more than the Nifty, because that is the one that is driving the sentiment in the near term, and maybe keeping the Nifty capped at about 25,000 as well. The Bank Nifty is the perpetrator, seemingly. And pharmaceuticals, I mean, the numbers, notwithstanding the commentary from some of the pharma names, has been spectacular. I mean, and some of the spec chem names as well. The results, by the way, for Navin Fluorine were terrible, and we'll get to that in a moment. But the commentary that has come in yesterday from Privi Speciality or from some of the other chemical companies about capacities coming up, earnings ramp up looking likely in late FY25 and FY26 certainly remains a pocket that you want to keep an eye out for. So certainly keep that at the back of your mind.
What about auto? What was going on there? Tata Motors eking out 3.5% gains, and this is of course record highs on the auto index. So while you're talking about how well pharma is doing, I think it's worth a mention that auto has also come in and saved the day for the index and trade yesterday. Energy stocks also doing quite well. So while there is resistance and selling at higher levels, we must also acknowledge the fact that sector rotation is supporting the market. So at any time when you'd imagine that there'd be selling and the markets would cool off, you'll have one random sector popping out without any major reason for those gains. But we'll go into stocks and dwell into that F&O recommendations that have come in from the regulator. Remember, Indian households have been losing 60,000 crores annually on back of F&O losses. Now that is significant. This, of course, we'll talk about will be a loss for maybe trading houses, brokerages, but could be a win-win for the mutual funds. So it's going to be an interesting game that's going to play out over the next couple of months. But
can I just add something on that from the Sebi note? And obviously there's 7 recommendations. We'll talk about them in detail. We'll get expert views in. But just the data they put out, I found very interesting for FY23-24 specifically. It puts it into perspective why the worry. So there were 92.5 lakh unique investors who traded in NSE derivatives. This includes individuals and entities, etc. So unique investors. Out of these, only 14.22 lakhs made profits. So this is 85 out of every 100 investors have made losses, and those losses in 23-24 have come up to nearly 52,000 crores, 51,689 crore rupees, if I were to be very specific. So, just the fact that Sebi laid out this backdrop in its discussion paper is also telling you and giving you a sense of where it's coming from. So even if there is a tweak up or down, maybe if there's not so much of a restriction of expiry days in a week or whatever they do in terms of lot sizes, but that's directionally, I think, the dead giveaway of why there is concern.
But I'm pretty sure there will be resistance from the exchanges and the brokerages. Now, how well that's taken is
they don't want to lose the revenue.
We want to watch.
Yeah, but maybe
NSE does have 4 expiries weekly, right? They've got Nifty midcap, Nifty, Bank Nifty. So they may stand to lose a little bit more than BSE, but
no. And the proposal is that you restrict 1 per week to each exchanges. That's one of the 7 proposals.
I think. But just to put another number to that, the turnover in index option in terms of premium terms has gone up from 4.5 lakh crores to 140 lakh crores in 5 years. So yeah, it's significant. But like I said, we'll dwell on this in a few minutes from now. Just very quickly, stocks to watch. I've got a bunch of great earnings this morning. Macro tech developers. I'll start with them. Not in terms of market size, but this one also stood out in terms of the kind of reporting they've done for the quarter. It's been one of their best quarters. That's what they've said. Revenue was up 76% for macro tech developers at 2,847 crores. EBITDA came in at 757 crores versus 330. That's almost doubling down, if not more than that. Margins have improved at 26.6% versus 20.4%. Net profit has come in at 476 crores versus 179. This is slightly lower than Bloomberg expectations, but if you just look at point to point in terms of performance, it's a clear beat in terms of what we'd seen from Macrotech last quarter. Key takeaways, they've reported pre-sales of 4,030 crores at a 33% EBITDA margin. So they've not compromised on margins and yet managed to sell quite well. And I think that is a clear standout for me on Macrotech developers. They've also sold significantly in the Pune area, 50% uptick in sales in Pune. They've said that they look to becoming the largest developer in Pune in the next 6 years. They've also added 3 new projects in MMR and Pune to the tune of 11,100 crores, which is a gross development value. So it's a huge sort of development project that they've managed to add in this quarter. All in all, it's looking good for Macrotech. The stock was down 2.5% in trade yesterday. We will have to see how the markets react to these earnings in early trade this morning. Well, the other one that was a clear beat was Torrent Power. Fantastic numbers. Revenues were up 23.3% to report at 9,034 crores. Profitability was up 88%. Now that's a big jump coming in on profitability, and this is all core business activity for Torrent Power at 996 crores. Total generation capacity, including projects, is at 7,492 megawatts. They've also issued a tender, and these are some reports we saw last evening. Some agencies have reported that they're seeking supplies of LPG for a 10-year period. So they've put out the tender. Let's see what happens on that LPG that they're seeking for 10 years. Well, a couple of reasons why they've managed to eke out such strong profits. Contribution from merchant power sales and gas-based power plants has increased significantly. There's also an increase in contribution from licensed distribution business, and this comes in despite the fact that tax expenses have actually gone up. So all in all, strong quarter. Torrent Power should be getting a thumbs up, and 88% in profits is not something we see often on such a large company. Well, another one that is largely a mixed bag is Tata Consumer. The stock has not been doing very well in the last couple of days. what you want to remember is it's been an outlier. So when consumption has been performing well, the stock's been left out. On a bad day, it's holding out as well. But a couple of takeaways. The erstwhile consumption major has reported revenues that have seen an increase of 16.3%. EBITDA has also improved 22.4%. Margins have also come in higher at 15.3 versus 14.6. It's net profit that has actually declined, coming in at 314 crores versus 359 crores. So operationally, it's been a solid quarter for Tata Consumer. Why you're seeing that decline in profitability is we'll tell you why. Because the other expenses have gone up. Amortization costs on the new acquisitions. Remember, this year has been about acquisitions for Tata Consumer, on back of which their profit number looks weaker, even though their core business is actually well placed. And there's also been a rise, inflation causing a rise in the price of tea and coffee prices. But they've said that the outlook looks optimistic. They're bullish on volume growth. They're bullish on rural recovery. They're also very bullish on the international business that's recorded a 10% growth in value terms and an 8% growth in constant currency. So all in all, I think great quarter for GAIL, great quarter for, Torrent Power. I'm obviously thinking about GAIL because they've had a great quarter too.
Yeah.
Macro Tech, in my opinion, and Tata Consumer as well. Good quarter. Brokerages aren't disappointed, and I'm taking heart from that because I believe the profitability will be impacted for the next few quarters as they continue to amortize the acquisitions they've made. But business is looking okay.
Yeah.
I was just going to say, GAIL is actually rocking. If you think of it.
Yeah, there's a bit of a competition with Torrent Power.
Yeah. GAIL had an 80% jump in its EBITDA, and profits up 77.5%. I mean, GAIL has also had a fabulous quarter, and PSEs are back in vogue. Like we saw yesterday also in trade, the Nifty PSE was good. So yeah, that's one to keep an eye on. So I'm starting off with Dixon. So the numbers are actually looking very good, save for the margin figure year on year, which is a bit of a squeeze. The management in its con call says that's nothing out of the ordinary, but that might be the fly in the ointment, so to speak, because otherwise the numbers are just very, very strong. Revenues jumped from 3272 crores to 6580. EBITDA is up 88%. Net profit has also jumped significantly. Just their mobile revenues have grown 189% year on year. Margins, though, have gone from 4% to 3.8%. So not too much of a squeeze over there. They've finalized HCL as their technological partner for display models, and 25 to 30% of the Motorola mobile phones that Dixon is manufacturing will be for exports. Overall, good numbers. The security equipment business did nothing this quarter, but remember, they're completely rejigging that part of the business. What is Novama saying? They're saying retain a hold, target price of 12,000 rupees. And an upside, which is not really that much. Above expectation results with revenue PAT surging 101 and 106%. I mean, for a company that size and for the strides they've already made, it's quite astonishing what Dixon has done. And like I keep saying, it's the poster child of the whole PLI endeavor. Maybe not very positive for them that more has not come on PLI, but nevertheless, the mobile and EMS segment has driven growth. They've guided for a steep ramp up in mobile revenue in FY25. That's something to keep in mind. New customers have been onboarded and one new addition is expected. Backward integration in new products will drive their growth. So Novama has also raised their PAT targets for 25 and 26 by 13 and 16%. So the Dixon stock is one to look out for. I don't know if there's so much more of an upside left, though. That's the only question that would come in.
Yeah, just one. I'm looking forward to the conversation that they'll have with us at 10:30 today. So that is keen. And I think if the mobile revenue ramp up happens, then naturally the margins will not remain at 4, but will come in for a squeeze because that's the low margin business. But maybe they are doing it with a reason because they want to grow the top line. So therefore, it's a part of the strategy, I reckon.
That's actually something that we look forward to hearing from them, because that strategy has already started working in terms of the impact on the margin side of it, and the top line has ramped up. Indus Tower is the other one, because what a high momentum stock. I mean, it's ever since Vodafone has sort of come back in action, Indus has piggy-banked on it. So the numbers were pretty decent. Revenue up to 2.6%, EBITDA has grown close to 11%. Margins have also increased from 57% to 61.6%. Net profits are also up. This is the first buyback that they've done in about 2 years. So while revenue was below estimates slightly, margins and profits were above. So that's going to be one to watch out. They've also seen a reversal of provision for Vodafone's past dues. So that has to be baked into the numbers at some point. And remember, Indus has now recovered about 1,300 crores of past dues. There's still 4,600 crores to go for Indus Towers. It's their first actually payout also in the last 2 years. Citi is quite bullish. They have a target price of 500 rupees on the stock. And they say that the EBITDA rise is definitely a beat. So Indus is one that you might see a positive view on. Waaree, again, very nice numbers from Waaree coming in. Revenues up 83%. EBITDA is 41 crores versus 13 crores. I mean, businesses in this space are generally on an uptick because of the push for renewables, etc. And Waaree is well placed to make the most of it. EBITDA margins have jumped quite significantly from 10.4 to 17%, and net profit is also up from 9 crores to 28 crores year on year. So good numbers for Waaree. Their unexecuted order book is 2191 megawatts and will be executed in the next 9 to 12 months. So at least these first 3 stocks I think could see a pretty good day. I'm not so sure about how Dixon will be seen, but the numbers are definitely good.
Yeah, seems solid. Let's see. Just that it's an expensive stock. But I want to dwell on GAIL for a moment because the numbers just look so strong. So revenues up 6% at 34,738 crores. The estimates were 32,892. So marginally higher on the revenue front on that base as well, GAIL. But the margin number looked very solid, 13.8% versus 8.1%. And as a result of which the bottom line numbers at 3,183 crores, a 77% uptake relative to estimates of 2,148 crores. And remember, while the volume data is awaited from GAIL, the con call is at 11 a.m. today. I'm guessing a lot of people will log into the call, and which is why we don't have too many brokerage notes out there. But the gas transmission and the gas trading EBIT, both were up over 45%. So very strong performance from GAIL optically. Very likely that it will react to these numbers itself. And then on the basis of the con call commentary, you might well see some more moves there. So that is something you want to watch out for in the session today. The other one is a surprise move, but Johnson Controls Hitachi. This one came into flavor when this global parent sale happened, and therefore there's this belief that Johnson Controls will see a change of parent and maybe an open offer, what have you. But be that as it may, look at the individual numbers of the India unit. Revenues up 75.6% at 996 versus 567. An EBITDA of 57 crores versus a loss. A PAT of 36 crores versus a loss of 41 crores. So suffice to say that this stock could have a bit of a reaction. And much as I thought that it's not as liquid a name, it didn't used to be. But I think the recent volumes have been large. So maybe you see a bit of trading activity on this one. So that's the second one you want to watch out for. And a new list or recent listing, if you will, Zaggle Prepaid. Very strong numbers there. Revenues up 252 versus 118. Margins expanded. And on that base, for margins to move up 230 basis points from 6.7 to 8.9. And then therefore a PAT number of 17 versus 2 crores. Small stock, but could see a bit of an uptick in the session today, so do watch out for this one as well.
And also a very, very expensive stock at that.
I
think that's the other one on Zaggle Prepaid. But I think we've talked to the management a bunch of times. This kind of interesting stuff they seem to be doing across the board. One is tough to understand, but second, I definitely think there's enough and more there. Couple of more smaller ones, I don't know if you want to mention if you've got time, but Titagarh reported numbers. They were okay. They reported an 8.5% increase in profitability at 67 crores for the first quarter. In the same quarter, they reported 62 crores last year. Revenues have dipped. Margins have remained largely okay for Titagarh. So not a great quarter in that sense for them. Star Health, on the other hand, managed to post good numbers. Total income was up 15.7%. Net profit also was higher. And one more from the wealth space is 361 WAM. I mean, fantastic. I don't even know whether what justifies these kind of run-ups that we've seen on 360 WAM, but very, very strong quarter for them as well. Total revenue is up 60%. Net profit is up 34%. So that's the kind of quarter it's been. Remember, 361 WAM is also a product-focused business. So lots happening on that front either.
Oh, I think all I'll mention, and then we'll get into that conversation as well, is what the immediate impact would be on Sebi's proposals. And one will definitely be on the BSE stock. And this is what Jefferies is also saying. They're saying that removal of BankX weekly contract could impact the EPS of BSE by 7 to 9% over FY25 and FY27. So that's one stock which could get hit. They're saying clearing members like Nuvama could be less impacted, but may see second order impact. And exchanges and retail focused brokerages are going to be most affected. So that entire space, which has completely been buzzing on the back of the Indian investor getting a taste of F&O, could see that kind of a reversal today. And that's, I think, one pocket we should look at. But on the question of decreasing trading volumes, NSE MD and CEO Ashish Chauhan said that NSE will do as Sebi asks. His comments, of course, came right before the consultation paper was put out. Listen in.
We are a regulator first. And the second is whatever regulator tells us we have to do. So put together, whatever they say, we will accept.
But NSE is also a profit making.
Only as a byproduct. Profit is not the motive of running any exchange or any MII.
Okay, Amit Khurana, who looks at all of these pockets very, very closely, head of equities at Dolat Capital, joins in to tell us what he thinks could the big picture potential impact be of a move or a proposal like this. Amit, not a move, a proposal. Neeraj here, good morning. Thanks for joining in. A proposal as yet, but you guys are big on the derivative space as well. What do you think is the potential impact if most, if not all, of these proposals get accepted and put into practice?
Yeah, hi. Thanks, Neeraj. I think there are two broader sort of philosophy points that one can put in. One, they are essentially targeting the weeklies and they are targeting the option segment. The second important part is essentially this is the starting point, which I believe is moving from sachetization of options market, the F&O market, towards institutionalizing it, wherein the regulator essentially has a philosophy, and rightly so, that the retail investors having a limited understanding of the options market and the risks that they are taking are being too exposed, and especially the post-COVID period when it went through a significant boom led by technology infrastructure, enablers from the intermediaries like brokers, and whole lot of other social media, which led to a significant increase in the activity. I think it's about time that it is managed well and the risks are highlighted. The impact will obviously be that the weekly product will have a significant dent, and brokerages which are exposed to the retail side of the businesses will take a significant amount of impact on that. Obviously, exchanges will also have a lower fee, lower revenue, and so will the STT get impacted from the government perspective. So all in all, I think the objective here is less from the revenue side of it, but more from the risk management and managing the systemic level issues, which can essentially risk the entire system at any point of time. So might as well control it when things can be understood better, rather than being as a reactive regulator.
Now, Amit, you guys have a significant exposure to the foreign insti trader using derivatives, presumably at your end too. How high was this volume on these multiple weekly segments available, and could it deter or could it be a dampener for an institutional participant as well if the number of weeklies are cut down?
Well, difficult to decipher as to how much will it impact, because most of the insti was more monthly rather than weekly. Weekly was more a sachetized product for the retail segment because the capital outlay was relatively lower. Most of the insti and especially the FPI books or even the domestic R books move more on the monthly side. Liquidity impact, it's difficult to decipher right now, because eventually as one leg gets impacted, there will be some impact, but whether it will lead to a significant increase in the spreads, I don't think so. They will eventually get normalized, but we have to see how it evolves.
Amit, hi, it's also Samina joining in. Help us break down a few more things, right? Let's start with the calendar spread. Now, what the regulator is trying to do is remove that arbitrage opportunity that was happening on expiry day. Do you feel this could have a significant impact in reducing volatility on those expiry days? Because you can still buy an option and sell an option, just not on the day, right? So how do you think this is going to impact a retail investor?
Precisely, and that essentially is aimed at increasing the capital outlay that any investor puts on the table, and a higher capital outlay will become a natural deterrent to those kind of activities. Earlier, it was much easier to do, and you do not have to put in very high level of margin. I understand these are two measures. One, it is not being allowed on the same day, and second, the margin outlays will also go up dramatically. And along with that, you will also have the higher lot sizes. So we are seeing measures being done on every front to make sure that there are enough deterrents. And only the sophisticated investors or investors who have a very significant level of capacity to understand the risks and absorb likely losses which may turn out from such trades are only participating in this market. So as I said earlier, the sachetization phase of the Indian option market is essentially getting over, and we are moving towards the more institutionalized, the sophisticated kind of investors who will possibly be able to make trades here.
Well, sure, this is of course a good the intent is very clearly there. Now, we can talk about, of course, what they've done in terms of increasing the margin, the notional value, but in principle, this is a recommendation. This is going to come with opposition from the exchanges and the brokerages. Do you feel like some of these or most of these recommendations will become regulatory in the next couple of months in terms of timelines? What are you anticipating, and how well will this be taken up by brokerages and exchanges?
Well, one of the lessons we've always learned being part of the market is you never fight with the regulator, and for the right reason. Okay. And I must also mention that we do not have any vested interest because we are not a retail brokerage house. We are an insti house. So from our perspective, it really does not impact our business, except that the liquidity impact will be there, and according to the volumes will adjust. But having said that, I think there will be a fair amount of discussion, and I think the regulator has been pretty constructive about the feedback that has been given by the stakeholders, including brokers and exchanges. But let us look at the big picture, which is that the market is taking too much of a risk. Some of the retail investors are taking too much of a risk, and we keep hearing those stories and versions on social media and amongst our peer group that everybody seems to be trading in the market. I don't think that's a very healthy trend. We need an investing sort of a mindset amongst the populace. We need an investing sort of a mindset amongst the younger population. And therefore, the habits have to be changed accordingly through a nudge. I don't think this is beyond a nudge. It may look like a slap, but I think this is how the system needs to be managed proactively rather than reactively. So there will be a fair amount of discussions around this, and I think somewhere a middle path will be found. And ultimately, we have to accept that these regulations are going to come in.
I'm just wondering, Amit, good morning. What is the middle path between a nudge and a slap? Since those are the two ways that you described it. But just from your sense, and you talked about how the more evolved investor will be now left behind in this space, the sachet kind of investment will move on. What is the impact on volumes that you see? So, for example, if Sebi is saying that there were 92 lakh unique investors in 23-24, do you see that dipping significantly?
Well, that's something that we'll have to see. How much of that was doing pure, options trading, and there could be some number out of it. We'll have to see that. I don't want to speculate on that part right now. Let the regulations evolve. Let the education programs take care of so many other issues. And if that number has to dip short term, I don't think one should be too bothered about it, because ultimately it's a system which we got to manage in a very, very risk-averse manner. Make sure that the longer-term trajectory of the investor growth, the returns that they make, is far more stable rather than just trying to make one-off here and there and losing 80%, 90% of the cases. Overall, I feel that there will be some realignments which will happen. The sophisticated investors who are serviced by the professional managers will probably.
Yes. Okay, I think we need to get that feed back up. We've lost that feed from Amit Khurana. But good perspective there, folks. And, one clarity that seems to be coming in is that this is something that needs to be accepted. It's going to be something that you have to live with. And in fact, while we try and get Amit up, let's just listen in quickly to what Sebi chairperson Madhuri Puri Butch also said. She gave the rationale of the market regulator in introducing curbs on F&O.
If there is 50,000, 60,000 crores of losses by individual households in the F&O segment, What would you say to that? If 50-60,000 crores in a year is going away from household saving into losses in F&O segment, whereas that could have been productively deployed as a part of maybe the next IPO round, maybe the mutual funds, maybe more productive uses for the economy. Why would you say that that's not a macro issue? At 50-60,000 crores, that's pretty macro according to me. This is not about some 200-600 crores.
50-60,000 crore rupees of household savings going into F&O trading, and that's really the concerns being put out. Amit Khurana back with us. Mr. Khurana, just one question from my end. What is the immediate kind of impact you see on market sentiment, considering that these are guidelines, or these are, proposals right now? Do you see any specific bucket of stocks perhaps being hit in the capital market space or exchanges?
Obviously, the guys who have an exposure to this kind of revenue stream will take the first knock. And I think the overall this expectation was very much there for the last so many months. So I think the market will eventually take that into stride, and especially
struggling with Amit's feed, but we'll try and connect back. But I think another interesting point which we should try and discuss with Amit, but is whether this would increase speculation in the cash market. So I guess if a trader needs to make money and wants to make money, if that is the intent, for all you know, there could be some migration to speculation in the cash market as well, right? I mean, there's always ways and means around it.
It would cost you more, right?
Well, you're anyway increasing notional margin numbers any which way.
Yeah, so maybe the derivative volumes are happening because they didn't have to pay so much, but now if they have to pay so much,
then you'd rather do it in a cash market
or not do it.
You're hopeful.
But the difference between even an increased margin versus cash market would be a lot.
It really depends on what stock. But these are index. These are index trades, right?
So it'll be might run up.
What might happen is that because there is so much of clampdown on index, the stock futures segment might see a bit of a fillip,
might move
because
to specific counters.
It's been so heavily concentrated on the index side. This, to my mind, actually, this is a lot milder than what the street was fearing, because the street was fearing clamps across the bucket. It's coming in index. It's not coming in stock futures as yet. Maybe it will.
But index is a much deeper market.
Completely agree.
Than
but if stocks also had come in,
then
that might have been a problem.
How do you define which stocks and what stocks? But yeah, I guess that could be the next step. Who knows and who's to tell?
But what else could have happened? Because the key things are there. Your number of expiries per week are going down.
No, but the margin increase or the lot size increase that you're doing on the index, if you do it on stocks as well, that's a dampener for people who do single stock futures.
Maybe this is phase one.
Yeah, maybe it is. I'm sure the street will
there is going to be
a
little bit of a pushback from the exchanges, I'm pretty certain, and brokerages, but like Amit said, you can't defy the regulator. We'll take a break, we'll come back as always.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
We also need to be prepared.
Headlines you start your day with. What matters worldwide is now in the palm.
Welcome back. This is India Market Open. We are looking at the futures and options space and how things are shaping up, given the Nifty once again has had yet another day where it nearly was 25,000, but we really didn't see that come through. As far as the futures go, again, it was a day of trade where the Nifty closed flat. We didn't see too much change in the open interest either. The Bank Nifty also did advance marginally, but again, not too much traction there. In fact, further unwinding as far as positioning is concerned here. Now we move on and talk about the options market. Today's the weekly Bank Nifty options expiry, but we'll talk about that in just a bit. As far as the Nifty is concerned, yesterday was a day where a lot of these traders took advantage of the fact that you had a sudden decline on an intraday basis, which is why we saw a lot more writing around the 25,000 call and, well, the 25,200 call as well. On the lower end, we continue to see more traction as far as the 24,500 and 24,600 puts are concerned. We move on and talk about, the Bank Nifty. Today is the weekly Bank Nifty options expiry. Again, the midpoint here at this point in time does seem like 51,500, but there could potentially be an attempt to move towards the mark of 52,000 as well. In terms of stocks, yesterday was a day of trade where we did see a lot more buying coming through. So India Mart, GNFC, Godrej Properties, Jindal Fertilizers, all of them looking at longs coming in. And besides that, we're also looking at short covering for something like Colgate Palmolive, Naveen Fluorine, SBI Cards, among many others. So all in all, a good day of trade. It was a flat day of trade, but let's see what our experts are doing in such markets. We have Akshay P. Bhagwat of GM Financial, who's joining us on the show right now. Akshay, very quickly, your view on the benchmarks at the moment. How are you looking at trade here?
Good morning, Agam. So yes, last couple of days has seen muted action, both in terms of the FII action in the index future segment, as well as the price action. So 25,000 is some sort of a short-term resistance or an intraday resistance, considering the fact that a lot of call writing bets are positioned at the level of 25,000, which is a psychological level. Also, in wake of the FOMC event due later, there is some muted action because traders want to stay a bit light ahead of the event. That's what the open interest data is suggesting. Roughly 24,750, that's an important level one needs to keep on basis spot Nifty. Till this level holds, the view is positive. Index should be choppy, but continue to trade in a range. 24,750 on the lower end and 25,000 on the upper end is the range which I'm anticipating for today or tomorrow. But overall, the trend is still positive. There may be a re-attempt of breaking past the 25,000 mark. And if it does, be ready for levels of 25,200.
Right. Akshay, so let's talk about Bajaj Finserv then. How are you looking at trade here?
Yes. So I have a positive view on Bajaj Finserv. In the last couple of trading sessions, there has been positive long additions in the stock in the derivative space. Price structure is also strong and heading for a possible breakout above the levels of 1650. My target projections are for around 1700 for the month of August, for which I'm recommending a bull call spread for the 29th August expiry, buying a 1640 call approximately at an option premium of 47, and simultaneously you sell a deep OTM call of 1700 strike at a premium of 23. This would lock in a profit of around approximately 9,500, and on this trade you can work with a stop loss of around 6,200.
Okay, so that's a spread as far as Bajaj Finserv is concerned, positive one. But what about Vedanta, Akshay? How are you playing this one?
Yes, so the metal packs have seen some good positive positioning in the last couple of trading sessions, and out of the entire space, Vedanta is my top bet. If you look at the price structure last 1.5 to 2 months, it's been in a range with time and again bounce backs being seen from the level of 430 odd zone till the 480 zone. So I'm expecting a target of 480 to 490 very soon in Vedanta, for which I recommend an option vanilla buy call for the 29th August expiry. 470 strike is the strike I would recommend to go long on. And the target for this would be 11. That's the first target. 15, that's the second target. And you can keep a stop loss of 3 on the option premium on this trade.
All right, Akshay, we'll leave it at that. Thank you so much for joining us and giving us those handful of ideas to work around with. Of course, Bajaj Finserv and Vedanta is what we are keeping an eye on from Akshay's standpoint. With that, it's back to you.
All right, thank you for that. Kush Bora, founder of kushbora.com, joins us. Kush, very good morning to you. Now, before I come to you on the charts, etc., just wanted to know if you had a view, if any, on these Sebi guidelines on F&O volumes.
Hi, Tamanna. First of all, very good morning to you. A rather strong one, actually. I have a very strong view on, the guidelines that came about. And I'm extremely happy to see, that some of these measures are in fact the ones that will deter, retail participation. Maybe as I was listening to you, Samina, Neeraj talk about it a while back. Maybe there will be some pushback, not only from the broker and the exchanges, broker community and the exchanges, but also if you see the social media feeds, that not everyone's entirely happy about it. But I think that's okay because that's still a small section. If you listen to the macro numbers that the Sebi chairperson put out, the kind of losses that everyone's making as a whole is quite a lot, and I think it's a good way of systematically deterring retail participation from FNO. So I am actually quite happy to see the kind of measures that have come about.
So that's an interesting view and a strong view that you're happy that it will become a little saner. And I think, there's two views to it. One is that, of course, that how much of interference there should be from regulators, and then, of course, how much regulation is needed. With that, let's come to the business of the day, Kush. Let's start with how you're looking at the indices.
Well, the view continues, and the indices have been telling us the same story for the last couple of days, which is, we've been moving higher but not sustaining. Now, on the Nifty, we all know 25,000 is proving to be that, glass ceiling that it's not touched, forget even breaking, missed it only by a whisker 2 days ago. But I think that view remains. If 25,000 is indeed taken out, then I think there'll be this further short covering rally that might come about and take it higher another 150, maybe 200 points. But I'll wait for that to happen rather than anticipate it and go any kind of, create any kind of long positions. So I will wait. For me, any kind of a pullback, let's say towards 24,700, 750, perhaps might be a more meaningful level to create short long positions. There my risk reward ratio is favorable. So at the moment, Nifty, no long positions recommended, but if you have them, given the kind of momentum we've seen, you can continue to hold your long positions. Bank Nifty, again, a very similar story, 52,000, 52,200 as the broad range has not been taken out. So until that happens, the near-term pressure on Bank Nifty will continue. And in fact, this is a very good shorting candidate. Now, today being the monthly expiry, there could be volatility. We could see an attempt, at that level, perhaps even breaching that for a while, like we've seen in the past, 2 days ago. But until we close above 52,000, perhaps 52,200, the near-term bearish view on the Bank Nifty will continue.
Kush, in terms of stock ideas this morning, what is on your buy list and if you have any on your sell list?
So, Samina, it's just, I think, incidental that, the Sebi has come out with these proposals, and both of my picks are from the cash segment, as I said, purely incidental. One of them is KFin Technologies. We've seen a very smart rebound from lower levels. There was a resistance around that 800, 815 mark. That's been taken out on a closing basis. So that's a healthy sign. 850, 880 are the targets to look for. 790 is the support zone where you place your stop loss. HFCL, this stock in the last couple of sessions has had a very good run. Here the resistance was around 130, 132. We've had a closing above this, and the volumes have been increasing day on day for the last 3 to 4 sessions. So HFCL is also on the radar for targets of 141 and 146. 130 is where you place your stop loss.
Right. We also have with us Mayuresh Joshi, Head Research of Market Smith India, joining in. Hi, good morning, Mayuresh. Thanks for joining in. Well, I know you are a fundamental analyst for the markets, but why don't you tell us what you made of SEBI's recommendations to curb and protect retail speculative trading that's been taking place in the country?
Morning, Samina. No, so I think as a market participant, you should be cognizant of what is happening around us. But two things happening here. When I speak to a lot of my colleagues at other broking outfits as well, this was expected to come through. So to that extent, the market will take it in its stride because there were measures that SEBI was indicating to a large extent. And this is probably something which is now put on record. Obviously, I think the excessive speculation that is happening, when I meet normal people in normal course of interactions, I think the kind of enthusiasm or the drive that a lot of these individuals have, specifically towards the F&O segment, without any basic understanding, I think that really is very, very scary. And therefore, I think the statistics that SEBI has put out in terms of the loss that a lot of these F&O traders are making is primarily based on this facet as a primary factor, considering other secondary factors. So I think largely the street was expecting something to come about. A lot of broking outfits were expecting something to come about. So in my opinion, I think the market will take it with strength.
Okay. Some stocks which we should discuss. So before we get into today's movers, Mayuresh, what surprised me yesterday was the move on Varun Beverages after the numbers that came out. Sure, there were flows and there was some funds which were selling. So maybe that yesterday was the day like that. But for the result that it delivered, the treatment meted out wasn't quite commensurate. Would you be a buyer in Varun Beverages post these numbers and the fall that we saw yesterday?
Morning, Neeraj. But one must really see the kind of move that Varun Beverages has given, Neeraj, over the last 2 years. So I think it's been one of the stellar movers when it comes to the consumption space as a whole. As a clear disclaimer, a few weeks back, we did book significant amount of profits out of this one. We had entered at significant lower levels. To the extent of the results itself, Neeraj, you're absolutely right. I think the results were very, very good. There are no two ways about it. The expectations in terms of their India, Sri Lanka, Nepal business expected to continue doing well from a volume perspective, both in terms of the carbonated portfolio that they have and the non-carbonated portfolio, which is also expected to show increase in terms of contribution to the overall volumes and top line as well, will be evident by numbers in the next few quarters. The Africa business will start picking up as well. There is expectations of more value-added products expected to come through. The energy business through Sting, the energy drink business through Sting is also expected to pick up steam, as well as the water business, which is expected to be very, very stable. So to that extent, I think gross margins, the EBITDA margin performance, and the expectations there of stability of both these numbers can very well continue. However, I think it's a late stage base even now after the correction. And therefore, I think our take a few weeks back when we booked a significant amount was on two counts. One, I think the valuation comfort is not there. It is penciling in a large part of the earnings move that can happen over the next 1 year. And the second element obviously is from a price action perspective, as we see it at Markets with India, a late stage base always can succumb to some element of profit booking, which we saw yesterday. So decent set of numbers, but I think these two elements is something which, at least at our end, is causing a little bit of discomfort at this juncture. And we'd made sufficient amount of money, very frankly, Neeraj, on this count.
Right. Kush, a couple of other stocks worth mentioning. Everything in the auto pack yesterday has had a dream run. Anything in the auto stocks that still could be a constructive long trade?
Kush, Tata Motors, Tata Motors is, it's at the moment, I would say, a done deal because of the kind of run-up that it's seen in the last 4 or 5 sessions. So, no new fresh positions unless someone wants to play for the 1200, kind of a level, which it could very well, hit in the coming sessions. But as I said, the bulk of the gains are perhaps made, at least in the near term. What's interesting is Mahindra and Mahindra. The stock's seen, a bit of a knock, but then has had a gradual rebound. It's almost forming what we call the ascending triangle formation, which suggests that once it has this move above 29, 40, 29, 50 kind of zones, and then closes above that, then the momentum could pick up, the stock could run higher. So I think Mahindra and Mahindra, after this gradual and steady up move over the last 8-10 odd sessions, perhaps could see momentum pick up. So that's the one that I have on my radar. Maruti also an interesting setup, but every time it goes to that 13,000, 13,200 mark, sees a bit of a sell-off. So I'll just wait and watch, if this 13,000 level is indeed taken out in a more meaningful way. So Maruti is a wait and watch. Mahindra and Mahindra is a position that you can consider going long on.
Okay, so those are some of the auto counters that Kush has on its radar, and I want to come to Mayuresh also on his view of what he thinks about autos. But before that, let me go across to Mahima, because you have now some views coming out on the earnings per share estimates of few companies following Q1 results. So we're not quite done with the whole Q1 cycle yet, Mahima, but I think enough data out there to have a view on what Q1 is look like.
Right, Tamana. So just to give you a context, around 19 Sensex companies, 24 Nifty companies, and around 664 mid-cap and small-cap companies have come out with the results thus far. And two interesting brokerage notes which have come out with a review in fact of how the earnings have panned out so far. Well, Citi says that Q1 for 48 out of 100 BSE 100 companies are largely in line with the estimates that they had, except for the OMCs. What they're saying is that EBITDA and PAT growth are at 7% YOY, and what they're also saying is that industrials have delivered earning beats, and energy is something where there are key misses. And lastly, what they're saying is that June 25 Nifty target is at 24,400 and it's trading at a multiple of 19 times. They've also given some key underweight and key overweights. Key underweight are PS utilities, defense, industrials, and banking and insurance. And the key overweights are consumer discretionary, IT services, and metals. They've also revised their EPS estimates for certain companies. Major upgrade is for Interglobe at 17%, followed by PNB again at 17%. These are the revisions that they've cut down. JSW by 37%, BPCL by 14%, Ultratech by 8%, and so on. We also have a very interesting MS note. They've also come out with a review for earnings that have come so far. They're saying that marginal beat on the top line for most of the companies under their purview, of course, and they're saying that margins have expanded for 3 out of 8 of the sectors that have reported the numbers so far. And industrials, gas utilities, consumer discretionaries, and tech is something where they've seen earnings beat. And they're saying that technology is something where they're seeing that there's some kind of miss as per their expectations. Lastly, again, even they have revised earnings EPS for certain companies. Ashok Leyland, Coforge, Interglobe, all in positive, 7 and 5% respectively. And some companies where they've cut their EPS estimates is IDFC First. They've cut their estimates by 21%, Signed by 15.5%, and SBI Cards by 11.7%. So this is the overall view of what brokerages are saying about the earnings that have come so far.
Okay, so most seem in line, but not runaway earnings in Q1, one would say. Of course, we'll have to wait for all the numbers to come in for the complete picture. Thank you so much for that, Mahima. Chandan Taparia joins in now. He's head technical and derivatives research at MOFSL. Very good morning, Chandan. I'm not sure if you want to comment on the Sebi, proposals, but I'm very keen to know what you would think. And then, of course, yes, how do you see the indices this morning?
Yeah, I'm okay to comment. Yesterday, I was in person, met Sebi chairperson, and understood all the investment which they want to do for the welfare and for betterment of the retail public. So what I noticed that she was worried, or regulator is worried that more than 50,000, 60,000 crore of household income is being deployed or lost due to the options trading. So they came out with some 6 to 7 measures. And if I just explain them, the important part is that now one exchange, one weekly expiry will be there. So NSE has to decide whether they will go with Nifty weekly or Bank Nifty weekly, and BSE has to select whether Sensex or BankX. So good part is that we are in the world of every day is expiry day. That will reduce to only particular 2 days on the weekly expiry. Second part is that now the FNO lot value will increase. So as of now, the Nifty lot size is 25. And if I look at the price of the Nifty at 25,000, the lot value goes to 6,25,000. And they are looking to increase by 4 or 5 times. So accordingly, the lot size will increase from 25 to 100. So because of that, your initial margin will require more. So negative for the people who are trading in the future. Again, the writers will get the hurt, but I don't think that will somehow significantly affect the option buyer, because option buyer will take the 100 quantity, or to reduce the risk, they can go with out of the money strikes. And then important part was the reducing the margin benefit for the calendar spread. Those who are selling and buying in the current weekly expiry and then doing buying and selling opposite of the next weekly expiry. So that kind of benefit will reduce. So ultimately aim is how the regulator can demotivate the retail participations, which is growing rapidly in the Indian market. If you look at the comparative analysis, as of now, the 1 lakh crore ADTO, average daily turnover, is there in the Indian equity cash market. But in F&O, it's more than 400 times. So it's growing rapidly, and regulator has to do the right thing so that retail public don't lose significantly. So ultimately, they are trying their measure. It might demotivate participations, but I don't think these measures are sufficient. I think they need to look more on the such criteria. But yes, this is the buzzword, and I think somehow most of the brokers and traders need to redesign their strategy to participate in the derivatives market.
Right. Gentlemen, stay with us. We'll take a break. We'll come back, continue talking to our analysts about the day ahead. And
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you
Welcome back. You're watching India Market Open. Less than a minute left for the pre-open session to begin. Chandan, let's quickly get your top picks of the day.
Yeah, so like I'll focus on the oil marketing company. We have seen breakout and momentum in most of the oil marketing company. We have seen the build-up of long positions with surge in the volume, which also indicates that this momentum could continue. We have seen good run-up in HPCL, BPCL and IOC here. I'll suggest to go long in IOC, which has given a consolidation breakout on the weekly chart. And this consolidation breakout is happening after the long 23 weeks and expecting some short covering trigger as well in the counter. So recommending to buy on IOC, that is Indian Oil Corporation, with a stop loss of 180. And here we have a target towards 192. One more trading idea, I'll focus on selective chemical names, which were earlier underperforming. And what I noticed in last 3-4 days, most of the chemical counter, including SRF, Aarti Industry, Atul and all, started to witness some buying interest. So I believe some margin of safety and renowned or support-based buying could be there. So one can buy SRF given the price breakout and build up of long position with support of 2490, and here we are target was 2680. One more trading idea I want to explain. There is a known FNO, buy on KNR Construction, which has given a breakout from its pole and flake pattern on the weekly chart. We have seen a surge in the delivery volume with decisive close above 400. So one can buy with support of 398. And here we have a target was 425 to 430 zone.
So meanwhile, pre-open session we'll wait for it to settle. I mean, Nifty is obviously going to settle in there, has opened above 25,000. in the pre-open session. We'll see where it goes. And once again, I mean, that's the kind of number that puts a smile on your face, but was expected. So doesn't really move the needle. Nevertheless, the Nifty's had a good start. Mayuresh, let me just get a quick view from you on, where you're seeing pockets of value right now. I mean, let me come to PSEs. Public sector companies have been out of favor for a bit, really recovered in the last couple of sessions. Are you seeing more momentum there? Is it something that you want to look at right now?
Morning, Tamanna. So I think within this space, obviously defense, power counters are back in flavor. But to our understanding and how we see it on charts at Markets with India, PSU banks still remain in a comfort zone, both from a valuation perspective and expectations of an earnings recovery as well. So to that extent, I think a lot of these mid-cap PSU banks have delivered a decent set of numbers. The expectation and the larger picture now, Tamanna, is how deposit mobilization trends will take place over the next few weeks, the next few months. The overall picture in terms of advances growth looks decent. The expectations in terms of the provisioning on their balance sheet, the asset quality looks decent so far as well. And therefore, I think the kind of recovery numbers that the banks are talking about and expectations of strong mobilization, I think the mobilization drive has started in real earnest for a lot of these PSU banks. And they have been told to focus on the core banking business itself, which itself is a very, very good sign. So to our understanding, selected PSU banks within the mid-cap space should do.
Okay. Bring up Naveen Fluorine. I wonder if the first 2 minutes of the pre-open are already showing the expected downtick on those numbers. Just about a couple of percentage points for now. Let's see if there is more in store. But suffice to say, a bit of a disappointing quarter, if you will. Brokerages have been downgrading the stock, but certainly a bit of a disappointment there. Chandan, good morning. Any thoughts here on Naveen Fluorine? And if not on Naveen, then on some of the other spec chem stocks, all of which have had a very strong run up in the recent past few days.
Yeah, so if I talk about the Naveen, so major trend is turning slightly to positive to range bound, and already I discussed about the SRF in the same segment. If you look at the Naveen fluoride, it has recently taken support at its 50-day exponential moving average. Earlier, 3,500 used to be a hurdle, and recently it has worked as a support zone. So I believe with higher base, if it declines towards 3,700 to 3,650 zone, one can accumulate for an upside move towards 3,950 to 4,000 zone. And in this space, I'll focus on the SRF, which has given a consolidation breakout, doing well from last 4 days. So one can buy with support of 2,490 for an upside target towards 2,680 zone.
And then a couple of other stocks that reported solid earnings, and we'll of course go to Mayuresh as well for a fundamental view on that. Torrent Power, fantastic earnings. GAIL, very strong earnings. Macrotech also has done quite well. I know they're not, in the same breath, but what do you make of these three? Anything that you would go constructive on this morning?
So I'll pick two names, Torrent Power and GAIL. If I start with GAIL, that is Gas Authority, it has been making high tops, high bottom. And I noticed that from last almost 88, 90 days, it has been holding well above its 50-day exponential moving average. However, the beta is lower, so momentum is comparatively less. But the trend is positive, and we have noticed that every small decline is being bought in the counter. So as of now, till it holds above 225 zone, overall, the bullish bias could continue, and the stock has potential to rally towards 250 zone. Now, talking about Torrent Power, here we have seen some positive to range bound bias. Recently, it has taken support at 50-day mark and turned higher with level of 1450. However, we have multiple hurdle above 1620 zone, but a decisive hold above 1600 could open the upside. So with support of 1550, we can look for an upside move towards 1690 to 1710 in the Torrent Power.
Okay. Well, just before I go to Harsh, just want to bring up that Jeffrey's note on the brokerage Sebi proposals and the impact thereof, because some of the stocks are moving around. So remember, that note suggests that stocks like Nuvama might get limited impact but have a second order impact, but exchanges could well have a major impact. So Nuvama is flat, BSC, the stock should come up on your screen, Angel should come up, 5paisa should come up, Motilal Oswal should come up, and we might well see some bit of reactions on these stocks. Angel One is down 2.5%, 5paisa down 2%, BSE down 2% as well. So some of these stocks are certainly getting impacted. So do keep an eye out for them. All will not see a uniform impact. Some of the insti-focused brokerages might not even see an impact, maybe a sentimental one, but this is something you've got to watch out for. But speaking of brokerages, Harsh is here with a brokerage view on from Nomura, I believe, Harsh, on car trade, is it?
Well, yes, Neeraj, it's Nomura on car trade. What they've done is, while they've maintained their buy rating, they've hiked their target price substantially. Mind you, numbers, of course, is what car trade came out with, and very strong ones, that too. You're seeing substantially in terms of revenue, the numbers ahead of what estimates were looking at. 64% growth on the top line, 3% ahead of Nomura estimates. PAT 2 up 50% above Nomura estimates, coming in at 29 crore, and you've seen the net cash position as a result ballooning to 780 crore now. You're seeing good show across segments. PAT growth largely, or PAT beat largely led by the EBITDA beat that the consumer business has posted. Consumer standalone revenue was up 18% year over year, but margins at 19.8% versus the sub 11% which Nomura had expected in terms of that particular business. They've maintained their 20% CAGR with regard to the revenue growth over the next 3 years. That's Nomura, of course, FY 25, 26, 27, 20% CAGR is what they're penciling in on their top line. With regard to, though, the margins, they're expecting OLX to contribute substantially better margins than expected. So they've hiked the margins slightly on OLX. Asset-light model likely to aid margins going forward, plus operating efficiency starting to kick in. That will aid the numbers overall. 25% EBITDA CAGR expected, with a further scope for upside possibly. So they'll keep their eye out on that. The EPS adjustment as a result of this time's very strong earnings beat is 10% for FY26, 5% for 10% for FY25, 5% for FY26. And on the back of that, that major increase in target price from 982 to 1112.
Right. Thank you, Harsh, for that. That's a few brokerage calls coming in this morning. A quick check on how some of this earnings reaction is doing. RR Kabel, weak numbers, the stock should be trading lower. Tata Consumer, mixed bag. That stock 3% low on RR Kabel is what we have. Macro Tech, Tata Consumers, Gale, Torrent Power, Dixon, as some of the companies are reported. Mayuresh, with a whole bunch of earnings that were reported between closing and opening this morning, what stood out for you? Anything that you liked, that you saw, that you would consider strategically adding to your portfolio?
No, so I think Torrent Power gave a good set of numbers, and it's got a good mix in terms of both the LNG assets that it's got. One of the assets, DJN, which has a 1200 megawatt capacity, has still not got any tie-ups. So there is every hope that if there is a tie-up on this particular asset that they probably own, there can be even a substantial improvement in numbers that they keep on posting. And at some point of time, the tie-up should happen, looking at the energy scarcity that India is probably looking at. Dixon also, in my opinion, posted a decent set of numbers yesterday. And therefore, I think from earnings perspective, specifically over the past day or so, I think Torrent and Dixon probably stepped up.
Okay. Well, so in a 908, and by the way, the dreams of 25,000 seem to have just subsided
evaporated,
a little bit.
eviscerated completely. I'm looking for new words of this dream of 25,000.
Punctured by the wildfire of Vagar.
Okay, yeah, you're an HOTD fan as well. Okay, so yeah, so 25,000 perhaps distant dream today, but we have 5 minutes left for opening. Now the question is, how do you play this market? Very quick calls looking at the pre-open action from Kush and Chandan before we get in. Kush, you want to revise some of your top calls this morning or add anything there?
Yeah, I'll take the latter option. I'll add NLC India is a stock that we discussed, on the closing show as well yesterday. I think, it's giving a pretty steady opening of about 0.75% higher. I think you can hold on to this one, or maybe even make a fresh entry. 315, 325 are the targets, and on the downside, 285 is a good support zone. So the risk-reward ratio is quite favorable.
Chandan, what about you? Anything that you want to add, build on, or replace?
No, we all spoke about positive on the IOC, SRF, KNR construction, and I'll continue with the same. And talking about Nifty till it holds 24,600 zone, I'll continue to be with buy on decline stance and looking for a fresh lifetime high of 25,000, 25,250 next 1 or 2 days. So continue to be with bullish bias of the market, and yeah, as the market open, we need to go for stock specific action.
Okay, so 1 or 2 days for the 25,000 mark is what Chandan is saying. Just wanted a quick word on Adani Energy. I was wondering if you had any view there, Mayuresh. They're coming out with the QIP. We've seen quite a bit of action pre-open session, about nearly 3% up on the stock. Do you have a take?
So I think step in the right direction because they're chasing growth, and for chasing growth, they will need this capital raise to probably come through. They're also into smart meters. They're also into the mobility business at this juncture, and also probably getting into energy storage solutions as well. So I think it might be a complete package as things materialize over the next few quarters and years for Adani Energy. The only angle, Taman, again, for most counters within the space is valuations.
The thing about Adani Energy though, I mean, and supposedly very strong response to the QIP, is also that this is probably one stock from the pack which hasn't had a meaningful rally relative to some of the others. So could we see that happening? Doesn't mean that a stock which has not rallied has to rally, but just relative to the others, this one has been a bit more sedate. Kush Bora, and by the way, viewer, standard disclaimer, Adani Group owns Adani Energy and you're watching NDTV Profit, which is owned by the Adani Group as well. But Kush Bora, a question to you on Adani Energy. Showed spunk yesterday, up again in the session today. Is there a trade here?
There is, because there's been a long consolidation period, and now the stocks are starting to move higher on the back of good volumes. There was resistance around this 1,075, 1,100 mark or so, and about 1,075, 1,100. We've moved higher from there. I think on a positional basis, the targets here are 1,225, and once that is taken out, perhaps even a 1,300. So these are the levels, at least for the near term, that one can consider. Moved above resistances with good volumes. Keep your stop losses around the 1050, 1075 mark, which were the resistance zones, and now will start acting as a support zone. So yes, a long trade is warranted. 1,300 is the target.
That's Adani Energy for you. Remember, the company has launched a QIP with a floor price that is set at 1,027 per piece. SBI Cap, Jefferies and ICICI Securities are the lead book running managers, and also Cantor Fitzgerald has been appointed as an advisor in connection with this issue. But moving on from Adani Energy, Chandan, a few more that are going to be catching attention this morning could be auto stocks after yesterday's big move. Anything in the auto pack that you still like? I mean, Tata Motors 4% gains in the session, and also a bunch of brokerage upgrades on the oil and gas pack. So anything else between auto and energy that you like?
So in auto, we have seen good run up in Tata Motors. The entire chart re-rating was visible after the breakout above 1,050, 1,030 zone. And I believe this momentum could continue until it holds above 1130. Ongoing move can take the Tata Motors to us 1220 kind of level. I believe Maruti could be a fresh breakout zone. It has been struggling to surpass 13,000 marks from last almost 70-75 trading session. And decides to hold above 13,000 could open the 5 to 8% upside. So Maruti could be on radar with support of 12,650, and it can head towards 13,500 to 14,000 marks. Now talking about OMCs, we are positive on the IOC, HPCL, BPCL. We believe the breakout could continue to get the follow-up during the day.
Okay, so positive on all three OMCs, and remember they're in a bit of a surge because we saw that uptick in trade yesterday as well. Despite HPCL's rather sedate quarter, but strong moves yesterday as well. But here come the rates this morning. And are we closer to 25,000? Not by a country mile, really. Actually, not so much also. But it's a very flat start to the markets today. Banks flattish as well. Bring up mid caps and small caps very quickly and just see if that bout of outperformance continues. Yes, it does. 0.5% for the mid cap space. Reckon the small caps too could be having a good move. not as much, but about 0.25%. Bring up the heat map and show you what's moving on the large caps at least. So there is some bit of strength in metals today. Hindalco, Tata Steel, both of them, JSW Steel too in the green. So those three are doing okay. Adani Ports is in the green. There's strength in M&M ahead of the numbers. Adani Enterprises in the green as well. I think focus will now shift to Adani Enterprises and green as being the other two fundraising candidates, if you will, after the Adani Energy's success, presumably successful QIP. But a lot more green, very little red. What is in the red? Tata Consumer. A quarter exactly in line with estimates. Maybe that is the disappointment. Let's see, it may recover as well. Some bit of weakness in Axis Bank, but aside of that, nothing too much, just 0.25% for the others. So the day belongs presumably to metals and the auto names, because I see a Maruti, M&M, at least the two of them in the green ahead of the numbers, Tamanna.
Absolutely. So that is where the action is. Maruti really, showing some speed there in the last few seconds or so. Let's look at what the broader markets are doing today after, sort of middling away for most of the week. And you see that continue. Mid-cap 150 mildly in the green. Nothing too exciting happening there. Likewise for the small cap, but they are in the green. So the focus, like we're seeing on the Nifty side also, is on results upcoming and gone by. And it continues in that vein in the broader markets as well. So just let's look at how some of those companies are performing that had results come in overnight post-market close yesterday. So RR Kabel, Titagarh, Navin Fluorine. I'll start with I would say the ones which were not too positive, and all of them hurting. Titagarh Rail the most out of that pack. Remember, profits down, margins down on Titagarh Rail, a stock which has seen quite a momentous run up, and the pain point there showing 5% down on that. RR Kabel also very disappointing numbers, but stock 2.5% down. Likewise for Navin Fluorine. On the positive side of good numbers are Dixon and Gale, a couple of them that you could see. Maybe I would add a Zaggle to this as well. And Gale really responding well. Gale had a very strong set of numbers. Dixon saw a bit of a margin squeeze, but their mobile EMS segments have gone up massively. Revenues have gone up, beat on all sort of parameters. Zaggle also has had a strong set of Q1 numbers. That stock up about 3%. Now, what's happened with the Sebi proposal impact? We've been talking about this all morning and saying if there is kind of an impact, look at BSE. Look at BSE, the stock up 1% after opening. Your Angel One, 5 paisa, seeing a bit of hit. But I mean, there's a saying, the house always wins. So in this case, perhaps it is the Bombay Stock Exchange. Will there be a hit on volumes? Maybe not to that extent. Anyway, BSE definitely responding well this morning. Just Power Grid is another one that I want to pull up. They had a clarification yesterday after their run-up that the report on their 40,000 crore undersea connection deal in the Middle East is incorrect. I mean, that was something which had seen the stock price run up a fair bit for the first half of the week. That clarification has seen some of those gains cool off. So these are some of the, I think, key drivers from the pre-open session that we should keep an eye out, but a lot more action, one presumes, Meena.
Stock of the morning, Tamanna, has got to be Torrent Power. It was up 7% when I checked a few minutes ago. It's off the day's high point, but still eking out a very strong up move in trade, 6% on Torrent Power. Their profits have zoomed 88%. So on back of that, you're seeing a sharp response to Torrent Power. Mayuresh as well pointed out that he liked what he saw with Torrent this quarter. The stock looks good with a 6% uptick. Suvain Pharmaceutical is up 5.5%. Gale, you've already mentioned. Dixon is also doing well. It's off the day's high point, but still trading with a sharp up move. Suzlon continues to gain for the 5th straight day. Big gain there. Post its earnings last week, the stock has been on a one-way trajectory. 2.5% on Suzlon is what we have. Walchand Nagar is doing well. Upper circuit on the stock, it's up 5%. HCC is also having a positive morning, up 2.5% as we see it. Macrotech Developers posted a solid quarter. The stock is getting a thumbs up, 2.5% higher is what we have. Suvain Pharma also looking good. That was the other counter that's looking well in early hours of trade. Adani Energy Solutions on its QIP news is trading with a gain of 1.5%. IEX is up 2.5% as well. 361 WAM reported numbers that were a clear beat on street expectations. The stock, despite all the news around the industry, is trading with a gain of 3.5% in early trade. So good going for all those counters that I've just mentioned. You've also got Granules that are up 5%. So we'll talk to the management to get better perspective there. Colgate-Palmolive reported solid earnings yesterday. The stock had it pleasant. This morning too, no different. Continues to see an up move of 1.5%. Castrol India reported numbers. A quick check on how it's doing. You also had Aegis Logistics posted that Castrol is down 2.5%. Numbers were okay, to say the least. PTC Industries is down 6.5% as we see it. You've also got Aegis Logistics, weak numbers. The counter gets a thumbs down, 3.5% lower is what we have. Waaree Renewable and Star Health were the other two counters that reported earnings. Star Health had a good quarter. Let's see if the market is giving that a thumbs up. The Waaree is down 5%, so having it quite rough post its earnings reporting, and Star Health, despite good earnings, trades about 1.5% lower. A quick other one, Johnson's controlled Hitachi. Neeraj had pointed this out too in the morning. Came in as a big surprise. Strong earnings, but stock's down 2%. This is interesting. The market seems to be rewarding what it believes it likes, and of course not rewarding what it doesn't like. Tata Consumers as well, case in point. Good earnings, market gives it a thumbs up, and a whole bunch of the other ones where the street doesn't seem too pleased as we see it. But all in all, the few that are doing well are doing very, very well. Suvain is up 9.5% and Torrent is up 6% this morning. Kush, have you spotted anything in early minutes of first sticks? Any intraday trade that you have for our viewers?
Sure. First a quick update on the morning call that we discussed. Dixon Tech, we discussed this one with the first target of 850 and the second target of 880. Strong opening and moving higher from there on. Very close to the first target. If someone's missed out on the trade early morning, then I think you could still get into this one for the second target of 880. Just that you have to bump up your stop loss to about 820 now. That's a quick update on the stock we discussed in the morning. One stock that's actually holding my attention for a couple of days now turned into a trade is Gland Pharma. This stock had a round of profit booking and then again steadily moved higher. Resistance around the 2075 mark, but comfortably taken that out as well and moving higher. So I think this is one trade that could set up nicely for the next coming sessions. Immediate targets are 2150 and then 2200, and on the downside you can place your stop loss close to 2020 levels. So Gland Pharma, something that you can still consider intraday, perhaps even for the next coming few sessions.
Chandan, I believe we're short of time with you, so two very quick questions, one from me and I guess one from Tamanna and Neeraj as well. Tata Consumer, numbers in line with street expectations. Do you anticipate an intraday recovery? Could that be an intraday call from your end?
Yeah, so I think let it correct. I don't believe that we should be in hurry because the stock has been making lower top, lower bottom from last 4-5 days. So I'll look for a downside move and let it get stability near 1145 to 1150.
Chandan, how do you see Suzlon? I mean, it's been a sort of a one-way move for the last few sessions.
Yeah, we have seen the breakout just a couple of days back, and after that it has been making higher tops, higher bottom from 54 to all the way to 70-71. I believe the trend and momentum is clearly on the bullish side for short term. So one can continue to ride, but yes, high volatile names, so need to keep the support near 67 and look for an upside really to extend to a 75 to 77.
For a stock that was completely written off 3 years ago, Suzlon is at a market capitalization of 95,000 crore rupees. It's just insane what's happened to some of these stocks, but particularly Suzlon. 95,000 crores.
Time Aiga has happened.
Yes, most certainly.
For Suzlon. I don't know if Mayuresh has a quick fundamental view on Suzlon.
So some of the fortunes have definitely changed for Suzlon. And they went through a periodicity of, they went to torrid times, right from 17, 18 to almost 21, 22 till COVID got over. And then the regulation changed. And very few players survived within the listed space. So I think Suzlon, Inox Wind, a few companies where the regulatory changes, expectations of more order wins coming their way, the interstate charges, which are far more rationalized right now, probably also gives some element of impetus. But yeah, as Neeraj said, I think insane move in terms of what has happened in the last 2 years.
Okay. Chandan Taparia, take a moment to thank you for joining me today. Really appreciate your time this morning. Thanks. Okay, some stocks which are moving up. Kush, from the stocks that you gave in the morning, I think HFCL is the one which is starting off the blocks, but just about 1% higher. Still merits a trade?
Oh, most definitely. In fact, unlike KFin Technologies, which has now gone and hit the first target, this one's actually kind enough to give an opportunity for, viewers, traders to make an entry. So I think HFCL, even from a positional standpoint, you can buy and hold for, much higher targets than what I shared. But from a near-term perspective, yes, still just as confident as I was about, say, an hour ago. 141, 146 targets still intact, 130. Or maybe you could perhaps now bump up the stop loss a little bit just to protect your risk reward ratio. So you can now move your stop loss up to 132. But other than that, the view and the target still intact.
BSE, by the way, is a surprise mover simply because everybody thought that exchanges will see a bit of a downtick today. Bombay Stock Exchange is up 6%. There was one contra view which said that maybe some of these anomalies, if they get corrected, might actually, and consolidation happens, might actually help volumes for BSE particularly. And I think we're probably seeing that, but 6% up on BSE.
Also, I think, Neeraj, it's NSE that has 4 weekly expiries. BSE just has 2. So maybe it seems to lose lesser than NSE, which is in the unlisted space, any which ways.
Yeah.
Because you've only got Sensex and Bank Nifty for BankX. But
they said that if the BankX goes away, because they have to keep one, if then I think that could be 7 to 9% EPS impact. But we're not seeing that on the BSE stock today.
So you think BSE is moving relative to the NSE hit?
We'll have to check what the unlisted price of NSE is going to be in the next few days.
Yeah, so more than any real impact on BSE itself. I mean, I think that's interesting. Mayuresh and Kush still with us. So I don't know, Mayuresh, are you surprised with the kind of move that BSE is showing this morning?
Probably yes, but yes, I think I would supplement Neeraj's point. BSE had two expiries, NSE far larger expiries. If it's going to be one expiry 1 week, I think the volumes might not get impacted as much for BSE as much as it would for NSE as well. There would be some marginal impact, but I think BSE is also getting shielded in terms of the annuity business, expectations of more listings coming their way, a lot of paperless transformation that these guys are also going through. So yeah, I think one leg of the argument stands in favor of BSE.
Okay, Titagarh is the one which is sulking big time today in trade, down about 5% after those numbers. And Fine Organics yesterday after moving up 9%. I think today a clutch of these chemical stocks are taking a bit of a breather. Fine particularly was not a very fine set of numbers, was very flattish. But Fine Organics is certainly coming off. Not a very liquid stock, but Titagarh certainly. So Kush Bora, one question to you. For somebody who is invested in Titagarh Rail, should one book profits if one is sitting on profits? It's down 5% right now.
Yes, the stock's actually given this breakdown, and it's holding on to the 50-day moving average, which is close to that, a 1550 kind of zone. Any break below this will actually open floors for much lower move, closer to perhaps even 1400, 1475, broad range, but somewhere close to those levels. So I think if you are still sitting on any kind of profit, then you should take some money off. Even if you aren't, I think it's a good idea to exit out of this one. If this key support zone is broken, then it could see an acceleration on the downside.
I've got a whole bunch of stocks that are moving. Mayuresh, M&M and Maruti report today. Tactically, would you have a call on these stocks before their earnings?
So, Samina, as a disclaimer, we continue holding both the stocks in our global portfolios. The expectations in terms of volume numbers still expected to hold out. Obviously, I think from the base effect that we probably see for this year, they might not compound at a decent rate. But again, the order book that both of them have at this juncture is good enough. For M&M in particular, again, I think the farm equipment part of the business, which is the tractor business, expected to pick up steam. Obviously, the kind of portfolio that they possess, tractors below 50 horsepower, is very, very relevant in conditions as well. And therefore, this is expected to contribute significantly as we head into the next few quarters. The supply numbers in terms of how they're going to manage demand is also expected to tick higher. And therefore, I think with the expected supply constraints going off, there should be some element of saliency as far as numbers are concerned. So not too much perturbed in terms of what they'll report in this quarter. This year might be a little bit on a softer side year on year, considering the higher base. But the next 2-3 years with more products expected, expectations of stability in margins should offer well. So we continue our hold rating on both M&M.
Okay. All right. So M&M and Maruti on focus. Maruti has been zooming through the morning session. Let's see if it's held up. No, some of those gains have been given up for sure. Mayuresh, Kush, thank you so much for joining us this morning. Now, before we get into the break, I just want to quickly address those flashes you're seeing on your screen. Bank of Japan has raised its policy rate to 0.25%. That is massive because the expectation was that they would firm up their rate at 0.1%. Their current interest rate range upper end is 0.1%, and it was widely expected that they would bring it up to 0.1%, which would be the highest increase in the last decade. So 0.25%. And the rate being raised to 0.25% is definitely going to be a big surprise. The Nikkei is still in the red, but seeing a recovery from its lowest levels of trade in this session at least. So that's a big one. And remember, we're looking at a whole host of central policy action.
Yeah, so the flash on your screen, the quantitative tightening plan that was to be anticipated, because remember, BOJ wants to unwind the decade-long stimulus that it has been on. And I think the Japanese government bonds buying to be 3 trillion yen in Jan to March 2026, long dated, so a bit of a gradual path given, but yes, tightening significantly and the number being laid out as well. You would argue in line to marginally more hawkish, if you will, than or more tight than what was anticipated. Interesting. We'll certainly see some reaction on the dollar yen. We may not be able to show it right now, but I would suspect that the dollar yen would have reacted.
Yeah, so you'd see a reaction on the dollar yen. You would also see, I mean, I don't know, we'll have to wait and see, of course, what comes out from the Fed as well. But interesting times. The BOJ completely, surprising on the upside with its rate regime is definitely a big story this morning. Anyway, we'll take a very short break, but stay tuned. On the other side, we're joined by Krishna Prasad Chigurapati. He's the founder and chairman and MD of Granules India. Stay tuned for more.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell?
Welcome back. You're watching India Market Open. Stock of the day yesterday was Granules and continues to be on the buy side this morning. The company has delivered numbers that have beaten street expectations on pretty much every front. Krishna Prasad Chigurupati, founder, chairman and MD of Granules India, joins in. Hi, Mr. Chigurupati. Thanks a ton for taking out the time to talk to us this morning. It's been a significantly strong quarter for your company. Walk us through what went behind such a solid performance. Top line's also done well, revenues have improved, margins have jumped up significantly. Is that largely on back of how well the formulation business has done for you?
You're perfectly right. It's the formulation business. The share of the formulation business, the entire revenue has gone up to 76%. It was about 55% 2 years ago. Last year it was 65%. And as per our plan, we actually plan to shift all our APIs and PFIs into FDs. We are on track, and that's what has really contributed to the growth in profitability.
Break down your top line for me. I know API, paracetamol API continues to witness a decline and formulation continues to see an up move. Break that down for us, and also going into the rest of the year, are you anticipating the contribution from your formulation business to grow? And if yes, what sort of a number are you looking at?
Formulation business as per plan will continue to grow as we go forward. And ultimately, we may end up at around 80% or 82%. Coming back to the API and paracetamol, this year, actually from last fourth quarter of last year, paracetamol situation has been very bad. All our customers abroad have overstocked and they have inventories for to last them another 6 to 8 months. And also in the last 1 year, a lot of new capacity had come up in paracetamol, anticipating a huge demand, and there's surplus capacity and no demand. So it's very bad, and I think it's going to take at least 2 to 3 quarters for paracetamol to rebound. So meanwhile, the formulation business and other APIs, actually other formulations, the core products used to be about 90% few years ago. Today, they've gone down to 65%, and other products have come to 35%, which is a good growth in our basket. And this is what is helping us in keeping up our revenues in spite of a debacle on paracetamol.
Mr. Chigurupati, very good morning. Tamanna here. So, like you said, your formulations business has sort of offset the paracetamol pain. You've seen a growth of 65% year on year. Do you see it sustaining at those levels? What is the outlook for formulations, even while you're expecting some time to recovery for the paracetamol side of things?
Good morning, Tamanna. Formulations will continue to grow. We have been filing a lot of products in the US, Europe, and across the world, and it will continue to grow in absolute numbers. There will be a decent growth. As a percentage, like I said, it could plateau at 80%, 82%, because we do have a fairly sizable business on PFIs. And APIs, of course, we do make a lot of APIs, but all are consumed in-house. We don't sell most of the APIs outside. So to answer your question, the formulation business will continue to grow.
What about your oncology products? I'm just trying to understand. I know they come on board in FY26. Is that going to be sort of the game changer? Can you give us a bit more detail there?
We have entered a new phase, Tamanna. Onco is one of those areas. We have a lot of P4s, first to files, and first to launch products. And the game has changed for us. We were always in P3s. Now we have entered more challenging areas. And onco, we have a few molecules which we expect could really change the course of Granules. It's still some time away, 27, possibly 26, 27. And some of these patents will expire in US in 30 or 29. So there's a lot of products like this, not only in onco, where we have many interesting P4s, and also some products where we have created our own IP, and others may not be able to get into these products.
What do you mean when you say change the course, Mr. Chigurupati? I'd love to understand what the trajectory could be if it indeed materializes on the timelines that you mentioned.
Change the course. We were focused mostly on P3s, large volume products, and this will continue to be our core. Instead of 5 products, we may have 15 products in the large volume category, and that will keep our foundations very, very strong and continue to throw up cash to fuel our aspirations in other areas. So there will be a sizable contribution coming from these new products. Today, we would not be able to say what percentage, but definitely the profitability on these new products where we have patent challenges could be very different from what we enjoy today.
Would love to understand the slightly longer picture. 2 years ago, the belief was that there will be some bit of a stake sale that could happen in Granules. I remember last quarter or the quarter before last, you came in and vehemently denied it on our channel and said that the outlook is so strong that I don't want to sell anything of my company. Would love to understand, is that strong outlook for a 5-year period a 15% growth CAGR? Is it a slightly higher growth CAGR? Give some color.
Now, selling a part of the stake, let me explain. Definitely, there's no plan. But if you have observed a few months ago, I sold a small percentage just to get rid of my debt and also create a little liquidity for myself. Now that I've done this, absolutely, there's no need for a very long time to even think of selling the company. Now, the second question, Neeraj, sorry, I just missed it out.
No, I was asking, so you didn't think of not selling the company because you may be happy with a 5% CAGR growth, right? I think your ambitions are bigger. So would love to understand that if I look at Granules from now, over the next 5 years, what is the growth aspiration, sir?
Okay, let me explain. For the last many years, 15 years, first 2 5-year periods, we were growing at more than 20%. Only last few years, there was a little drop. And I'm very confident, and we are aspiring to get back to our 20% CAGR. Anywhere from 15 to 20%, we should be able to do this going forward.
Right. You want to just talk to us about the next couple of years, right? Like you've already mentioned the sort of growth you're targeting, Mr. Krishna. But break it down for us. What verticals? I know North America has done exceptionally well for you this quarter. Last quarter, you've talked about how you want to increase your footprint in markets across Europe as well. Where and how do you expect those geographies to play out for you looking ahead?
US will continue to be our primary focus, and it will continue to be our major market. While Europe and other places grow in absolute numbers, as a percentage, they may not really make a huge difference. I don't think Europe will ever go to 40% of our revenues. US will continue to be there. And when we look at the breakup of different segments or verticals, Onco is going to be a big area going forward. And then there are a new set of products which are in the core area of the old type of business, which are high volume products, P3s, which we have already got approvals, we have launched. Now we are manufacturing those APIs for ourselves using differentiated technologies like enzyme and flow. We believe we are going to have a great advantage on cost of APIs, and that should be a game changer. And there are also a few products where we have made a differentiated technologies in formulations, which also give us a good advantage. That's in the P3 segment. Now coming to patent challenges, we have a range of products that where we have very innovative formulations. And we not only were able to challenge the patents, existing patents, but we believe that we have created our own IP, and it may be possibly difficult for other people to follow us there. And another segment is the US business itself. We manufacture products in GPI, our US subsidiary, and we concentrate mostly on CNS and ADHD drugs. And these products are really growing in demand, and we see that that is another area that will drive our business. And fourth is our OTC private label business. This has been growing very fast. We supply to all the chain stores in the US, the OTC molecules, and we have been having a 30-35% growth in this area. Of course, the base was small, and that continues to grow. These are the 4 areas: API, efficient API manufacturing, new support feeding into new launches, ADHD drugs in US, OTC. These are the areas, and finally the P4 challenges, which will get us into a very challenging and exciting area.
Right. So we'll continue to talk about business, but quickly you mentioned, Neeraj, that you had sold a little bit of stake to retire personal debt. The debt on the books of the company is close to 850 crores. It's up from the 600, 700 odd we'd seen in the same quarter last year. Any plans to retire debt, or you're comfortable at this debt equity ratio?
We are comfortable. I think we are at 0.77 debt equity ratio. and we are comfortable up to 1. I think I've always been consistent in saying that 1 is the limit. We will not cross a 1, and anywhere below 1, we are quite comfortable. We have no plans to retire debt. We would like to grow rather than retire debt.
Just wanted to get a better sense of what's happening in the US market. Obviously, a big contributor to your revenues. Is the kind of price control that we're seeing there a pain point that you see escalating for you, Mr. Chigurupati? And what is your outlook on the kind of growth that will come from US?
US price erosion has always been challenging.
But it's worsened. It's worsened in the recent times. That's why I'm asking how you look at it. How much of a pain point is it?
I'm not sure if it has worsened in the last quarter, 2 quarters. It's sort of stabilized. It's not very high, maybe mid single digits. That's what it has been. But even when it was much higher than that, we were always constantly improving our efficiencies, manufacturing excellence. We were able to compete and increase our share of business. So we will continue to do that. Improvement in manufacturing is an ongoing thing. We will face the challenges on price erosion. And whatever happens in the US market last few years, we have been growing in that area. So we'll continue to do so.
Okay. Okay, Mr. Chigurupati, the other aspect is the whole value chain. Notes speak about how you're also trying to backward integrate, as also move up the value chain for better growth, better profitability. How do you do this? Is this significant capex or not quite? Can you give us some insights?
Going backwards, integrating backwards, capex is needed, but not a huge lot. We already have some facilities. Our Unit 5 in Vizag, which was not really contributing for a few years, that we are exploiting now, and we are expanding there for API capacities. So it will not need a lot of capex. Maybe we will continue to maintain our capex between 400 to 500 crores every year, and that will be split between API expansion and formulation expansions. Our GLS plant, which is at Genome Valley here, is partly operational now, and it will be fully operational by January. That should give us about 10 billion doses of formulations that will keep us going for a few years, and backward integration will continue to grow.
Thank you very much, sir, for joining us this morning. Congratulations and good luck. Looks promising for Granules, and we hope all your plans play out as expected. We'll hopefully see you soon as well. With that, the market's aren't doing too badly. The Nifty and the Sensex trade flat. Bank Nifty is trading marginally lower, but it's all about earnings and all about stock-specific reaction on the street this morning. We'll take a break. We'll come back, put the focus on 2 big auto earnings that the street is eyeing.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles.
Back with India Market Open right here on NDTV Profit. Now, today is an important day. Actually, between today and tomorrow, we have three big auto majors coming out with the numbers. Let's focus on today. Maruti set to report numbers. M&M set to report numbers as well. Puneet joins us with the key monitorables. First for Maruti. Puneet, take it away.
Yeah, thanks for that. So expecting a good quarter in for all three passenger makers, as you said. Let's start with Maruti first. Expecting good revenue growth of roughly 7%, but margins are going to be expected to be very strong, coming at roughly 420 basis point improvement from the same time last year at roughly 13.4%. That's really strong compared to last year when the margins were around the 9 to 10% range. Net profit is also expected to rise to roughly 3,400 or approximately 3,500 odd crores. That's a 38% rise from the same time last year. Now, volumes for the quarter is already out, roughly 5.22 lakh units sold by the company. This is a growth of roughly 5%, and this is strong, much better than what the expectation was for each month from brokerages as well. One of the key things has, of course, been the launch of the Dream series, where they're launching new entry-level, the older Celerio as well as Alto in a much better price range of roughly 4.99 lakh units. This was launched in the month of June at the end of the Q1, and the company has extended it to July as well. So a little more commentary on that. The second thing, a key monitorable, is of course the launch of Swift, which happened in the month of May. This has sold around 30,000 units in the quarter, and another, some update on that will also be key. Nomura is also seeing some positive results because of favorable price hike that the company has taken, as well as a mix of higher SUVs sold in this particular quarter. Back to you.
Puneet, let's talk a bit about M&M. Those numbers are also expected out this quarter, and the big buzz for this company has been actually expanding its stable and having more products at every price point. Would you be looking for more details on that, and what can we expect on the numbers?
Well, definitely. So it's continuing its momentum from the previous fiscal year of showing strong revenue as well as PAT growth. So in this particular quarter, we are expecting 16% revenue growth on a standalone basis to come in at around 28,000 odd crores. Margins are also expected to rise by roughly 8%, and they're maintaining the 13 to 14% range in this particular quarter as well. Specifically, around 13.7% is expected in this quarter. Net profit is expected to rise by low single digits in this particular quarter because they have made a lot of marketing investments for the new launches. They're expected to come at roughly 2,800 odd crores of PAT in this particular quarter. Now, a few things to look out for will be, of course, the launch of the 3XO, which happened in May. This was a key disruptor, and we will be noting if the company's already made dispatches, and also any kind of update on the booking number as well will be key. They had strong volume growth in this quarter, roughly 14%, which was the highest among other passenger car makers as well. So that's definitely one of the key positives that should impact margins as well. Nomura is seeing strong operating leverage benefits coming in this particular quarter. They have said that, of 3XO, of course, is a key monitorable, but apart from that, the Thar 5-door, where the Mahindra has teased the launch of this particular product, long-awaited product over the last 3 to 4 years, will be key. Apart from that, some more details on the next EV launch in this particular quarter. We know Tata is coming out with the Curve EV this week on 7th of August. So a little more details on that will be key. But overall, positive results for both these passenger makers today. Back to you.
Okay, Puneet, thanks so much. Puneet, just one quick 20-second answer. Could there be one-offs in M&M because of last year's numbers that one should consider?
Potentially, yes, but it'll be too speculative to comment on that right now. Brokerage is not expecting too much on one-offs, but we could possibly look at that.
Got it. Okay, thanks. Let's just wait and watch. Thanks, Puneet, for that. Watch out, dividend income, other income, lot could happen between M&M's numbers and the fine print thereof. Okay, while we are at it, let me get in my colleague Rucha to talk about what is the brokerage reaction been to the Sebi consultation paper on measures which will impact the F&O market. Let me qualify it that way. Rucha, what are brokerages saying?
Right, so we have two brokerages, IIFL and Jefferies. Now talking about IIFL, it sees highest impact from the withdrawal of weekly options. Also increasing the contract size by 2 to 3 times can constrain the retail investors. Higher margin near the expiry can also cause a problem in liquidity, especially for retail investors. Now talking about the specific stock impact which IIFL estimates is that higher impact will be seen for NSE as options account for 60% of the revenue. Now talking about BSE, a slightly less impact can be seen over here as options account for 40% of the revenue. Now talking about the FY26 earnings, 25 to 30% of the impact can be for BSE on its FY26 earnings and 15 to 18% for the BSE. Now they don't see any impact on the commodity exchange from these regulations. However, return of interest income on the margin money will have a higher impact on BSE, about 10% as compared to a 4% impact to NSE. Now let's talk about what Jefferies has on this kind of stock impact. Now the removal of weekly options can impact 35% of the industry premium according to Jefferies. Also the phased hike in lot size and the margin hike as well will impact the retail investors. This is what we saw even for IIFL as well. Now talking about BSE earnings impact, around 8% will be impacted for BSE over FY25 to FY27. However, gains from the spillover of discontinued activity can offset this likely BSE impact, is what Jefferies has to say.
Right. So that is what Jefferies is saying. Well, Jefferies thought BSE will be impacted the most. Let's pull up that BSE stock just before we take a break on the show and see what's happening. I mean, I don't quite know what to say. It's 7% up now on the BSE. Is it? I said this morning when we were looking at the stock right after opening that the house always wins. And that's what it seems to be, because whatever happens, you might have some impact on volumes. I mean, there's a tweet out from Nitin Kamath today who says that maybe on futures you might see some impact, not so much on options. As the market and all the key participants break down the various formulations of impact, maybe in the long and short of it, the BSE comes out on top.
Yeah. You know, so the Jefferies note says that gains from spillover of trading activity from discontinued products can offset EPS impact, and in the event of moderate industry-wide impact of Sebi measures, can even drive EPS upgrades. So
they've said both things. So that's the best way to analyze something. You always end up right. All right, on that note, we'll take a very short break. Markets are flat, but nothing really negative going on right now in terms of an impact from Sebi's proposals. That's all we have on India Market Open, but stay tuned. Talking Point up next.
When you talk about
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential.
Thanks so much for tuning in to Talking Point. I'm your host, Neeraj Shah. Our guest today is Naveen Chandramohan, founder of Indus Capital. And there are various ways to structure the conversation with Naveen today. We can talk about the Q1 and how it's been slightly ahead of estimates. We can talk about his thesis of how this decade is inflationary versus the previous decade being deflationary. Or we can talk also about his positioning, which is heavily, and I mean heavily tilted towards large caps versus mid caps and small caps, while Naveen continues to be a bottom-up stock picker. Naveen, good having you. Thanks for joining in. We can choose any of these. Let me just quickly ask you though, the big events are out of the way. Now the markets move back to valuations, to earnings growth, and the resultant moves over the course of the next 6 to 9 to 12 months, or maybe longer? Longer is a difficult call to make in such markets and such world times currently. How do you view the landscape from an earnings versus valuation perspective currently?
Sure. Thanks, Neeraj. Good morning to you and to all the viewers who've tuned in. Appreciate you having me on the call. So, as you nicely summarized, I still believe that we are in an inflationary time today. And as a result of which, positioning of portfolios have to be skewed accordingly. In terms of earnings, if you break it down, roughly around 45% of the Nifty 500 companies have reported. Earnings in pockets have been very strong. For example, pharma has been strong, consumer durables has been strong. Consumption is still lacking across the board, though there are green shoots from a lower base. And banking again has been strong, but that strong growth has come with the effect of ROA contraction. So I think from here, like you rightly said, it is going to be a bottom-up stock because market. But the overarching theme being cyclicals, I still continue to believe should do well. There are certain sectors, for example, oil and gas, power, telecom. These are beneficiaries of what I call an inflationary time. So I think it would be interesting and prudent to look into those spaces because from a top 500 company perspective in the index, they would be underrepresented. So that's broadly how I would think about earnings. Valuations, like everyone is aware, is not cheap. But for the growth that you are getting, I would say it's in the median end of the range. So one has to balance it out. You're not going to get cheap companies today for sure.
Okay. Just before I come to some number crunching, Naveen, what does typically, and I mean, would you tilt your portfolio towards the larger bias of it being an inflationary decade and therefore maybe stay out of technology, even if those companies are giving out good numbers, for example, the ER&D stocks? And would you be tilted towards companies which benefit from an inflationary boom, typically economy-linked spaces, right? Despite the fact that in some cases, those valuations are stretched very, very much.
Sure. So I think coming to technology, I think there you can be tactical. At least that's how we think about it. I don't personally look at technology as structural in many of the companies that are reporting as we speak. So you have two ends of technology. One is the services end, where I think one can play a mean reversion theme, and that I believe should work out reasonably okay. But you're not going to get very strong growth. You're not going to get double-digit growth. What you are playing for is what used to be 2 to 3% year-on-year dollar growth can go towards 5 to 6% year-on-year dollar growth. And that is coming after a period of 3.5 years, where many of these companies have managed their margins well in a downturn. So from a mean reversion perspective, with certain growth, you can generate some alpha over the next 1 year from a tactical perspective. Where I am seeing growth is on the product-specific businesses, especially those businesses with an India focus, with a banking focus, with a BFSI focus. I think that is an interesting play from a bottom-up perspective. Now, these are the two pockets. One has to pick and choose, but to be structurally overweight technology, both from a services or product perspective, I'm not comfortable as we speak.
Okay, sorry, did you mention about the economy hugging sectors? Would you be comfortable buying them even if they're expensive?
Yes, I think like we discussed, I think 6 months back, we had a call together and we had discussed some of these names. We still continue to own many of these names. We have not trimmed our exposure. Some of these have actually done well. And we would continue to bias our exposure towards large caps. When I say economy facing, I would include sectors like power, oil and gas, cap goods into them. And I would not want to be buying at these valuations my full exposure. So I would want to be building my exposure with room for volatility over the course of the next 6 to 12 months. If I get that, I would increase my exposure. That's how I would think about it. But I'm not out of any of those spaces.
Not out of any of those pockets. Okay. Now, the here and now, and viewers, I want to draw your attention to this chart. This is, I believe, from the City note, if I'm not wrong. But it effectively speaks about the Nifty 50 upgrades and downgrades as things stand, as the earnings have come out. And if you just look at this here, what's happened now, the Nifty 50 downgrades, the pace of these downgrades have come off a little bit. Some stocks have seen a bit of an upgrade as well, but broadly, relative to the kind of misses on the earnings estimates that were happening, maybe they are tapering off a little bit, and which is why we're seeing a lower proportion of upgrades and downgrades. But more importantly, it also means that this quarter, the reportage of the earnings has largely been in line with what was estimated. And Naveen, one thing that stands out is that a lot of expectations, for example, from energy as a space, but energy has seriously missed estimates. And maybe it's accounting and maybe some of that gets changed as well. But because a lot of people are constructive on oil, both upstream as well as downstream, and they are all large cap names where you are tilted towards, would love to know if energy forms a part of your core portfolio, energy stocks.
So, Neeraj, the way I define energy is more so towards nat gas today. I think if I look at LNG imports, that's picking up significantly. So, none of my exposure is in the oil refiners that you're talking about. I know for a fact that some of these misses that you're talking about is predominantly in oil refining, which, considering oil could be range bound, and if you assume that for all practical purposes, Trump is going to come back, it's going to be drill baby drill as far as US is concerned, which is how he goes about things. So it looks like oil prices would be range bound, and if that's the case, some of these oil marketing companies can have their expanded margins, but that's not something we are playing out. Most of our exposures as energy is coming through nat gas, both on the transmission side as well as both from an international perspective as well as from a domestic perspective. That's where we own our risk in large caps.
Okay. Okay. I want to, I mean, because it's such a busy time for automotive currently, Naveen. We have two large numbers today, one tomorrow, and it's a sector that's probably has had 4 consecutive very strong years behind it already. What's the thesis there? I presume you are invested, but it's a very wide and a very differentiated bucket. So where within this bucket are you invested? 4-wheelers, 2-wheelers, EV-focused players, auto ancillaries, and why is that the tilt?
Sure. So, Neeraj, just to recap our conversation 6 months back, we had a detailed discussion about this where we as a firm were significantly overweight auto, right? And over the last 6 to 7 months, we've been slowly trimming our exposure. More of our trims have come from 4-wheeler and auto ads. Predominantly from a risk management perspective. Basically, when you study cycles of auto, what is very interesting is auto generally goes through an upturn of roughly 3 to 4 years and followed which difficult period of 2 years. And as a result of which earlier in the year, when we were having the conversation, there were noise bites around the fact that CV cycle is turned. If this FY 24-25 is going to be a difficult year for CV. But when you look at the numbers for some of the largest names, like say an Ashok Leyland, it's not turning yet, right? But prudence requires you to risk manage this, considering that this has played out reasonably well for us. So predominantly from how we think about it, we still continue to be biased towards 2-wheelers. Most of our risk exposures that have been trimming and that we have been trimming is coming from 4-wheelers and ancillaries as we speak. So that's how we think about it. And like I said last time as well, I still think India is a hybrid market. It's not a standalone EV market, especially in the 4-wheelers yet. And that's how we've expressed our exposures also in the portfolio.
Okay, fair call. Just one thing, Naveen, I want to dwell on this a little bit more if you can. And I don't know if you have thoughts here or if you have investments here, but there's this lot of talk around battery storage, battery manufacturing, so on and so forth, expectations of PLI schemes which were dashed, etc. But from a power company to a battery company, we're seeing a clutch of these names trying to do something within that battery ecosystem. Have you thought this through? Have you looked into it? Have you had a chance? And if so, what are your thoughts on this ecosystem and which players might benefit out of it, whether or not you have an investment?
Sure. So, in the interest of full disclosure, Neeraj, we owned both the battery manufacturers which are listed, and we are out of one of them. Correct. Now, in terms of how we think about, so if you look at the battery ecosystem, right, the lead acid battery, the two players, there was one which had a dominant market share and execution between 10 and 17. And slowly, as the EV theme began, the terminal value derating of both the players began to happen for a period of roughly 5 to 5.5 years. Today, one realizes that even for an EV, and if you assume that EV is only going to be on an uptick, you're not going to get away with lead acid. So there is a need for lead acid batteries to stay. Growth is robust in that, but incremental investments are going into EV. Now, to me, I still think that's going to be a 20-year rollout process. Now, when you study the scale up of a company which is the largest in the world, CATL, you will look at their ROEs at best at low double digits. So when you are operating at the largest scale, if you are not seeing ROEs, there still is doubt in my mind to basically say, even if you can achieve scale, and let's assume that the PLI will go away at some point of time, right? Because your ROEs with PLI will look very different from ROE without PLI. So as an analyst, I can't assume PLI will continue for eternity. It might be there for 2-3 years in order to subsidize. So my steady state ROE, I don't see it going above mid-teens yet. So if a company is executing very heavily and investing in CapEx very heavily in EVs, to me, I'm not very bullish about it. So broadly, I would want a legacy lead acid portfolio in there with sensible investments in EV in order to get my mix right. But away from that, in the listed market space, you only have two. You have a lot of investments happening in the private market space. We don't own anything from there. There could be some interesting place in the private market space, though.
Okay. Naveen, very quickly, we have a next guest waiting, but I just wanted to check with you because it's related to that. Because there's so much of proliferation of EV, a lot of conversation happened in the last 12 months to 18 months about how long will multiples for businesses which are in the conventional space, a lubricant company, maybe a pistons company, etc., might have. So, any thoughts here very quickly? We need to, about a minute. Do you think they will continue to stay relevant in the Indian context because it won't be only EV in India?
So I think lubricant companies should do well, especially the large ones. I think you had 6 years of derating where they went nowhere. And I think there is a theme that's building up, which is a storification of a theme around data centers. How that plays out, I think people are going to take advantage of stories in this place, especially when you see the stock price move. But these are companies that will give you 5 to 6% top line growth at best. So you will have to basically enter in at the right valuation. When I say right valuation, PE multiples of less than 15 are going to be extremely crucial for the growth that they can deliver. So as long as you get that right, I think there is a play there. You cannot pay up to own these businesses. That's my only ending comment.
Got it. Okay, Naveen, great talking to you. Thank you so much for this time today. And maybe the next time we don't wait for 6 months to get you back on air. It will be lovely to hear your thoughts. So thanks for that.
Thanks a lot, Neeraj. Always appreciate your time.
All right. That's ITUS Capital on some of the pockets. Now, what we do is we carry forward that last piece of the conversation on the other side of this break with the management of Castrol. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Back with Talking Point and Castrol India as the stock in focus. Soft today, the company released the June quarter results and profits were flat, just a 3% uptick. Revenue is about 5% and in line with consensus estimates, by the way. And maybe that is the bane of companies. If they're just meeting estimates, then the street doesn't seem to be liking that too much. You need to show growth, which is better than what is estimated. Let's ask how difficult it is to do that in the business that they are in, which is Castrol. Sandeep Sangwan, Managing Director of Castrol India, joins us right now on the show. Mr. Sangwan, good having you. Thanks for joining in. This is Neeraj here. Good morning to you. In line with estimates, but is this in line with your estimates, or would you have hoped to do a bit better than the revenue numbers that you've posted?
So, Neeraj, good morning, first of all, to our viewers also, and thanks for having me on your channel. I think we're very happy and satisfied with the results that we've seen. And the reason I say that is we've had a 5% top line growth. Okay. The profit PBT is about 3% higher on the back of increased investments in marketing spends. We've increased our spends by about 22% in the second quarter. And brand is hugely important to us. And in the second quarter, we also launched our new campaign with Shah Rukh Khan on Castrol Edge, which is our globally top performance product in the cars portfolio, because in the next decade, we see a huge growth coming in the cars segment. So overall, for a business that used to get a legacy-wise, if I go back 10 years or so, a growth of about 2-3%, and we're able to shift that to a 5-6% growth profile. And I think we're moving in the right direction while maintaining our margins at about 23% EBITDA. And we've always said we'll maintain our margins at 22 to 25%. On top, we've declared a dividend, interim dividend of 3.5%, which is higher than last year. Last year, interim dividend was 3%. So that should be good for our shareholders also. So overall, I think we're moving in the right direction.
Well, you've maintained a bullish outlook on India by and large, considering where we are on penetration and the fact that we will not be an EV takes it all country. I would love to understand, Mr. Sangwan, what are the broad numbers that we are working with when we talk about you building out this brand building, distribution network widening exercises and reaching some contribution from all of this to both volume as well as market share expansion?
Yeah. So let me lay out a broad picture
Sure.
for you. The core business continues to be strong because lubricants as a category will continue growing at about 4-5%. Our intent is to grow a few points ahead of the market. Okay. And there are three vectors that we focus on. The first is our investments in brand innovation technology. Okay. Like I mentioned that we launched Castrol Edge, which has a full portfolio of performance lubricants for cars, for European OEMs, for SUVs, for hybrids. So those are the kind of innovations we'll continue bringing to the market. The second vector, as you rightly said, is our reach expansion. Okay, so as I've shared in public forums, we are focused on continuing to expand distribution, and there's a lot of growth to come in rural India. We've added this year another 2,000 outlets, so we reach about 35,000 outlets in rural India now. We cover about 29,000 what we call bike points, which are two-wheeler workshops. Many of them are branded Castrol. And then we have about another, I think, 8,000 car workshops. Out of those, there's about 540 outlets which are branded Castrol Auto Service. So overall, we cover about 135,000 outlets plus, giving us the largest scale in the country as a lubricant player. And we continue building on that. That's not the end point for us. So the second vector of growth is expansion. And the third vector of growth is diversification into new areas. We have a suite of products for electric vehicles under the brand Castrol On. Okay, whether it is lubricants, coolants. When I say lubricants, it's greases, coolants, transmission fluids. The second is last year we launched Castrol Auto Care, a range of auto care products which we are expanding. Last month we added a shiner sponge to that portfolio, and these products are available in like 45,000 plus outlets now. And then we kind of working in some other areas from a diversification plays, which are called out as global diversification plays, with data center, thermal management being one of them. So I think those are the three pillars of growth for us as far as India is concerned. And that's why we are very positive on India growth story.
Got it. Mr. Sangwan, so with the volume growth numbers that exist right now, and you would beat the market maybe by 1% or 2%, what about the non-volume pitch part of the business? I mean, operational efficiencies, is it possible to improve that a little bit? Would you believe that it is possible for a company of your brand to maybe clock in slightly better operational metrics over a period of the next 3, 4, 5 years? Is it even possible to do that? Because there's so much of dependence on what the input cost would be as well.
So absolutely, I think in any business, Neeraj, as a fundamental belief I have, while you have to look at top line growth, you always have to continue looking at your cost as well. Okay, so I call it the jaw, fine. And if you don't focus on cost as an organization, you're not doing justice to the shareholders. So there is an opportunity on finding operational efficiencies. We keep looking at our formulation efficiencies, product efficiencies, and we have various programs, whether it is sales force productivity, whether it is our product cost structures, whether it is our logistics. And our intent is to continue finding efficiencies and cost also, because we've said we want to continue. While to get more volume, we are playing in larger segments of the market, both on the premium end and at the mass end. But we have to keep our EBITDA margins between 22 to 25%, and some of that will come through cost efficiencies.
Okay, but it will be slow and gradual building out over a period of time. I don't think there will be a step up possibility out here, right?
I think step up possibility, we've already shifted our volume growth profile versus what we used to see. And I think we're getting much more confident in terms of driving top line and bottom line growth, not only through pricing, but and margins. But as you rightly said, I think it's a journey. It's taken a few years for us to make that shift, and we hope to continue making that shift as we go forward.
Okay, last question really on the size of the market over the next 5 years and your share within that. I mean, you're presumably the unequivocal leader, but from where you are, can you be higher than that, or is that just literally not possible? Just trying to understand.
No, the aspiration is always to increase market share. Okay, that's what we are in business for.
So what is it currently? Where will you be?
Yeah, I think if I take our reported shares as reported by Nielsen, okay, in the retail automotive market, that's where our focus is, and that's what we measure. I think we are in the low 20s as a share is concerned, if I put all the segments together. And our hope is that we continue investing on our brands, continue building reach and distribution to grow our market share. Now, how much we grow it by is time will tell.
Okay, so maybe we will talk about it quarter after quarter to just try and understand, or maybe year after year, because I don't think it's a quarterly phenomenon. Okay, fair call. It was great talking to you today. Unfortunately, we are out of time on the show, so I'll have to leave it at that, Mr. Sangwan. But it was great to get some insights from you on this, and we look forward to more conversations as you wrap up Q2 or the half year as the case. Or actually, no, this is the half year as you wrap up Q3 in your case. Yeah, as you wrap up Q3 in your case. But thanks for joining me today.
Thanks, Neeraj. Look forward to that.
Yep, likewise. Well, that's the view from Castrol. When we are almost at the end of the show, just very quickly mark what's happening in the indices, because we are again trying to make our way to 24,950 odd. From that level, we've seen a bit of a slip down yet again, always. Today, the Bank Nifty is not participating. It's the IT index which is participating, because you have the Nifty IT, which is up about 0.6%. So that is the one which is taking the index higher in trade. And I wonder what's quite moving within that. So just get the Nifty IT constituents persistent on that. CLSA upgrade is up, but it's not just that. There is strength in TCS, Wipro, Emphasis amongst others. So that's the bucket and coterie of stocks which is principally responsible for the market doing what it is doing. I wonder if Suven Life is still, or Suven Pharma is still one of the key movers at the broader end of the spectrum, because it's up about 11 or 12%. When we started talking point, it's Suven Pharma should be up about 11%, yes. So that's on very good volumes, by the way, is up about 3%. And Bombay Stock Exchange, amongst others, was very active. I reckon that would probably still be the case. Okay, 7.5% now. On that note, we wrap it up on this leg of Talking Point. Thanks so much for tuning in.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Hello and welcome to the FNO show. Over the next half an hour, we will take you through all the FNO action and also talk to Dixon Technologies after they've posted a fantastic set of earnings this quarter. But first up, the markets once again 60 points away from that significant mark of 25,000. It seems like a good possibility that that could be made in today's day of trade. The breadth of the markets also improved since we started trade this morning, and the broader markets are also performing pretty well in today's day of trade. TCP, Tata Consumer Products, despite a strong showing for the quarter, is under pressure this morning. Top loser on the index, down about 1.8%. Power Grid, Indus, TVS Motors and Tata Motors are some of the top stocks that are seeing profit taking after yesterday's sharp rally. Asian Paints on the flip is doing well, 3% higher. Hindalco, Tech Mahindra, Adani Enterprise are having a pretty pleasant morning. Across the broader markets, Suvain Pharma is your biggest gainer, up 11 odd percent. You've also got Torrent Power that's looking very good on back of an 87% jump in profits that we've seen. BSE is up 8% for reasons better discussed later. Granules, strong quarter, 52-week high was made yesterday, another 5% added to the stock this morning. So all in all, it's all about earnings, and lastly, most of the broader market reporting has been better than what the street was expecting. But Agam, I think Dixon's also stand out. Strong earnings, strong performance on D Street this morning.
Yeah, so Dixon's of course one of those companies which moves, from strength to strength, and every time you see a little bit of a dip, you see a lot of these investors come back and buy into the stock. And the reasons are very clear. It's the performance that the company brings in quarter on quarter. And, the first quarter, the earnings are no different. Very strong earnings. We've seen doubling in terms of revenue as well as net profit. And what's more important is that these numbers are also ahead of street expectations. So, no prizes for guessing that, it's trading at the valuations that it is. This is good reason for that. There's substantial growth coming through, and I'd reckon that the management will perhaps tell us a little bit more about what we can expect. In fact, let's talk to Saurabh Gupta. He's a CFO at Dixon Technologies. Saurabh, good morning. Thank you so much for joining in. Yet another strong quarter, Saurabh. I'm going to start off with your biggest division here. That's the mobile division. Again, a great amount of business coming through. The first question is sustainability. Over the long run, perhaps if we can take a look at a year or so from the outlook, what would a good revenue growth rate assumption be? And secondly, how are you looking at margins panning out here? Do you expect any pressure? We have seen expansion on a year-on-year basis, but do you think these margins are also sustainable at these levels?
Yeah, so clearly we have a large order book in one of the verticals, mobile, where clearly we are looking to grow from 6.7 million smartphones to almost 28 to 30 million smartphones. Our acquisition of iSmartu is also in the final stages of getting closed, so that we should start consolidating the numbers for the balance 7.5, 8 months of this financial year. And now the objective is to basically also get deep into manufacturing, deepen the level of manufacturing, get into more components for mobiles, the precision components, mechanicals, as well as the display. Display, we have already finalized a technology partner. So overall, by sense, the growth outlook looks very positive. We will significantly outperform the industry and our peers. And I don't want to give a particular number to it, but yeah, our best numbers is yet to come. Our quarter two should be even much better than quarter one numbers. Clearly, one, because quarter two is always seasonally better quarter, and a lot of our customers in mobile business have actually kind of ramped up now, and they will deliver, and the volumes will continue to grow for us.
All right. Sort of a question on margins as well. Here, are they sustainable at these levels with the kind of orders that are coming through? And of course, let's not forget the input environment at the moment.
Yeah, so we feel that 4% margins are definitely sustainable, and definitely we think that our focus, our strategy is more into getting into components. And components, though they may be slightly lower as far as asset turns are concerned, but clearly they are very highly on margins. So they're margin accretive, have quicker paybacks for us. So we expect that year on year that should have a positive impact on the margins, and our margins next year can potentially grow even on a much higher base of revenues.
Right. Saurabh, hi, it's also Samina joining in. Just a quick one on consumer electronics. That business has been subdued this quarter and revenue has degrown by 3%. Looking into the rest of the year, are you expecting that to play catch up, or this is more of a conscious effort by the company to degrow consumer durables and focus on everything else?
So Samira, clearly in second quarter, we have a strong order book. We are looking to do somewhere around 1 million units for second quarter, 1 million plus units. But overall, this industry is having an issue because the market for TV in industry is not growing. So what we are doing as a strategy is basically we are focusing more on backward integration. We are adding other product categories like the interactive flat panel displays and display signages where we've already started manufacturing. And we are looking for partnerships on the automotive displays and the industrial displays. But as far as the TV market is concerned, the TV market in India is not growing. In fact, it's on a declining trend, and our volumes are also reflective of the. So there has been a degrowth in the volumes. So my sense is, broadly, there won't be a large amount of catch up, but definitely quarter two should be a good number for us as far as TVs is concerned.
Also, Saurabh, IT hardware and laptops is the next big opportunity, and you already have Acer and Lenovo for laptops. How has the accretion been for both? How's business looking there? And have you also received PLI certification in both of these?
Acer, we have started manufacturing. So this is the first year under the PLI. And Lenovo, we will start manufacturing by Q3 of this financial year. We've also got two large global brands with us now. The agreements are in the final stages of conclusion, and we should be able to announce to the markets very soon. And we should start manufacturing from them by the beginning of next financial year in our new campus in Chennai, almost of 3 lakh square feet. And my sense is, so we have been able to, within a short span of time, we have been able to get 4 large global brands out of the 5 brands. So it will be the next trigger for our growth. It will be the next engine for our growth after mobiles. And clearly from next year onwards, I think so we should start generating decent revenues in that, along with the component play.
All right. Well, a little bit more of an update when it comes to components here as well. The next steps for you, how are you looking at display modules? Have you finalized HCL Tech as a partner? HCL as a partner, and what is the opportunity here?
Yes, on backward integration, clearly we are looking for a lot of partnerships. HKC is one such partnership on the display manufacturing. We are looking for more partnerships, and they are in some form of a discussion on the precision component, mechanicals, connectors, cables, those kind of components. And we hope to close those partnerships in the next 6 to 8 months. So this is definitely the talent acquisition is in progress right now. We are hunting for a location right now for a display manufacturing, and which we should be able to close very soon. And by next financial year, we should start manufacturing this display. And again, as I said, these are high double-digit margins for us. So it will really have a positive impact on the margin side overall at a company level. And also it helps us to create that technical skill set, technical bandwidth internally. It also creates that extra moat in the business. So it creates that extra competitive strength for us by getting more into components here.
Sir, we completely take your point, and I think you've time and again mentioned that how it's, and I guess the street understands as well, that diversification is important, but mobile phone still continues to be a very significant part of your business. Now, with the dependency on your top 3 clientele on that, is there anything you're doing to mitigate risk? Because even the loss of one client could impact the revenues of Dixon to quite a great extent, right? So help us understand, what are you doing to mitigate those risks? And also, while you're focusing on higher value added products, margin outlook. So I know margins where they stand right now, but over the next 1 to 2 years, where do you see margins go to as you improve that product mix?
Yeah, so one, clearly the mobile is the largest opportunity in terms of the opportunity pool available. Mobile is the largest opportunity. Now, for us, the reason why we have done well in mobiles is on account of 3 factors. One, we have continuously taken higher share of wallet from our anchor customers. So whether it's the domestic volumes or the export volumes. Secondly, we have added more customers. So it completely de-risks the whole thing by having a dependency on few customers. So like we have now almost 5-6 customers on the Android side, and we have almost 55 to 60% of the total opportunity pool available with us on the Android market side. So clearly we have de-risked. So even if for some reason some customer doesn't do well, then it has a complete de-risk kind of a portfolio where the other customers continue to do well. And customer acquisition is a continuous process. We look to add more customers in the coming months as well. So my sense is that should not be a challenge as far as mobile dependency on few customers are concerned. As far as margin outlook is concerned, clearly the more we get into components, the margin will continue to go up. So my sense is this year it should be broadly around 4% kind of levels, slightly higher or marginally lower than 4%. But clearly we think that it can expand by 20-30 bips by next financial year as our display business comes into the system, display manufacturing comes into the system, which is daily high double-digit margins for us, and also the other components that we're targeting on the precision components and the mechanical side.
All right. Saurabh, a final question then. Newer areas at the moment that Dixon is looking at and perhaps focusing on?
Yeah, so the biggest focus in the company is on the components. And the second thing is, of course, which we think is a core for us is the PCBA. So we're looking to manufacture looking for partnerships on the industrial side, automotive side. And the reason for setting up a campus in Chennai is we think that there's a large automotive hub there. So we are working with some brands. We are working also with a large global brand on the PCBA side. So again, that objective is to get into some high margin businesses as well. And that is also a core for us. PCBA is a core for us here.
One last question before we have to let you go. Budget reduced custom duty on mobile PCB to 15% from 20%. How will this impact a company like yourself? Is there any sort of medium-term impact, anything that you are factoring in that now has, of course, taken a setback on back of this or changed on back of this changes in custom duty?
So my sense is it doesn't move the needle for us because clearly we see that the mobile phones sold and consumed in India will be manufactured in India. There's still a big arbitrage on Indian manufacturing as against imports. And on top of it, there is also a PLI incentive. So I don't see this would any duty reduction on whether on the CBO of mobiles or the PCBA, it will have any kind of impact. Clearly, the Indian industry, and so is the case with Dixon, is we are requiring a scale. We have a large scale now, and the idea is now get into components to create that extra moat in that business. So we think the Indian phones will always be manufactured in India. In fact, in some categories, India will continue to export as well.
We'll leave it at that. Thank you so much for joining us and taking us through the company's earnings as well as what we can expect going forward. Well, that's the management of Dixon Technologies. The stock, of course, is continuing to advance in today's day of trade. But with that, we take a short break. And on the other side, we get you all the action from the F&O and the commodity space. Back in just a bit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy?
Welcome back. Well, let's talk about the futures and options space now. And for that, we have Bhavin Mehta of Dolat Capital and Ajit Mishra of Regulator Broking joining us on the show. Good morning to both of you. Thanks for joining in. Well, Bhavin, I'll start with you. At the moment, it does seem like 25,000 on the Nifty is just a tad bit distant. It's not very distant, but it does seem like it's going to be a hard one to take out. The Bank Nifty, on the other hand, it's also off its life highs. What's the way forward here?
Yeah, good morning. What we have seen over last couple of trading session is that we have been consolidating in a narrow range, not able to move past level of 25,000 on upside, but at the same time we are holding around level of 24,800 on the downside. Our sense is that given the kind of setup we have seen specifically in trade today, high probability that we will hold a close about 24,900. Last two trading session, definitely we have been observing a good amount of supply in the second half of the trade, but today I believe that this level of 24,900 given the option data points should hold on, remain a very good support for markets. As far as Bank Nifty is concerned, watching out for level of 51,500 on the downside now. If this level continues to sustain over next couple of minutes, I am anticipating good amount of unwind. That could probably happen around this particular strike, and move could be sharper on the upside, specifically given the expiry.
What about you? What is your trade on the index, Nifty and Bank Nifty?
Yeah, good morning, Samina. Good morning, Agam. So it's been like the second day, rather the third day that we are seeing that index is consolidating in a range with tone on the positive side. So that is what we have been seeing from last several months now, that after every up move, we see more of time-wise collection, consolidation. But the tone remains on the positive side thanks to the rotational buying across the heavyweights. So we are seeing a similar structure, and plus we have this new milestone also. So that's the reason why we are spending some time around the current levels. But broadly, the structure indicates that we are heading towards 25,100 to 25,400. So it's a buy on dip market. Now we have a higher base, means when it comes to the positional traders, 24,600 to 500 is going to be the zone where on every dip one should look for buying opportunity. And for the intraday traders also, we feel that there's a possibility that we might make an attempt to cross 25,000 mark in the later half of the session. So there also we can look for fresh buying opportunity in the index with 24,840 being the stop and 25,100 being the intraday target. Banking, on the other hand, still looks slightly sluggish to us. So until we break this level of 51,600 decisively, until then one should avoid any aggressive longs in the banking stock or banking index. But yeah, the tone looks sideways to positive to us in banking as well.
All right. Well, with that, let's talk about stocks as well. At the moment, perhaps we can take up, trading ideas from an expert. So, Ajit, coming back to you on stocks which are on your radar this morning.
So, Agam, first, the stock that we have in the list is AB Capital. So, the stock, after a decent retracement from its record highs, has formed a fresh buying pivot. And there's an intraday breakout, from cup and handle pattern also. The stock is holding up the short-term averages. So, everything looks aligned for a strong recovery from the current levels. The risk reward is favorable. So, one can go long with the 222 being the stop and 231 being the immediate target and positionally around 235. Similarly, that ID counters today, they are seeing decent traction, and among the mid-cap ID name, Tech Mahindra is showing decent buying interest. So we are ranking 1610 in Tech Mahindra. So with stop at 1535, one can go long in Tech M as well.
Right. Bhavin, what about you? What are your top recommendations this morning?
Yeah, so we are looking at good amount of strength on the metal counters in trade today. We are also witnessing something like JSW Steel breaking above both 20 and 50-day exponential moving average. The trade has been on a stronger side over last couple of trading session. Anticipating this stock to move closer to level of 960 on upside with the stop loss of 875. The second idea is from a chemical basket. This particular stock in the early morning trade had witnessed very good amount of drawdown. We are anticipating Navin Fluorine to move closer to level of 4,000 on upside with the stop loss of 3580, and overall the setup specifically in yesterday's trade was very positive. So watch out for this stock. Any short-term negativity ideally should be looked as a buying opportunity.
All right, so those are some trading ideas from our experts this morning. Well, on that note, going to thank both of them, Bhavin and Ajit, for joining us and taking us through their views on, well, of course, the markets and, of course, giving us a handful of trading ideas. With that, let's talk about commodities. And we now have Anuj Gupta of HDFC Securities who's joining us on the show. Anuj, good morning. Thanks so much for joining in. Well, perhaps we could start once again with your view on precious metals, gold and silver, technicals and fundamentals. How are they looking?
Good morning. Today we have seen again a geopolitical tension between Israel and Hamas, and due to this we saw a sharp rally in the gold prices, and we have seen a recovery in the gold prices. In last few days, due to cut in custom duty, we saw a correction in gold and silver prices. Now we have seen a recovery in the gold prices. So for today, we are recommending buy in gold prices around 69.50 with the stop loss of 68,880, and I'm expecting it may test 69,700. And international market currently is trading around $24.17 per ounce and expecting $2430 per ounce level. So trader can go for buy for today in gold prices. However, today we have also expecting some news on interest rate from the Federal Reserve meeting, which is held on today. So we can keep eyes on this meeting as well.
Right. Well, Anuj, that's the trade on gold and crude. Anything else on base metals that you're recommending or trading?
Yeah, definitely. We have also seen that copper prices are trading on an oversold zone on technical perspective. But yes, weakness in dollar and geopolitical tension providing support to the base metal. So we are recommending buy in copper as well around 795 with the stop loss of 780, and I'm expecting it may test 807. So the short covering may be there, and we are recommending buy in the base metal for intraday perspective.
Okay, well, that's base metals, and well, we can actually take a look at crude as well and how things are going on out there. Anuj, your view here?
Geopolitical tension, again seeing in the market. So, and due to this, we have seen a 1% increment since in the morning. So today, expecting a positive trend. However, there is a data of crude oil inventory which will be released today in evening. So this is also important. But yes, due to this geopolitical tension, we are recommending buy in crude as well. So one can buy around 6325 in crude oil August contract with the stop loss of 6270, and I'm expecting the target would be 6450 for intraday.
All right, Anuj, well, on that note, thank you so much for joining us and taking us through some of these commodities that are in focus here. We'll take a look at the markets at the moment. Now, remember that today is the weekly options expiry for the Bank Nifty. Maybe if we can actually talk a little bit more about that, because at the moment, we are looking at the Bank Nifty currently trading at around 51,600 thereabout. There is going to be some amount of resistance around the mark of 52,000. We have a good amount of writing around the 52,000 mark as well, and it specifically calls at that. On the lower end, naturally, the round figure, the round number that we're keeping an eye on is 51,000. So it's a 1,000-odd point range that we're keeping an eye on right now. But it does seem like this is the range within which, should we not see anything untoward or should we not see anything large that could potentially impact the markets, well, you never know. Well, we likely could see the Bank Nifty expire within this range. What could change this? One, of course, is the Nifty going above 25,000. If that does become the case, then naturally you will start seeing a pickup in a lot of these banks as well because of the entire index effect. And that could potentially be one of the other reasons why the Bank Nifty could go above the mark of 52,000. But again, it's a wait and watch. It does seem like 25,000 is turning out to be a bit of a barrier when it comes to the Nifty of late. But we're not too far away from there. We're just about 50-odd points away from there. So that's something that we'll continue to track as well. Again, on the whole, though, the markets are marginally in the green, actually more than marginally in the green, at least as far as the Nifty is concerned, well over 0.25%. There is a little bit of an underperformance in the Bank Nifty, but that's how things stand. So, of course, we'll continue to give you an update on that. Well, but I reckon that we have reached the conclusion of this show. So it's going to be a wrap on this edition of the F&O show. But also, Indiabulls Housing Finance Limited is now Samman Capital Limited. They say Jio Samman se, and keep watching NDTV Profit for all your business and stock market updates.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape.
You're watching the Small and Mid Cap Show. I'm Mahima Vachrajani. Well, we have an interesting lineup of managements for you today on the Small and Mid Cap Show. But before we move on to that, let's take a quick check on what the markets are doing at present. Both Nifty and Sensex have come off from its day's lows. The Nifty is trading within a tight range of roughly 100 odd points, currently 0.3% higher. The Sensex is also trading within a range of roughly 320 points, currently 50 odd odd points away from its day's highs. Let's also take a check at what the broader markets are doing. Well, the broader markets are doing a tad bit better than the benchmark indices. The Nifty mid-cap 150 is up around 0.7%. Let's also pull up the small cap 250 index. The small cap 250 index surprisingly is doing not doing very well as compared to both the benchmarks as well as the mid-cap 150. It's up only around 0.1%, so pretty much flattish as we speak. Let's also quickly pull up the Nifty contributors. Well, something that's really pulling up the Nifty today is ICICI Bank, HDFC Bank, Bharti Airtel and Asian Paints. Some recovery seen in Asian Paints today post its earnings. But something that's weighing down the Nifty is Reliance, Axis Bank, L&T, Power Grid. Let's also quickly pull up the breadth of the market. Well, the breadth of the market is skewed towards the buyers. The advanced decline ratio is roughly 2:1. It's roughly 1200 odd advances versus 730 declines. Let's also quickly see what the sectors are doing. Well, a lot of sectors in the green except for Nifty Realty and Nifty PSU Bank, but Nifty Pharma, Nifty Metal and Nifty Media are leading the pack. If we can quickly also pull up what's leading the gain in the Nifty Pharma today. A lot of good stocks. It's basically Suven Pharma, which is up 11%, which is leading the Nifty Pharma. Also Granules, Lupin, Gland Pharma, all of these, Torrent Pharma, all of these stocks in green. Let's also quickly see what the results that came out post-market yesterday are doing. Granules India, like we spoke, is up around 5%. Revenue is up 20%. EBITDA up 90%. Margins have significantly improved from 14% to the 22% mark. The stock is up 5.8%. Let's also quickly pull up Torrent Power. Good set of numbers. Revenue up 23%. EBITDA up 56% and net profits up 87%. The stock is trading 14% higher as we speak. But one more company that came out with its Q1 FY25 earnings is India Mart. And to discuss more about how the quarter has gone by and how FY25 is shaping up for the company, we're joined by Mr. Dinesh Agrawal, founder and CEO of India Mart, who joins us now. Welcome to the show, Mr. Agrawal. Give us some context as to how the quarter has gone by. A good set of numbers. There's growth in margins as well as net profit. Give us some color as to how the quarter has gone by and how do you see FY25 shaping up as a whole?
Yeah, so revenue from operations on a standalone basis grew by about 18% to 315 crores. And EBITDA margin has been expanded specifically in the quarter one because the hirings have happened a little later, but still it is much higher than the previous quarters. We plan to maintain this margin at about 33-34%. Other income has also shown handsome gains. So that is why the profit after tax is very high right now. In terms of the collections from customer also has grown at 15% to 341 crores. Cash generated from operations has also grown to 125 crores for the quarter. Currently, we have about a deferred revenue of about 1,421 crores and cash balance at 2,150 crores. Our paying suppliers have grown moderately by only 1,500 customers from 214,000 to 216,000.
Right. So, Mr. Agrawal, since you mentioned, your paying subscribers addition has been muted for this quarter, I want to understand that this is majorly on the back of churn that has been observed in the customers from silver monthly and silver annual packages because you've taken some kind of price hikes there. So, I want to understand that how do you plan to recover this loss that has happened in Q1 FY25? Do you see that prices going back to what they were before this, or is there some other strategy that you'll be using?
We are trying to optimize where we acquire customers from, which industry and which cities that we acquire customers from. We should acquire customers more in the profitable segment, and that is what we have been doing. On the churn side, yes, SME churns have been elevated on the silver annual and silver monthly level. However, we continue to see very healthy retention on the gold and platinum subscribers. As I told on the con call also, about 50% of the customers are in the gold and platinum. They account for about 75% of the revenue. So we continue to operate with a profitable growth mindset, and we will address the churn issue by moderating our algorithms to reduce the competition, as well as to increase the relevancy for the suppliers getting buyer inquiries.
Right. So then, Mr. Agarwal, how long do you think will it take for you to, come back to the normal levels as it was before?
Yeah, it is taking some time, so I'm not able to comment on that. We continue to work on that. Maybe another 2 quarters, but let us work closely on that and see how it shapes up.
Understood. And, you've also started cutting back on marketing expenditure overall. So I want to understand that will this overall impact your growth going forward?
No, marketing spend has been nil for many years now. We have not yet started any brand marketing. The last time we did any marketing spend was sometime around in 2016 or something. So we have not been doing any marketing spend. We have had organic and word of mouth growth. Our brand has been pretty strong on the in the market. So we have not needed any inorganic marketing or advertising so far. If we need be, we have enough cash and enough profits to do that.
Right. Mr. Agarwal, in this particular quarter, you've also acquired 10% of Baldor Technologies. So I want to understand that what are the kind of synergies that you're expecting from this particular acquisition, and what is the kind of revenue inflow are you expecting from this acquisition?
See, we have made a minor minority investment of 10% into ID5. They run a very good digital KYC and digital onboarding process. Apart from that, they have a very good bank statement analyzer and things like that. So we are looking at help in the process of merchant onboarding, as well as buyer any kind of a user fraud detection going forward, because as the digital adoption is growing, these kind of technologies would come at help at India Mart also. And we also believe that in the long run, there could be more synergies possible going forward.
Right. And Mr. Agarwal, for FY24, you'd roughly done revenue of 1,200 odd crores, and your net profits were approximately 335 odd crores. So give us some, idea as to what is your target for FY25 in terms of top line and bottom line.
So going by the revenue run rate, currently we are at a revenue run rate on the consolidated basis of about 331 crores. So this looks like if you quadruple it, because most of our revenues come from collection from customers, and collection from customer has been growing at 16, 17, 18%. So similar growth is expected in the upcoming quarters also. In terms of cash from operation, or in terms of profit, I think we are doing a lot better than previous year. Previous year we have done about 28% overall EBITDA margin. This year we are expecting at about 33% overall EBITDA margin.
Okay. And, I want to understand that, this quarter you've done EBITDA margins of 36%. So overall, you're expecting a 33% EBITDA margin. Why is that dip? One thing, what will be the overall levers that will maintain the margins at 33%?
Yeah, so last year we did about 28%, and last quarter, January, JFM quarter, we have done some gains because of the certain optimizations that we have done. There is a natural leverage that is coming as the revenue is increasing. The fixed costs are coming as a percentage lower of that. Also, in the April, May, June quarter, because the hiring typically happens towards the end of June and beginning of July, based upon the college outcomes. So we are expecting this 37% margin to dip further to maybe 33, 34%.
Right. And Mr. Agarwal, with respect to your internal targets for the entire FY25 for certain operational metrics like unique business inquiries, supplier storefronts and traffic, what are the internal targets that you've set for yourself?
So we continue to maintain our internal target at 20 odd %. And depending upon, because it's a marketplace and lot more moving parts are there, we are a horizontal marketplace. So daily unique business inquiries have increased 14-15% in the last 2 quarters, and we would want to maintain this at the similar levels. In terms of the supplier, total supplier base, if you see, we have about 8 million total supplier base, and that grows slowly and slowly because we are adding about 0.1 million supplier almost every quarter, so about 500,000 supplier in the entire year. In terms of registered buyers also, if you see, we increase the registered buyers by about 3 to 4 million every quarter, so about 10 to 12 million every year.
Right. Well, Mr. Agarwal, thank you so much for giving us those insights on India Mart, and all the best for the entire FY25. But with that, it's time to slip into a short break. But up next, we'll be joined by the management of Jindal Stainless and Sapphire Foods. So stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
When you talk about somebody being empathetic, okay, of course that depends on, again, which stage of your life you are on. Okay, so if, you've kind of finished the Maslow's stage of roti kapda makan that you need.
Sure.
Now you've done with your savings, and then after that you say, okay, why am I saving all this money? Let me start giving it away. Let me involve it in causes.
Self-actualization.
Okay, self-actualization. So that is, of course, a certain part of the personality.
And rather than, giving on an ad hoc basis, which might end up, depending on the amount of resources that you're looking at, it might end up bringing these people into trouble. So have a set group of people or causes that you're donating to, and you have kind of a plan for that also.
Sure.
A philanthropy plan, whatever amount you want to give, so that could probably help in the long run.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching Market IQ and NDTV Profit. Let's take a quick look once again at where the markets are. The Nifty 50 as well as the Sensex continue to hover around the 24,900 odd levels for the Nifty 50, and on the Sensex the 81,600 odd levels, but we're actually closer to touching the 81,700 odd mark on the Sensex. Both the Nifty 50 as well as the Sensex currently trading with gains of almost about 1/3%. The Nifty 50, of course, still, a little bit of resistance as it veers close to the 25,000 mark, but clearly unable to touch that mark. What's performing particularly well currently is, of course, names like L&T, Eicher, ITC. M&M results have just come in, and the stock is reacting fairly well at this stage. We'll continue to see how that's performing. It's currently up by almost 1%, and we're waiting for the management commentary on that one and the guidance that the management gives for going ahead. But we are in the middle of a whole host of earnings, and quite a few companies have reported their quarterly numbers. What's it looking like so far? How have these companies fared? And what are brokerages making of the numbers that have come in? Mahima joins us to tell us a little bit on all of that. Mahima.
Right, Pallavi. So just to give you context, up till yesterday, around 19 Sensex companies, 24 Nifty 50 companies, and 664 mid-cap and small-cap companies have come out with their earnings. And two interesting brokerages notes on how the earnings have been so far. I'll start with Citi. Citi is saying that Q1 earnings are largely in line with the estimates, except for the OMCs, which are not doing very well. The EBITDA and PAT growth has been around 7% YOY, respectively. And industrials have delivered earnings with a beat, and energy are among the key misses. And June Nifty target is at 24,400 mark is what they're saying, trading at a multiple of 19 times. Now they're saying that they're overweight on PSU, utilities, defense, industrials, banking and insurance, and they're underweight on consumer discretionary, IT services and metals. They've also revised the EPS estimates for a couple of names. To name a few, Interglobe and PNB were raised by 17%, and GSW and BPCL were cut down by 37% and 14% respectively. Now MS has also come out with a similar note as to how the earnings have panned out so far. Well, marginal beat in the top line is what they're saying. Margins have expanded for 3 out of 8 sectors. Industrials, gas utilities, consumer discretionaries and technologies have led beat, and they have also revised EPS estimates for a couple of names. Ashok Leyland, Coforge and Interglobe, they've revised the estimates for 7% and 5% respectively. And for IDFC, Cyient and SBI Cars, they've cut down the estimates by 21%, 15% and 11.7% respectively. So this is the overall view of what brokerages are saying for the earnings that have come so far for Q1 FY25.
All right, thanks a lot for that very comprehensive update, Mahima. But let's take a step back from the markets and shift focus to an update on the landslide that we've seen in Wayanad in Kerala. The death toll in the massive landslide has climbed to over 143, and hundreds are feared still trapped under the sites as rescue operations continue. The terror of ceaseless rain showers is expected to continue in Kerala after the IMD's prediction of heavy rainfall for the areas. The landslides that engulfed so many lives still has people trapped under it, and several families have reported that their loved ones remain untraceable. Multiple agencies, including naval teams and helicopters, have been assigned to assist the NDRF. Our thoughts with those affected, and moving on to some of the global news that has been trickling in recent hours is also the Hamas chief Ismail Haniyeh and one of his bodyguards that are said to have been killed after their residence was targeted in Iran. This was according to the Palestinian group in a statement today. Haniyeh was in the Iranian capital to attend the swearing-in of Iran's President Masoud Pezeshkian, and as per Hamas, Haniyeh was killed in a treacherous Zionist raid on his residence in Tehran. Details of the circumstances of his assassination are currently awaited. An important PSA today is the last day for most of you to file your returns for the last financial year. Do not forget to tick that off your list, and do remember that you need to e-verify the returns at the end or the process remains incomplete. That's all we have on the show for now. But remember, India Bulls Housing Finance Limited is now Sammaan Capital Limited. Jio Sammaan Se, and keep watching NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could.
Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah. The next maybe 15 to maybe 25 minutes, depending on when some of the earnings pressers come in, we'll try and address some of the key aspects around mutual funds, try and take in some queries which have been sent across as well. But we kickstart the show with an innovative product that is coming in from the SBI stable, SBI Mutual Fund stable, which is an NFO, which is an SBI Innovative Opportunities Fund. Now, it's a nice name, it's got a good ring to it. The question is, what does it mean for an investor? To talk about that, we have from the fund house itself, Prasad Padala, fund manager at SBI Funds Management. as also somebody who looks at mutual funds day in, day out for a living for a number of years, Kshitij Mahajan, Managing Partner and CEO at Complete Circle Wealth Solutions. Gentlemen, both of you, thanks so much for taking the time out and being with us. Prasad, let's start off with you and talk about this fund. What is this fund about, or the NFO about?
Yeah, sure. So it is a thematic fund. And if you look at innovation as a theme, so it is actually happening around you. So if you look at every sector, every region, it is actually going through innovation. And there are some players who are innovating and they're creating market value and taking market share away from the incumbents who are not innovating. And so, if I have to quote Peter Lynch, so invest in what you see, right? So this is actually happening around us. You see the value migrating from the non-innovating companies to innovating companies. And for example, if I have to, let's say, give examples of, let's say, Nokia or Kodak, so they failed to innovate. So they failed to see the trends, emerging trends, and then slowly, you know what happened to them. And on the other side, so there are companies like Netflix or Tesla. So these are disruptors who came up with these innovative business models and then completely disrupted what is happening. And then even the incumbents were forced to adapt to the business models that these companies have brought. And in the process, they also created a lot of value for the consumers like you and me. So I think the trend is very obvious, even if you look at how it played in the US. I mean, the kind of stock returns that these companies have generated is phenomenal. Or if you look at how the overall index constitution itself has changed over the last 10 years, where 10 years back, you have many of these banks, autos, oil companies, manufacturing companies in the index. And now, if you look at S&P 500 index in the US, almost 30% is contributed by these innovators. So our firm belief is that in the next 10 years, similar trends will emerge in India. So there are a lot of business models emerging around us, whether you talk about food delivery, cab hailing, or you talk about quick commerce, or consumer companies like going direct to consumer. So there are a lot of these emerging business models that are making money and creating value for consumers. And our firm belief is that if you look at the index composition 10 years down the line, so you will see many of these innovators in the index. So the idea of the fund is to actually play these trends early and then generate value for our investors. So that's the broad theme of the fund.
How different would it be from what you normally do in any of your other funds, Prasad? Because every fund manager would want to move out companies which are not innovating, not staying relevant, and therefore might not have good earnings growth, and taking the other one. So how different would this be from what you normally do?
Sure. Like you said, so there could be a good overlap with other funds because many of these, obviously as an equity investor, we would want to stick with the winners. But think of it like a theme fund where 100% of the fund will be invested into these companies. So let's say if I have to talk about, let's say, a multi-cap or flexi-cap fund, so you inherently think about index weights. Although let's say a flexi-cap doesn't have any Sebi limits, but internally we have limits from our risk team, which actually forces you to think in terms of index weight, whether I am 5% overweight or 5% underweight on a sector. So that is how the construct would be. But this would be a completely bottom-up kind of a portfolio. I think that way it is more similar to something like a focused fund, but with a wider universe of stocks. And then, in terms of wider number of stocks, and also 100% focused on the innovative thing. So the construct will look very different. I mean, if I don't see a lot of innovation happening in some of the heavyweight names, then we'll be excluding those stocks. So that way we'll be having much more weightages to these innovative companies, which currently have very less weight in the index. So that way, it will be like a very actively managed portfolio. With the construct will look very different from any other multi-cap or flexi-cap kind of a portfolio.
Okay. Kshitij, great having you as always. And just trying to understand, when you hear these things about an innovative ideas fund, right? Or the description that has been given by SBI, MF and Prasad right now, talking about how the construct might be different. How convinced are you about NFO of something like this? But I've seen usually that people say that when it's an NFO, bide your time, let the fund prove it a little bit, etc. and stuff like that. There's a bit of a uniqueness to this, but how would you think about it?
Neeraj, always a pleasure to be with you. Hello, Prashant.
firstly, it's from one of the good houses. The offering is, but if you actually see where you can fit this in terms of investor basket, is where you don't have any, let's say, that 10% of sectoral or little riskier allocations, or let's say small cap allocations. I'm not saying this is as risky as small cap will be, but as if you already have that type of portfolios, focus funds, or that type of portfolios in your basket, then there is no need for anyone to add. But innovation, as I agree with Prashad, that a lot of companies, lot of like in cybersecurity, we don't have much companies. Look at the likes of businesses which are there in Nasdaq, which are innovating and coming day in and day out. Many threat-oriented companies, we don't have any innovation. When we are upgrading our lifestyle with regard to the houses in which we are moving in, it's a different lock mechanism. And so you'll see a lot of listed play coming in that part also. So I agree that innovation is going to happen as you have stepping up your per capita GDP from $2,700 USD from 5,000 or 6,000 USD. So you have all these things coming your way in this country also, and listed play will come. But I feel that one should look at participating in this fund. If you have that gap within your part, where we see you can take 10 to or maybe 5 to 10% a risky allocation, or allocation which you want to experiment with. So this is something, a basket where you can fit in that fund into that basket. Sorry, that fund into that basket. So that's what my view is, because I know that, and the process which Prashad has explained is really good, that the way they are going to look at the businesses and they're going to fix it. But if you already have that basket which is crowded with, let's say, a sectoral or little riskier or cyclical some fund, then you have to figure out whether you want to have this fund or not. Otherwise, if you don't have, then I think people who are coming up the curve in terms of their risk appetite, they can look at this fund, and who have that gap, they can also look at this fund.
Okay. Okay, sound advice. Now, Prashad, let's assume that based on what Kshitij has said, based on your arguments about what your fund is like, some people are thinking of doing in the satellite part of the portfolio a thematic fund like the ones that you have. What are the kind of returns that an investor can expect? And would you believe that it is ideally should be a part of a satellite portfolio, and therefore the risk appetite of the investor should be high? Would love to know your thoughts on both of these.
Definitely. So first, let me clarify. So when we talk about innovation, it's not just about new age companies. I mean, we see a lot of innovation happening in the existing companies and incumbents also. So it will be a fair mix of new age and existing companies. And in terms of
Prashad, that was my point, right? I was just in my first question I asked you. I mean, I would believe that every company, if they don't innovate, then they would be thrown out of the window anyways, right? On the business side. So how will that be different? Which is why I started off asking with. But no, but thanks for making that point. So please continue.
Right. So I mean, so think of it this way. So let's say, I mean, you look at Nasdaq. Nasdaq versus S&P 500 in the US. So Nasdaq is more. I mean, although you talk about tech, but the common theme I think across most of these companies is the innovation. And so I mean, if you look at the long-term history, so Nasdaq has outperformed S&P 500 by at least like 5%. Of course, there are periods when there are ups and downs. So I think you should think of you are investing into Nasdaq in an emerging area where it is still on a emerging mode, where, I mean, you still have many of these companies yet to come into the market. So that way, I think we are slightly early into this theme. So it is still an emerging field. Many of these business models are yet to mature. But again, with uncertainty is there. But again, I think the returns are equally proportional. So think of it as like a slightly higher in terms of volatility risk, but the returns are, I think, proportionally higher. So I think it should definitely be as a part of, I think, investors' portfolio, whether it is a satellite to start with. But I think 10 years down the line, I think it will be the core. Like I said, I think even index composition will actually different. And then you will have these names in every index and every portfolio. So right now, the index composition is like very, very minimal. So even I think, like you said, even if I look at any of the other funds, I think overall, as a percentage of overall portfolio, there will be very like a minuscule allocation which is allocated to these kind of companies. So that is my take on it.
Sorry, Prashad, but just one quick, I don't know if I missed it, but I didn't get the answer to what is the kind of return that an investor should expect if she or he is investing in this fund?
Sure. So let's say if the market is giving you 12-13%, I think you should at least, I think even if the passive portfolio should generate at least like a 5% higher, that is at least like close to 18%. And I think as an active portfolio manager, we'll try to generate some alpha. So I think our internal expectations is even higher, but I think at least we should go with around 20% kind of a return.
Got it. Remember, viewers, this is with a caveat that if the market generates 12 to 13%, so just keep that in mind. I don't want viewers saying that NDTV Profit पे सुना था कि 20% मिलेगा और नहीं मिला है. But no, I wish you all the best for this, Prashad, as well. And before I ask Kshitij the final question, Prashad, what are the risk factors to something like this?
Yeah. So risk, like I said, so many of these business models are still emerging. If you talk about the new age companies. So inherently, it comes with a higher volatility. So there could be a risk from new play participant entering to the market, or there could be a regulatory risk like what you saw with the Paytm, or you could see like a technology change which could be disrupting things. So inherently, I think it will be more volatile than a regular portfolio. But we would be managing it by having a good mix of both new age companies and established companies who are innovating. And like I said, with it would be a higher risk portfolio, but I think the return attractiveness actually will compensate for that.
Okay, Kshitij, I mean, 20% a tall ask. I mean, I would take it with both hands if funds are giving 20% returns, right?
So I think markets have been really good, but they have been really bad in terms of setting up the expectation since last years. And I urge this, and I'm very open in telling this, that was your expectation from market at any given point in time should be 11-12%, as said by Prashad. Any active fund, if it's giving you 14-15% return, also your job is done. So post-tax, you are at 13.5%, and was if food inflation is at 8.5%, and you are handsomely beating food inflation by 5%, and you're compounding at that 5%, your job is done. You are creating a wealth for yourself. So I'm saying markets have been good. And I'm sure they have a strategy and a plan in place, and they must be looking at generating that type of alpha. Because India is capable of having businesses which can generate 22 to 23% earning growth year on year, and with expanding profitability margin of 7-8% at least. But as I said, what they can generate is very good. But the real expectation for client, they should look at 14-15% from any multi-cap or diversified portfolios. And if you are going to achieve that, I think your work is done. So what we are seeing in last 4 years or last 15 years return, as on date, it looks very good. But any comparison before COVID is the right comparison, because there you will get a realistic figure that what type of return one can expect from capital markets. So that's my worry, is that people should not just extrapolate the expectation or their returns expectation from markets. Prashad's job is to do what is right, and he will do that. But you should be happy with 14 to 15%. What my suggestion here is, anything which is coming above is totally a bonus.
Yeah, and if you get the bonus, the likes of which Prashad is talking about, and I mean, with the kind of product that they have in offer and they aim to, hopefully they'll get it year after year, and that'll be great for investors. So Prashad, we wish you all the best in this endeavor of yours. Thanks so much for taking the time out and speaking to us and explaining this NFO. Good luck with the new fund offer.
Also, just one point I want to clarify. I think you should not look at like a linear 20% kind of return every year, because this is more like there will be years where some strategies underperform, and this happens a lot with this kind of a theme. So you should look for more like a long-term capital over a 3-year period, 5-year period.
Yeah, I'm glad you mentioned that, because returns anyway in equities, viewers, would not be linear, and in funds like these, maybe more chances of they being non-linear. So Prashant, thanks for putting that as well, but all the best with the NFO.
Okay. Thank you so much, Neeraj. Thank you.
All right, viewers, stay on. We need to slip into a break. Kshitij Mahajan stays with us. We talk about a couple of things, including try and take some queries that have been given over the last 2 days. Stay tuned.
When the whole day passes like a blur, the news just whizzes past. and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Back with the mutual fund show right here on NDTV Profit. By the way, some numbers on your screen. Need to mark Z Entertainment for the kind of numbers that they've posted. Revenue is up 7%, which is fine, but it's the bottom line number which is looking impressive. Now, are there one-offs or is this operational? Remains to be seen. I don't have those numbers as yet, but the net profit number looking very strong, while the revenue has been 7% higher, as a result of which the stock is up and about. Now, I repeat, viewers, need to see whether this is operational or are there one-offs. I'll try and pull it up on my laptop as well. But EBITDA too up 70%, so it seems to be operational, as a result of which there is this net profit versus a loss. Very impressive set of numbers. Don't know if the stock will die down, but remember, media's had a very good last week too, and Z is building on from there. So, well, decent show. Let's see if there is more in store. Okay, now on to the slightly more less glamorous return conversations with Kshitij Mahajan, but very important ones at that. Kshitij, I've been wanting to understand in a clear fashion from somebody who can advise our viewers, who used arbitrage funds as a means of saving for targeted 3-month, 4-month, 6-month, or 11-month time horizons. I needed this money, I'm doing an SIP in an arbitrage fund because it likely gave me great returns up till a particular period of time, or maybe even longer, but I'm guessing less than 12 months was probably ideal. With the changes that have happened in the budget, would you choose an arbitrage fund to make these short-term time-bound savings, or would you use another route now?
Neeraj, well, just to make it simple, arbitrage fund has the same taxation as of equity. So short term is your 20% and long term is 12.5% after 1 year. That's why earlier it should be 15% and 10%. That's why it used to be one of the key aspects. Now, right now, one has to understand where you can actually add this arbitrage kitty, because now the taxation on the fixed income also less than 2 years has become 20%. It's been change on the fixed income side also, where we used to have arbitrage fund reserve as your ultra short term, or let's say short term funds, or let's say liquid fund for that matter. So just to clarify, in the beginning of a month, you normally get a spread from a fund house. People who are doing themselves, they can approach fund house, or they can Google it, or they can speak to their advisor if they are doing through their advisor. So you get to know what type of spreads are there. So how much money you are going to make in a month, you normally come to know by 3rd or 4th of every month. So on an average, they have been really a good run for arbitrage fund, let's say last 1.5 years, where you have 7.5%, 8% return also on an annualized basis. But if you actually see now, you have to see that curve is flat on the fixed income side. On an average, you get 6.5% to 7% return. And if arbitrage is capable of giving you 7% plus return, then only it makes sense to participate in arbitrage. One. Second, if you are not clear that when you will require the funds, let's say you are not sure whether it's a year or 12 months or 14 months, then again arbitrage become much more important and makes sense to participate in arbitrage, because as you cross 1 year, long-term capital gain comes to play for arbitrage, and the taxation is 12.5 vis-a-vis 20% on the gain. So let's say if you are having 7% on an average return, then you take home close to about 6%, 6.1% return post-tax on arbitrage fund if you stay over more than 1 year. But less than 3 months doesn't make sense. It can be volatile sometime, so it doesn't make sense to have arbitrage fund. And less than 3 months, you can have a liquid fund, and or let's say 3 to 4 months, you can have a ultra short-term fund. But more than 3 months to 6 months, if there is a visibility, or let's say more than 6 months, then one should look at participating into arbitrage.
Sorry, Kshitij, but even more than 6 months, the taxation still doesn't change, right? But you are saying that the other, even post the taxation, arbitrage funds might be better.
Yes, more than 6 months also doesn't change. After a year, it changes. But I'm saying post that also, arbitrage will be. Right now, the spreads which are coming is much better. Where you see the spreads going down, which I said in the beginning of a month, you come to know, then you can take a call that whether you want to stick with this category or the other category. The only catch between arbitrage and ultra short term on the dynamics on which they work is that the redemption in arbitrage is T+2, and in ultra short term or short term on any fixed income fund is T+1. Second, there is no exit load when it comes to else than liquid fund in any of the fixed income fund. Normally, there is no exit load in most of the categories. But in an arbitrage fund, there is exit load of, let's say, in 1 month or 3 months. In some fund, there is exit load. In some funds, it's 15 days. So these are the two different things. So one is if you need funds at a very short notice, then and you need money in next 6 months' time, then maybe you can look at, you can plan things, or you can look at ultra short-term category if yields are not attractive, because you can get your money in T+1 time. So that thing also you have to take into consideration while participating, that the redemption for arbitrage is like equities.
Okay, Kshitij, now I have some queries for you. The first one is a fairly simple one. Sahara Nagraj, age 19 years. The query is, Sahara has received a security deposit of 12,000 rupees, looking to invest this amount into mutual funds. Where can Sahara invest in? I do not have other details about what is the goal, etc., or whether it's fixed or willing to take equity risk. Okay, I think I'm told M&M pressure has started. We need to cut into it. So let's just go across to the Mahindra Mahindra management.
Here, which again, in an industry-like form, is a pretty tough act, and a lot of kudos to the team to drive that margin expansion. Mahindra Finance, in addition to the asset quality and growth, technology is a key part of our turnaround. And we have 100% of branches now under a central processing system with a much better tech system. A lot of work has been done on technology. We aim to be the best in class in the industry, and we are well on our way. That's the remaining year and a half or so of turnaround that Mahindra Finance will undergo, is largely from a tech standpoint. And here you see almost 500 crores of profit for the quarter for Mahindra Finance. And this is a pretty remarkable number. We're at 497 right now, just shy of that 500 crore number. Tech Mahindra, the new organization's focused on service delivery. The demand signals are still mixed. You see good numbers from a previous year comparison standpoint, but again, to be very transparent, previous year was a low point, and therefore we look more at, are we on track with the turnaround plan as compared to the numbers of the previous year. Logistics is on a better track now, though not completely out of the woods as yet. It's executing far better, and the express business now, despite showing losses this quarter, is on a very good track. And as committed by the management team there, we expect that business to turn around by the end of the current quarter that we are in. Revenue is up 10%, but EBITDA has been hit by the express business and therefore is down as compared to the previous year. On holidays, you see very good progress. Again, occupancy is robust at 90% plus. Memberships continues. We're now at 300,000 plus total members. and average unit realization is up 31%. Real estate, again, very healthy addition in GDV, strong pre-sales momentum, and that's up 3x compared to last year, and a strong start to the year for our industrial cities as well. So we've got our listed growth gems on a very sound footing, and our unlisted growth gems are also on track in terms of where we want them to be. So on balance, very strong operating performance, leading to a consistent delivery on our commitments. ROE greater than 18%. We are at 19.4 for this quarter in particular, and EPS at 29 for this quarter, but on track for long-term 15 to 20% EPS growth as we've committed. With that, I'd like to invite Rajesh to talk about the auto and farm businesses in more detail.
Thank you, Anish, and good afternoon, everyone. I'll start with farm equipment, and Anish spoke a little about this. We grew our volumes 5% in a quarter where the industry was flat to slightly negative. Exports growth was very strong at 45%, and this was our highest ever quarter volume. And we reached a market share of 44.7, which was a 1.8 share point gain, which is what enabled us to get the 5% volume growth. You can see a consistent improvement in our market share with time, and quarter one was one of our very healthy market shares. We're seeing some green shoots in the tractor industry. We're not changing our annual forecast as yet, but the green shoots are as follows. The terms of trade and price realization both are becoming more favorable for farmers, so that's a positive enabler. Positive monsoon outlook. July has been pretty good in most parts of the country, so most critical markets have been impacted positively, especially the west and south. Improved government spending, both state and central level, in agriculture and rural both.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there.
Hello and welcome to NDTV Profit. You're watching Earnings Edge and I'm your host Mahika Bairve. Well, we have an interesting set of companies lined up for you in today's edition of Earnings Edge. And up first is a real estate company called Arvind Smart Spaces. And joining me is Anushi Vakharia, who will, take a lead on this interview. And we're going to have a conversation with Mr. Kamal Singhal, who is the Managing Director and CEO at Arvind Smart Spaces. Good afternoon, Mr. Singhal. Well, up first, I want to start with, margins have slipped to the 12% level versus the average 24 to 25% range. I want to understand what exactly went wrong here.
Yeah, sure. Good afternoon. Yeah, you're right. For the quarter, the margin looked low at 12% as compared to 24-25% that we've been historically reporting. But this is the quarter-on-quarter variation. The way accounting standard works in real estate is that you book top line against the inventory which is completed from construction standpoint and sold, etc. And the expenses obviously pertain to the current quarter in terms of the growth and everything else that is happening in the company. So the moment you book lower top line based on these accounting standards, the margins start looking lower. But for the year as a whole, we are confident and we are sure that we'll catch up with this and it will average out 4 quarters put together.
Hi, Mr. Singhal, Anushi joining in here. Now, I want to understand more on your pre-sales and the collection guidance. You've continued to maintain a 30 to 40% guidance, and even if you look at the quarter's strong performance here, I want to understand going forward for FY25, do we see any kind of revision in this guidance, or this is what we expect to continue for this year as well as the next year also going forward?
Sure, yeah. Pre-sales is one of the most important parameters that one tracks in real estate. And we have been growing at 30 to 40% in most important parameters operations wise. We are sure that we should be able to achieve 30% growth once again this year. We did 1100 crores last year of fresh sales, pre-sales, and we should grow to the extent of 30% this year as well.
Got it, Mr. Singhal, 30% growth in your pre-sales. I also want to understand, more on the unrecognized revenue of over 2,300 crores. By when could we see this getting converted?
So most of the projects that we are doing have a lifespan of anything between 2 to 3 years, 4 years maximum time. All this should enter within a period of 3 to 4 years from now into the books of account. Of course, it depends upon the launch trajectory or also the sales trajectory, but on an average speaking, 3 to 4 years is something that we should take to get all these numbers getting into the books of account.
Okay, so 3 to 4 years is the timeline that we should be watching out for. Now, coming to your project launches, I want to first understand what are the number of projects that we are expecting to launch in this financial year. And coming to your business development side, what's the total number that we are looking at? We've clocked in about 410 crore. Again, are we in line to achieve the 5,000 crore mark that we are seeing for the whole FY25?
Sure. About launches, we should look at anything between 6 to 7 launches this year in the remaining part of the year, out of which 3 major launches are planned, which are new launches, greenfield launches in the city of Bangalore and Ahmedabad. And otherwise, as we discussed before, anything between 2,300 crores to 2,500 crores is the worth of inventory that we should be launching in the remaining part of this year. That's one. On the investment and the fresh pipeline side, yes, we did just about 400 crores this quarter. But then in any case, the entire pipeline creation is a little more oriented and skewed towards H2. And we are sure that we are on track to create 5,000 plus crores of fresh inventory for the year as a whole in terms of BD, fresh BD.
So 5,000 crore and more of these are skewed towards the second half of the year. Understood. But how are we planning to deploy funds for this one? Can you expand more on that front?
Sure. I mean, to create 5,500 crore rupees of fresh inventory, we need to invest 800 odd crores in totality. We have 3 sources of funds which are lined up and kind of closed. Internal accruals have been very strong last couple of years. In fact, we've created more than 800 crores of free cash flows from the operations itself, and that trend continues. So that becomes one of the important sources to fund 800 crores of total investment in the next few quarters. The balance sheet is absolutely debt free. In fact, we have a negative debt of around 50-60 crores on a net basis at this point in time. We can easily raise debt to the extent of 300 crores to 400 crores within the conservative limits of leveraging, so to say. So that's another. And we are working on that. By the end of this year, we'll see some reasonable debt start showing in the balance sheet. And the third source, of course, is the HDFC platform, which is in operation. This is the second platform with HDFC we are doing, which is worth 900 crores, out of which almost like 500 to 600 crores is still left to be committed and deployed. So these 3 sources put together puts us in a position that 800 crores should not be a problem in terms of investing into the fresh pipeline for the year.
A little bit increase on the debt side, but within the optimum range. Mr. Singhal, I also wanted to get more color from you in terms of the pricing growth and the inventory trends that the company is seeing.
So pricing has been pretty stable, healthy. We saw decent kind of increase in prices last year, and that meant that despite increase in cost, the margins were intact. We see prices remaining very stable in this current year as well. Commodity prices and the cost is quite stable for the last few quarters already. In that sense, we are fairly okay on the margin side and price side as well. So they are expected to be remaining pretty stable from here onwards.
All right, and now if I want to shift focus to the kind of projects that we have, of course, we divide it into the horizontal and the vertical part. But I want to understand, while the majority of it has been on the horizontal part, if we see the last year trend as well, is this going to continue in FY25 as well? And can you give us a breakdown on the mix that we are aiming for between the two sides, and what is the differentiating factors here in terms of IRRs, the cash flow conversion, and all that? Can you expand more on this space?
Sure. We have been a little heavy. I mean, of course, we are heavy on horizontal side post-COVID specifically, and we've launched quite a few benchmark projects, if I may say so, in the city of Ahmedabad and also in Bangalore in horizontal space. We have been traditionally doing quite a bit of vertical work, apartments, etc. in Bangalore, but Ahmedabad has generally been horizontal. Post-COVID, there was a specific opportunity, and there was a clear preference that customers showed in terms of having weekend homes, recreational homes, and properties that are a little bit in outskirts, but which gives you a little more space to live and enjoy. So that was an opportunity we worked on, and it has paid off very well in terms of returns, cash flows, IRRs. They are significantly better than our vertical product, which is construction heavy and construction funding heavy. To that extent, the company has created a very, very special niche for itself, both in the city of Ahmedabad and Bangalore, and will continue to do that. So that's one strength which we've developed over the last few years, and will continue to build on that strength. But having said, vertical is as important as horizontal. Coming quarters, 2 or 3 quarters, we'll see a lot of investments actually going into vertical projects. Bangalore will see quite a bit of action on that front, and we are aiming to get almost 50% of the planned turnover coming from, or the fresh pipeline coming from vertical projects, mainly targeted in the city of Bangalore going forward.
All right, so Bangalore is what we are aiming forward, but are we looking for any addition of other geographies as well? Because our core focus has remained on 3 of the markets that you spoke about, but any new cities that we are targeting, or we are going to expand in the continuous space as we move forward?
Sure, yeah. We are right now almost 50-50 on the long-term basis between Ahmedabad and Bangalore. These two markets have always been our strengths, and this is where we are operating. But going forward, medium term and short term, we definitely want to enter reasonably into the city of MMR and Pune put together. This is one additional region that we are targeting. We did one project in Pune, which has done well, and we've learned how that market dynamics work, how the regulatory environment works, the business environment works, etc. Having wetted our feet, now we are in a position to invest further in the city of Pune and MMR, and you will start seeing some actions happening in the remaining part of this year between these two markets of Pune and Mumbai, along with, of course, Bangalore and Ahmedabad, which are our current markets.
Got it, Mr. Singha. You know, the company also has several projects under approval as well as under planning right now. Could you maybe give us, details on certain key projects that have made significant progresses, and maybe you could see benefits coming in the next 2-3 years?
Sure. Apart from the existing large ones, which are uplands, which are some very large development in the form of horizontal developments in Ahmedabad and Bangalore, we have 3 very major projects lined up for this year launch. One is a project at National Highway 47 Ahmedabad, which will be in excess of 500 acres. This is one of the very special projects for us in terms of size, scale, and the offering. This should be launched this year. Apart from that, this year should see us our presence in Surat as well. This will be our first project in Surat. More than 250 odd acres, 300 acres of project is being planned there. Land deal is already concluded. Right now, the project is under approval and designing, etc. We should see that project also getting launched this year. Apart from that, one large vertical project in Bangalore is also lined up to be launched in next couple of months. It's situated at Bannerghatta Road in Bangalore, which is South Bangalore. So these 3 are the major ones lined up imminently next 3 to 4 months time from now.
So Singhal, I want to come back to the second project that you mentioned about the Surat one. Are we expecting it to be launched in the Q2, Q3 onwards, or that is the first phase that I'm talking about, or is it going to be the later part?
So we, reasonably speaking, we should see that getting launched around Q3 of this year.
Around Q3 of this year. And what is the size, if we had to see, of this project?
This project should be in excess of 1,000 crores of top line.
Absolutely.
Mr. Singhal, I also wanted to, maybe get more perspective on, the project classifications. Obviously, residential, 98% of the project classification. Commercial is on a very minute size. Do you see this growing ahead, or is the focus going to be in residential?
So the focus of the company is clearly on residential. It's going to be remaining the same. We are a residential focused company historically, and this is how we are planning it to be. The commercial side of it, the small component that you see, is more like an adjacency to a residential project and nothing else. So clearly we are investing in residential, and this is what the strategy is for the medium term.
Got it. And Mr. Singhal, before we let you go, one last question. Now, within the residential space, you have different segments, especially the mid-market, affordable and luxury. Is there a certain kind of strategy or a targeted mix going forward?
I couldn't hear this properly. If you could repeat the question, please.
Yes. Within the residential, you have sub-classifications like luxury, mid-market and affordable. Is there a targeted mix that the company is aiming at for the near to medium term?
Sure. In terms of affordability, we are broadly present in mid, upper mid and luxury segments. We are almost not there in affordable. Affordable is something that we clearly are not focusing at this point in time. But, even the market is taking more of upper mid and luxury segments for the last few quarters. In fact, this is where most of the action is happening. In fact, the overall proportion of sales in terms of number of units sold in the entire country, or at least in the 8 major cities of the country, you see a clear trend of mid and upper mid segments doing pretty well. This is our focus. This is our most important segment, and this is what we strive to grow in.
Yes. Well, thank you, Mr. Singhal, for joining us, and we wish you all the best for your future endeavors.
Thank you.
Yes. Well, viewers, on that note, it's time to slip into a short break, but do stay tuned. We have lots more lined up on the other side, as we'll be joined by Dilip Panjwani, who's the Chief Financial Officer at Waaree Renewables Technologies, to decode their quarter gone by.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
You start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with meaning.
Welcome back to NDTV Profit. You're watching Earnings Edge, and now we're going to be in conversation with Waaree Renewables Technologies, who posted a strong set of numbers this quarter. And joining us to talk about the quarter gone by and the future outlook of the company, we're joined by the Chief Financial Officer at Waaree Renewables, Mr. Dilip Panjwani. Good afternoon, Mr. Panjwani.
Good afternoon, Yarika. Thank you so much for offering us this opportunity to come on your platform.
Yes. Let me start off with, asking you your assessment on how Q1 FY25 went by. And if you could maybe give us a outlook for FY25 in terms of top line and bottom line growth.
From our standpoint, if you look at our performance in terms of year on year, we have always performed very well. So from that perspective, we are very happy. We also want to say that, the way sector is offering opportunities, it's very significant. So our outlook remains very, very, hopefully, very strong, both from year perspective and for next, another 4 to 5 years timeline that the government has set for renewable space, to reach 50% of energy coming from renewable space. So they do offer a very significant opportunity for companies like us to keep the growth rate momentum going for a considerable period of time.
Yes. Mihika Barve this side. And I also wanted to get and talk more about your order book. Now, it's the unexecuted order book stands at over 2,100 megawatt power. But you have said that the company will be executing the current order book in the 9 to 12 months. How much of it would be executed in FY25 itself?
So, if you look at our order book in the same period in the last year, we were at around, 800 megawatt only, and now we have doubled in that parameter also. So in the March end, we were at 2.3 gigawatt. Our now order book is now 2.1 gigawatt because we have executed around 215 megawatt in this quarter, sorry. And, going by 9 to 12 months, our expectation is that, almost 75% of the order needs to get executed in next 9 months. That's roughly about 1.8 gigawatt that we are talking. That translates to around, put together with Q1, that translates to about 2,400 to 2,500 crore of existing order book. We are not even talking of what we are chasing and what we ought to be. That when you translate to our last year's earnings is again 2.5 times or almost virtually 3 times larger than growth rate that we are speaking.
Yes. Correct me if I'm wrong with, the revenue estimates that you gave. Does that bring the per megawatt revenue potential for the company to around 1.2 crores?
So we are in the range of 1 to 1.2 crore, give and take, what kind of orders we get, whether it's turnkey or balance of system. But your metric is right. We are always roughly in the range of 1 to 1.2 crore per megawatt.
Got it, Mr. Panjwani. I also want to get more outlook in terms of order book growth. How is the bidding pipeline looking like? Maybe on how it's broken down to segment or project type-wise, and what's your outlook in terms of order growth potential for the financial year?
The business that we are chasing now has also doubled. At the same period in last year, we were at 7 gigawatt. We are at 15 and odd gigawatt talking to our clients. This includes tender business and the C&I potential that we are talking. So utility scale IPPs also. So most of the utility scale IPPs are again, tariff driven, who have taken biddings from government or NTPC or SECI and those kinds of stuff. So it's a mix of both, but the domination, has been utility scale IPPs for us. That's now shifting to government as well for us. So in the order book also, right now we have 30% from government business. So in the bidding pipeline also that is moving towards 30-40% now. But more trajectory we see now it's coming from government.
Okay, so that maybe, the breakup from government orders could increase, as we grow as well in terms of order book?
Yeah, certainly. If you look at even the last quarter gone by, where 16 gigawatt of tenders were issued in March quarter, and though those are predominantly from government, government driven, policy driven, where government asks NTPC and SECI and etc. to issue tenders. And current policy also framework, government wants to issue 50 gigawatt per annum order tenders in each year. So that's a big, huge business for us that we are looking from the government side.
Got it. I also wanted to get your outlook first on the Indian solar industry as a whole. I know you've identified this segment, especially the rooftop segment, as a potential growth opportunity for the company. So I wanted to get your outlook on the entire industry as a whole first.
The outlook, no one can beat this kind of an environment the government is offering. There are 3 to 4 opportunities that the government is offering. One is they want to reach 50% of renewable energy. They want to reach net zero. They have firm number plan of 280 gigawatt from solar, 220 from wind, 500 gigawatt put together for the renewable. Now they are talking of battery energy storage system. That's a 42 gigawatt opportunity, roughly translating to 14 lakh crores. There's a pump storage. There's an RTC that's happening. There's a hybrid that's happening. Then there's a C&I opportunity that's happening separately over and above that. Then there's a carbon tax that's going to come in Europe, and Indian companies exporting there must transform their energy to energy transition into renewable space. There is an 100 club that's happening. So there's so much happening, to put a number would be also an underestimate in this sector. The inflation growth is just now being made visible in terms of the numbers that the companies that are reporting, companies like ours.
Yes. I get that, there have been many policy pushes and a lot of support from the government as well. Solar, it's almost 85% of our renewable capacity right now. But from the, what kind of challenges could pose from a company or an industry point of standpoint?
It has been going good as of now. There are no significant challenges that we have observed, including the supply chain challenges that we were talking. And, the module capacity is available. The vendor ecosystem has developed in India. So there are no significant, except, manpower could be a challenge in future, because to scale up very significantly higher, you need a qualified manpower. But from a Waaree perspective, we are good for now because, we don't need significant manpower to add to deliver this kind of growth also.
Yes. And I want to get more perspective on your ground-mounted and rooftop solar projects. What's the kind of traction you've been getting in both these segments, and how do you see growth, going forward?
Significantly higher orders we are getting still from ground-mounted, but the rooftop opportunity also is between 30 to 40 gigawatt in India. That's yet untapped. So we do have orders from rooftop. In the current quarter also we got one order on the rooftop, but good to speak that we also got a floating solar order. The order may be small, but it speaks that the country is moving in a direction where all forms of rooftop, ground-mounted, floating solar, all these kinds of orders are now coming up, which we have been talking for the last couple of years.
Yes. Ms. Beverages, you also mentioned the opportunity in terms of green hydrogen and battery storage. Could you maybe give us more color on what the company has in terms of orders in hand and, the execution timeline for the same? I believe you all did get a contract to set up a 1 megawatt green hydrogen plant.
So that was a pilot project, but in terms of very significant orders, there are investments yet to happen, and that's a significant opportunity. Apart from those, the lineup of opportunities of RTC hybrid, which I spoke, the green hydrogen also will need solar plants to be set up. So that opportunity we are foreseeing in the coming year to come up for companies like us.
Okay. So am I right to assume, correct me if I'm wrong, that your bidding pipeline could also see some kind of projects related to green hydrogen and battery energy?
Yes, we will be now chasing even those pipeline as well as going forward.
Yes. And lastly, Mr. Beverages, before I let you go, I just want you, if you could talk about the growth strategy going forward in terms of O&M markets, international markets, as well as, growing your EPC segment.
So, EPC segment, as I told you, it's a sitting opportunity, and you have to deliver the best to the customers, like we have been in this business for a decade. But from an O&M perspective, the good to talk about is we are already sitting at half gigawatt of a portfolio of assets. And we have 1.5 gigawatt of orders in our hand as of today, in terms of once we complete these EPC projects that will translate to O&M tail business for us. These are sitting orders. We are also equally chasing O&M as we chase EPC. Because the tail business comes naturally to us, because we have been in this business for so long. So that's our strategy going forward, that we keep focusing on diversification into hybrid, RTC, battery energy storage system, O&M, into various forms of O&Ms. That's the strategy that the company is doing. As far as international business is concerned, right now, the domestic opportunity itself is quite long. But at the right time, we will definitely, approach international markets as well.
Well, thank you, Mr. Beverages, for giving us the outlook on, the growth process of your company, and wish you all the best.
Thank you so much. Thanks once again for calling us.
Yes. Well, that was the management of Waaree Renewable Technologies for you. But, let's just take a quick look on how markets are faring right now. Well, we have the Nifty 50, which is up over 0.3%. It's on the it's hovering around the 24,945 range, just 10 points below the day's high. And when you look at the, contributors in terms of the Nifty 50 gains, you have... Okay, but you know what? Before we wrap, let's just hear Ambuja Cements, Ajay Kapoor talking about Q1 earnings and the road ahead for the company.
I'm happy to share with you the performance of Ambuja Cements for Q1 FY25. Ambuja Cements has achieved sustainable financial results supported by cost leadership, improved efficiencies, and growth. For the year-on-year, the consolidated performance revenue has grown at 8,311 crores. Operating cost went down by 3% at rupees 4,437, a reduction of 138 per ton. This is mainly on account of 13% decrease in energy cost driven by our efficient fuel management. We achieved a 17% reduction in the kiln fuel, which now is at rupees 1.73 from the previous quarter of 2.08 per 1,000 kilocalories. With these improvements in cost, our EBITDA is rupees 1,280 crores. The EBITDA per ton stands at rupees 807 and margin at 15.4%, and profit after tax stands at 790 crores. Our consolidated cash and cash equivalents at the end of 30th June 24 remain at a very healthy 18,299 crores. On a standalone basis, the net revenues are at rupees 4,516 crores with a 2.5% volume increment at rupees 9.3 million tons. Our EBITDA is at rupees 646 crores, EBITDA per ton at 691 and margin at 14.3%. The PAT is 571 crores. Coming to strategic investments and expansions, Adani's total cement capacity reached 89 million tons, which includes Penna Cement's 10 million tons, which is under acquisition. The acquisition of Sanghi Industries, Asian Concretes and Cements Private Limited, Tuticorin Grinding Unit, in addition to economies of scale, greater efficiency, better use of resources, and long-term environmental sustainability, the acquired assets with captive jetties as well as coast-based bulk cement terminals have further strengthened the marine logistics. Asset of Penna would bring cost optimization through cement and clinker synergy between existing footprints and expansion in coastal footprint with string of bulk cement terminals and grinding units on the east and west coast of India.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential.
We are 40 points adrift, the magical 25,000 mark. Will it happen today? Will it happen tomorrow on expiry day? That's the key question, but the indices will come up on your screen. Look at that, 24967. In fact, now just 30 points adrift. So could turn out to be a very important afternoon. Mind you, banks are quiet. It was IT which was leading the way. It is not that the banks have gone up and come down as has happened in the previous 2 days, which is a good thing. Nifty Bank is quiet, but Nifty IT is the key thing. It was up about 0.6, 0.7%, now about 0.3%. So this one is not done too badly. Bring up the mid caps and the small caps very quickly just to show you what's happening at the broader end of the spectrum. 137 points, about 0.63% for the mid cap index. And the small cap index was trailing. It still is. Bring up the heat map now. and show you what's moved. Some of the results that have come out. Greenply, for example, on your screen, up 9% after those numbers. But today, it's on the large caps at least, it's not as much about the numbers on the gaining side, because HDFC Life or some of the life insurance companies are doing well because of the comments that have come in. A plea to the Prime Minister by a very eminent political voice around GST for life insurance. So that's probably got these stocks revving up. JSW Steel and some of the metals have done really well. Adani Port and Adani Enterprises, I think taking cues from the successful closure of the Adani Green fundraise and some marquee names out there. So that's the other thing that to keep in mind. And the wind energy companies yet again. Suzlon is one, but today I think Inox Wind and Inox Wind Energy too have had a really good move. So Tamanna, lots happening in the markets today.
Absolutely. Just to add a little more detail about what's happening with the insurers. So Union Minister Nitin Gadkari has written a letter to Finance Minister Nirmala Sitharaman requesting that the GST on insurance policies, health and life, be cut down. Remember, it's 18% right now in some categories and up as high as 28% in some. This is a plea which has come from life insurance unions as well. And the fact that this letter has come out is possibly what's moving some of these insurers today. LIC by itself not doing too well, but look at your HDFC Life, SBI Life, ICICI Pru, we should pick up all of those doing very, very well. So that's one pocket. I just want to pull up what's happening with the broader markets as well before we go ahead, because it has been quite an uptick since what we saw at opening. So broader markets have been steady, about nearly 1% up on the mid-cap index. The small cap completely sluggish this afternoon. Let's pull up the advanced decline ratio very quickly just to tell you what the market mood and the market breadth has been. A bit of narrowing in the last half an hour or so from where we opened. So you see that gap between advances and declines narrowing as well. A lot of the focus right now is on stocks specifically, a lot of them result driven. So we'll come to that as well. Let me see if I can quickly pull up the sectoral indices just for a second to show you what's been working. And not too many themes there. Media up there because of Z. The numbers have been good. Pharma working, so defensive play, consumption's doing okay. The biggest hit there on PSU banks, which have been flailing a fair bit. All right, let's look at positive result impacts first. Torrent Power. Torrent Power has to be a complete winner of the day in terms of how its numbers have been and how the street has also responded to those numbers. 16% up there. Z Entertainment has actually gone to 118 crore profit from a 54 crore loss year on year in this quarter. That's done very well. Granules, strong set of numbers. And their formulations division has actually fired for them this time round. We had a great conversation with the Granules management, and you should listen into that on all our social media platforms if you wish. We'll play a part of it later in the show as well. On the losing side, I would say Titagarh, Fine Org are some of those which have seen a bit of pain because of earnings. Those stocks between 4 and 5% up. I don't know if you can quickly pull up Greenply as well, and Neeraj mentioned it, but that stock has been firing because of the numbers. When we started the show a few minutes ago, it was 8% up. It's 13.5% up right now. Massively good set of numbers on Greenply. We'll get into the details of those. And the other one, which I think in a sense is also stock of the day, is BSE. Now, the day started off with concerns that the Sebi, the regulator's proposals on how to curb derivatives and volumes would really be a negative. But for the BSE stock, it has been a completely different story. 7.5% now and counting. The idea being that if all things are equal and if there really is only one weekly expiry from each exchange, the NSE and the BSE, then the kind of advantage that the NSE has in terms of more volumes will be evened out between the two. I mean, that's one simple way of putting it, but we'll get you a more detailed report. So these are some of the stocks that are really firing this afternoon. But overall, Neeraj, I think you started the show by talking about how the market is adrift of 25,000. 25,000 still elusive this afternoon.
But 45 points. We live in hope. Let's ask Ruchit and Vijaya Chopra if it'll happen in the next 53 minutes or does it happen tomorrow? Ruchit, good having you. Thanks for joining in. How are you approaching trade this afternoon? You reckon 25,000 knocking today or tomorrow, or really doesn't matter to your trades?
Yeah, hi, very good afternoon, Niraj. Very good afternoon to everyone. Well, I think we have almost done that 25,000 mark, and 40-50 points does not matter much. No, I think it's just a psychological level which needs to be hit once. But if you look at the overall trend, post the election results have been quite strong. Post budget, we have seen a continuation of the trend, and still there are no signs of reversals. We have seen some pause in last three trading sessions, which may be to cool off the overbought setups on the lower time frame charts. And there's a global event which is lined up today evening. So maybe from tomorrow's trading sessions, we would see a continuation of the momentum which we had seen. So the important supports that we are watching for on the Nifty front, immediate for a short-term perspective. First is placed around 24,700 to 750 range. Where the swing low is there, and below that positional supports are placed around 24,600. So till both these two supports are intact, I think the broader trend still continues to remain positive, and no one should continue to trade with a positive bias. And on the higher side, we are expecting the markets to continue this rally towards 25,300, which is the retracement level of the recent correction.
So 25,300 is where we could see the markets going right now. Richard, quick view of the Bank Nifty, if anything. I mean, they've really like sort of sacked this one out. The Bank Nifty as an index has sacked this one out for the last few sessions. Do you see an uptick there?
Well, here we would wait for some confirmation of a breakout, because if you look at the markets, the index Nifty is trading at its all-time high, but Bank Nifty is still far away from that high which it made at the start of July. So this clearly indicates a relative underperformance for the short term in the banking index. Although the longer term, mid to long term support levels have not yet been breached, but I think there are some other sectors which are driving the overall markets higher. So compared to broader markets, I think until we see a breakout or a closing above that 52,300, 52,200 again, I think that relative underperformance could continue in the banking space. So right now, I think there are many other sectors which are supporting the market. Better to continue to trade with a positive bias over there, and would wait for a breakout above 52,200 to create fresh longs in the banking space.
So definitely sitting out this one today as well. And I mean, can you really have a consolidated up move or a strong momentum up move without the banks participating is the question. Richard, very quickly, your picks.
So a couple of buy recommendations. First is a buy call in Asian Paints, breakout after a good amount of price-wise as well as time-wise correction. So I think that's where the momentum could continue going ahead. So at current levels also, although it's up by 2.5%, but still the risk-reward ratio is favorable. One can go long with stock below 2980 for potential targets beyond 3250. And Bharti Airtel is a second pick, where a gradual high top, high bottom is there. Any minor corrections which are seen recently, we have not seen any volume-based corrections. The 20 DMA has been acting as a very, very good support, which is a sign of an uptrend. So one can go along there as well with stop below 1440 for potential targets around 1600.
Okay, so Bharti Airtel, definitely one of those picks there. Vijay, very good afternoon to you and great to have you on the show. Some of the flavor today, insurance and of course autos as well. Let me just start with your view on insurance, since those are some of the big movers this afternoon on the back of that letter that Union Minister Nitin Gadkari has written to Finance Minister Nirmala Sitharaman. I mean, the fact is that that decision is in the realm of the GST Council. So it's not something that the Finance Minister can do herself. But is it being seen as an indication of something really changing for insurance companies? And even if GST is reduced, does it really change profitability for insurance companies?
Well, per se, I think that, it would be best. It would be better for the end user, for the end client. The cost would go down, and we are anyway battling with the prohibitive costs everywhere. Whether there are insurance costs, even if you insure your car, the insurance premiums have gone up. Life insurance premiums, even health insurance premiums have gone up. So definitely, the end user would benefit because this GST is anyway passed on to the government. So I don't think the companies would, benefit from this, but the volume would increase. I think that, it would bring more and more people in the ambit. So there are people who just postpone their plans to take a life insurance or maybe health insurance, or do not go for a larger cover just because the premiums are prohibitive. So I would say that overall for the industry, it would be good. It would include more and more people. And more people would go to take insurance and with larger covers. So I think that would be a benefit for all the insurance companies.
Okay, the other stock in I would say, group of stocks to look at today is those impacted by Sebi's proposals to curb derivative volumes. It was expected to be very negative for all, but look at BSE, and I just want to pull up look at that, 7.5% up, has been zooming since this morning. Quick take on this, Vijay, before I get to my colleague Rucha's report. On do you think that there is any clear benefit for BSE if these proposals do come to light?
Absolutely. I think that BSE did start its futures platform, but the volumes are not there. Clearly, the volumes are at NSE. And most of the trades which happen in BSE are cash trades. So definitely people would go towards BSE, do cash trades. But I think that through your channel, I would like to recommend something. The charges which BSE charges the customers, it is a bit higher than NSE. So they should look into the same. And again, as I said earlier, in the case of insurance, that they should try and increase their ambit, their overall influence over the investors. Because even today, even if I put a trade, I would prefer to do it in NSE due to so many other reasons, due to liquidity and faster execution. And so NSE anyway is far bigger than BSE. But yes, this clearly indicates that this benefit would go towards BSE. They would increase their revenues. And although anyway, the people don't trade much on the BSE F&O platform.
Okay, so there would be an increase in revenues. In fact, BSE is our stock of the day, up over 7.5% on the back of the new proposed curbs. It actually proposes. Rucha joins in to explain why this is being seen as beneficial to BSE. Yes, Rucha.
Thanks, Tamanna. So I'll start with how this positively affects BSE. Now, NSE has weekly expiry on four of the indices, namely Nifty, Bank Nifty, Fin Nifty and Nifty Midcap, while BSE has weekly option expiry only on two of the indices, namely BSE Sensex and BSE BankX. Now, Sebi has proposed a regulation which suggests that each of these exchanges will be able to provide the weekly options expiry only on one of the indices. So naturally, NSE and BSE will have to select any one index on which they will provide the weekly options expiry, and what we believe is BSE will choose that index and that particular date for the weekly option expiry which NSE has not chosen. So naturally, traders will move from NSE to BSE to trade in that particular index in which BSE is providing the weekly options expiry. So this is what we have for NSE and BSE. But talking about the revenue which comes from the options, for NSE it is 60% of the total revenue which is coming from options, while BSE it is 40% of the revenue. So likely shift in volume from NSE to BSE will be favorable for BSE and negatively affect NSE.
Okay, so that's the reason why BSE is up. Well, the other win of the day, of course, is Torrent Power as well. M&M numbers are out. We will be going into those details. All of that, but after a very small break. After the break, we're also speaking with Nandik Malik. We're talking about the impact of Sebi's proposed measures. All that and more. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplify.
Welcome back. You're watching India market close at the 25,948 levels right now on the Nifty. Market breadth still not really positive and narrowing as we speak, but stock specific stories are still ruling the roost. The other big theme today, of course, has been what the Sebi has proposed. They finally put out a proposal which was long awaited on what are the measures that could be taken to curb speculative activities in futures and options. So there are about 7 measures. There you have them on your screen. Now the question is, what is the kind of impact it would have on the market? And we've got Nandik Malik, or CIO of Avendus Capital Alternate Strategies, to come in and speak with us. Nandik, great to have you back on the show. And on, I would say, an interesting subject which the market has been waiting for, I think with bated breath, to see what happens. Do you think that this is slightly better than what was anticipated?
No, I think the markets had factored in that some kind of measures will be taken by Sebi because the volumes are really scary. So if you look at the volumes, daily volume in the F&O segment was somewhere around $2 trillion. Somewhere around 400, 500 times the stock market volume which you have in stocks. So I think what Sebi has done is very rational. And the increase in margins, the decrease in the number of strikes that you have, I think are welcome moves. See, what this will do is some volume will go away, but the main volume which will decrease is the volume which happens on expiry day. So Sebi in its circular has done a detailed research, and they are quoting facts and numbers. So what they are saying is a huge amount of volume happens in expiry days when people come and try and sell, let's say, options for 3 or 4 rupees. When let's say Nifty is at somewhere around 24,000, 25,000, and then they try and make some money out of it. So now this kind of a strategy doesn't really help people who want liquidity in the markets for hedging positions or diversifying some of the risk away. So even if this volume goes away, there's ample volume in the system to meet liquidity management and let's say portfolio management needs. So I don't think this move will kind of put any restriction on fund managers or funds who want to actively hedge the portfolio. So all in all, I think it's a good move by Sebi.
How much do you see volumes being impacted, Nandik?
So volumes will go down for sure. So I'm not sure that margin increase. So they are saying the margin will be doubled first and then tripled over time. I don't think this will have a meaningful impact on the volumes. What I think will have a significant impact is there is one particular point in which they say, at least that's what my interpretation is that one particular exchange can have only one weekly option. So, for example, right now we have the main exchange in which on each and every day we have weekly expiry. So what I could decipher from reading the Sebi note is that now one exchange will be allowed to have only one index derivative which expires in a week. Because of which what will happen is, let's say 3 or 4 daily expiries will go away. So that is where the volume drop will happen. But that is unlikely to happen in the main indices vis-a-vis, let's say, Nifty or Bank Nifty. So there will be some volume, but that will be primarily on account of volume drying up in the other indices. Now, good amount of that volume should also transfer to the main indices. So what should happen going forward is the volume in the main indices should go up. And because weekly index options in many of the other indices will not be available in the first place, they will become zero.
Okay, so you will see a transfer there. You know, a lot of conversation about, and some are calling these as de-addiction measures by Sebi. A lot of conversation of what those who are quote unquote again addicted to this kind of speculation, what they will do, where will that money go? Could it go into penny stocks? Could it go into commodities, derivatives trading? Does the grey market get a boost? Just wanted to know if you have thoughts on any of these.
No, so these options are available because you're right, that allocation can shift. But what is interesting to me is when someone, takes position, let's say as of now, let's say a month back, or let's say for the last 1 year has been taking position in index derivatives. Typically, they would not be playing for 1 lot or 2 lots or 3 lots, right? The positions would be 4 or 5 lots. So if the lot size doubles, then previously they were taking, let's say, 2 lots. Now they have to take 1 lot. So I don't think that will, meaningfully impact that kind of a psyche. What will happen is sometimes people used to take those 3 or 4 rupees bets. So let's say Nifty is at 24,900 to 25,000. On the day of expiry, let's say at 310 or 315, and Sebi has mentioned this point in the paper also. If they see, let's say, 3 rupees premium for an option which they think would become zero over the next 20 minutes, then some positions would be taken and huge amount of positions would get taken. So that gets taken out. I'm not very sure that money would get diverted towards penny stocks or let's say other kind of instruments because the options market works on the concept of margin money. So which means that if you want to take position worth 10 lakhs, the actual money which you have to give is say only around 2 lakhs or 1.5 lakhs as the case may be. Now, if you want to take position equivalent of let's say 10 lakhs in penny stocks, then you have to actually give the entire amount upfront. So, because of that, I think the kind of concerns which have of this money moving into other asset classes may not be as drastic. Some amount of movement can happen, but not as drastic.
What about movement in commodities trading, commodities derivatives trading?
Yes, some amount of money can move there. But, regulations can come in that market as well.
Yeah,
so
because the underlying concerns are the same.
Correct.
If there is, a lot of conversation now, Nandik, on whether these proposals is what we will eventually see, whether there will be tweaks here and there. What do you think? What do you think? Because I'm not sure where there's any opposition coming in from. Even exchanges will have to toe the line.
No, exchanges will have to toe the line. And today, for example, one exchange is up a lot. Because people are anticipating that the volume on that particular exchange will go up. So see, it's a regulatory thing. Exchanges, I don't think have any say on this particular topic. I think it's a good proposal. It's a working paper at this stage, but I don't see where any objection can come from any market participant, from any credible market participant. So to me, it's black and white, and this is as good as go.
We just played a few minutes ago what Nitin Kamath tweeted on this, and among other things, he says that maybe having a product suitability framework is the answer, where you judge and you assess which product is suitable for which kind of an investor. Is that something that you agree with?
Yes, and that is something which Sebi has done in the last week. So they have circulated a paper saying that something called a new asset class may be allowed going forward. It's again a working paper, and they have asked feedback from market participants. But that is something which Sebi has already done. So I think everything seems to be very coordinated, and it's a very good thing to see that the regulators is keenly watching as to how things are shaping up in this field.
Good thing, Nandik. Just want to put the other point of view in front of you, and what do you think? A lot of commentary today and a lot of concern that is it the regulator's job to tell retail investors what to do and what not to do, and assume that they can't use their own mind?
See, I did my BTech in electrical engineering, and so in our labs the professors were very strict. We used to go to machines, and we would think that doesn't make sense because we all are in the top college in the country, we know what to do. But then come to think of it, if something bad happens, then no one will go to the investors. Everyone will come and ask Sebi as to what checks and balances did you have in place? So I think SEBI is the decider as to what the rules would be. As market participants, we cannot challenge those rules. We have to adjust ourselves to the existing conditions and then take positions accordingly.
Okay, that's interesting. So SEBI has reminded Nandik Malik about his lab professors, where he realized in hindsight that what they were doing and when they were strict was for his own good. Thank you so much, Nandik. Always a pleasure chatting with you. And right now, obviously, talking about SEBI's measures. Ruchit Jain and Vijay Chopra with us. Vijay, let's talk about some of the results which have come in today and focus on Mahindra and Mahindra, if you've tracked that. The huge discounts on their newest product seems to have hit them a little, though the response has been largely positive. How have you viewed the numbers? You're on mute, Vijay.
I think that I'm fairly happy with the numbers. They are more or less in line. And this quarter generally is a bleak quarter for most of the autos. The action will start from now on post-monsoon, where we'll see tractor sales happening, the entry-level level cars would sell. And yes, if there are market pressures and companies decide to bring down the prices, that's okay. That's good for the consumer. It is not possible that they just revise the prices upwards. So not a major dent. And I think that Mahindra happens to be one company which is going to keep on growing. It has a bouquet of products from EVs to SUVs to tractors, even some of the two-wheelers. So I think that M&M is a industry of its own, like Tata Motors. So I would say that the results are more or less in line. And I think that this stock can clearly head towards 3,000 and 3,100.
3,000, 3,100. Ruchit, your view on M&M on the charts?
So the broader trend still looks quite positive for the stock. Recently, we did see some correction from that 3,050 mark to around 2,750. But we have not seen any significant volume-based selling. And secondly, the 40-day exponential moving average, which is usually seen as a short-term support, has not been breached in this down move. So till the stock is above the support of 2,700, 2,660, I think the stock could see a slow and gradual continuation of a slow and gradual up move.
All right. And here's what M&M CEO Rajesh Jejurikar said at the press conference after the numbers were out. He says that a good monsoon has aided growth for farm segment and highlighted that demand for the XUV 700 remains intact.
July has been pretty good in most parts of the country. So most critical markets have been impacted positively, especially the west and south. The farm margins, and I'm focusing right now on the core tractor margins, just for clarity, core tractor margins are the margins we make out of our domestic tractor business plus exports from India. Doesn't include farm machines, doesn't include farm machinery, powerall, and global subs. So that's gone up to a very healthy level of 19.7%, which is a 1% improvement in margin. You see the same on the farm standalone side. There was escalation and a shortage in chips availability, which had led to increased material costs, and 700 had a lot of chips. We've increased the capacity over since launch. So we started at 3,500. We hit 6,000 capacity. Now we're at 10,000. So there is a need and a desire to start leveraging our capacities. We expect this anniversary offer to have minimal impact on financials because we expect higher volumes. We expect the costs have already come down, and we will get operating leverage out of the higher volumes.
Right, that's the word coming in from M&M. Now, another stock which has seen significant gains today on the back of its numbers is Torrent Power. It's soared because of excellent Q1 numbers. Now, still up about 16%, has been a winner all through the day. Mika is joining in to tell us what's worked for Torrent Power.
Yes, so just let me get through the broader numbers for Torrent Power. Net profit was up 87% on a year-on-year basis at 996 crores. Revenue saw an over 20% uptick. Margins stood at 20.6% versus 16.1% the year ago. So that's a 400 basis point margin expansions. When we talk about the reasons for higher net profit growth, one was the increase in contribution from the merchant power sales in the gas-based power plants. And this, it's key to know that Q1 was a period where gas-based power plants were mandated mandated by the government to be used at a higher utilization level with the ongoing Indian power demand. Also, there was higher contribution from the license distribution business as well as increase in tax expenses. When you talk about the project pipelines for the company, total contracted capacity of over 2,000 megawatts, total installed capacity of 3,200, and they expect the project cost of the pipelines to be, over 18,900 crores. And lastly, when you talk about thermal assets, when you talk about gas and coal stands over 2,700 and 300 megawatts respectively. Solar capacity 1,300 megawatt power under development, and wind is also seeing 1,200 megawatt projects under development.
Okay, Torrent Power definitely been the winner today. Ruchit, any quick view on Torrent Power?
There's no doubt about the trend. It's not the 1 day of up move, but if you look at some historical data, since last 1.5 years, the stock has consistently given very good returns. No signs of reversal as of now. If you look at the post that positive opening, we still have very good volumes even at current levels in the stock. So I think the trend might continue. If anyone is holding existing long position, then they should continue to ride this trend.
Okay, so Torrent Power in focus. We'll take a very short break, but we're coming right back with everything that's happening on the F&O side of things and a lot more. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there.
Back with India Market Close right here on NDTV Profit. We are a bit more further away from 25,000 than we were at the start of the show. But be that as it may, still holding out in line with what the IT index is doing despite a very flat bank Nifty. Okay, some of these wind stocks have really shown up in trade. We've spoken about Suzlon being up for the last so many days. Today, the Inox Twins have moved out as well. 5% higher for Inox Wind, 4% for Inox Wind Energy. I was checking the exchanges, no apparent announcement that is coming out there. Vijay Chopra, do you track them? And yes, it's a great growth sector, but has the run-up been too swift for your comfort? Or do you still, if you were invested, would you stay invested? I think you're on mute, Vijay. No,
you know me since a number of years, and definitely I understand from where this question comes of comfort. So for sure, I'm not comfortable at these valuations, especially Inox Wind. Suzlon, I would, if you do a apple-to-apple comparison, I think that the promoters, and I've been saying this for quite some time, and Suzlon has doubled up from there, that the promoters make a difference. And the Tantis are no more there. And it is now with the Sun Pharma management. And it's a very stable management. They'll not do anything overnight. Whatever they'll do would be very, very calculated. So I think that Suzlon, in a correction, I would be a buyer, and I would recommend it strongly. Inox, definitely I'm not, comfortable with the valuations.
By the way, by the viewers on Suzlon as well, I think the Sun Pharma group has sold out quite a bit of their stake, so that's to be kept in mind too. But what a heady run it has had. And Vijay Chopra says he's not comfortable with the Inox valuation, so that's to be kept in mind. By the way, based on the merger ratio between Inox Wind and Inox Wind Energy, a sharp arbitrage exists between the two, so that's to be kept in mind as well. Ruchit, on the charts, would you book profits here? All these three names?
No signs of reversals as of now technically. In fact, the high top, high bottom structure still continues. So I would recommend to continue to hold existing long positions, but definitely won't advise to create fresh longs over here, especially in Suzlon, because the stop losses for fresh longs will be too far since the stock has already moved up. So maybe for fresh buying, one can take a buy on dip approach if we get any kind of corrective phases in the near term. But yes, existing long positions, I think until we get any trend reversal signs, no one should continue to ride this trend.
Well, watch out for those names and watch out for some others, because it's been an afternoon of some fairly interesting moves, some result reactions to Aegis Logistics and others, but the FNO space has been fairly active too. Agam joins in with some perspective of what the penultimate day to the expiry looks like. Agam, how's it looking?
Well, it was the Bank Nifty, weekly options expiry as well as the futures expiry. And while it was a choppy day of trade, where we did still see that bank move within a very relatively narrow range through the course of the day. But I'll start off with the Nifty, about a 0.3% advance. Once again, continuing to move between 24,900 and 25,000. And once again, we have more increase in open interest also as far as Nifty is concerned. Tomorrow is a big day, I reckon, because tomorrow is the weekly options expiry for the Nifty. Maybe tomorrow it can be that day where we could see it move past 25,000. But that's a wait and watch. It's also a big guess and nothing more than that. But moving on, as far as the Bank Nifty is concerned, again, we're looking at rollovers around 69%. Substantial rollovers, but I reckon the last half an hour or so will see this number even higher. And it's the jury's out there whether or not this is towards long the short side. But for now, it's not had the best of series, even though it has advanced on a relative basis to the Nifty. There's been a bit of an underperformance as far as the Bank Nifty is concerned. Now, of course, when it comes to the Nifty, we were keeping an eye on 25,000. That's where we've seen a good amount of accumulation, but we're starting to see a little bit more build up around 25,200 as well. In the last 2 days, those are the calls which are also starting to see some activation. On the lower end, a lot more writing around puts, something to go by. We could potentially see a little bit more strength tomorrow. But moving on, let's also take a look at the Bank Nifty. And we're seeing an expiry around 51,500. Not much has changed there. And that's exactly where we saw traction, in terms of calls as well as puts. Finally, coming down to stocks, again, more gainers than losers. So longs for Granules, Divi's Laboratories and Dixon Technologies, shorts for Birlasoft and India Mart. Even among stocks which are seeing a decline in open interest, there is some amount of unwinding for Vodafone Idea, Syngene International, Deepak Nitrite and Balkrishna Industries. All of them advancing. The spots are advancing. So, we're categorizing them as short covering at the moment. All in all, a good day of trade. A relatively quiet Bank Nifty expiry as well. And all eyes now on the Nifty 50 expiry tomorrow.
Okay. Yep. Thanks a lot for that. I don't know for how long will we get a chance, or forget getting a chance, but how long will we be able to say, oh, there's an expiry today, an expiry tomorrow, and an expiry yesterday, and an expiry 2 days back as well. So maybe those things will change. But let's wait and watch for that. Okay, continue our conversation with our experts, and some of the stocks that have corrected today post their numbers. Deepak Fertilizers, and I presume that despite the very strong margin and bottom line number, I think it must be the top line disappointment that must be leading to Deepak Fert correcting the way it has, because the numbers on the bottom line look very strong. Vijay Chopra, do you look at this fundamentally, Deepak Fertilizers?
It's a good company, but again, there would be reasons why any stock would correct. The stock had moved up magnificently, and I think that, in spite of the numbers the company has posted, I still don't think that it's expensive. At a PE of 26, being in the fertilizer sector and having a reasonably good monsoon overall, I don't think the results are bad. But yes, good stocks also correct. And if at all you find Deepak Fertilizers anywhere between 700, 750, I would be a buyer again in this company. But yes, it has moved up quite a bit, and I think that a correction would make the stock healthy and the entries healthy. So I would wait for some decent correction to enter into it again. Good company, good fundamentals. Results are also good, but markets always look in one way. If they want everything to be hunky dory, it doesn't happen. So there are quarters where there would be some disappointment. But again, I would say that even a good results, the market punishes because people just the stock goes up in the expectation of a good results, and if those results even miss a bit, so correction starts. So I think that this correction, if at all it's a deep correction, I would be a buyer again in Deepak Fertilizer.
Okay. Well, keep in mind though, the numbers, like I said, the top line growth numbers left a bit to be desired. So some bit of profit booking has come in after this heady run. Okay, I think we need to cut across to the Mahindra AGM, M&M AGM. Anand Mahindra is speaking.
Each of these individuals has made sterling contributions to the deliberations of the board in the respective areas of expertise, for which the board owes them a deep debt of gratitude. We also welcome our incoming directors, Ms. Padmasree Warrior, Mr. Ranjan Pant, and Mr. Satpal Bhanu, who bring a wealth of experience from across industries. We greatly look forward to their participation on the board.
All right, so that was Anand Mahindra speaking at the 78th AGM. We'll listen in and get you any relevant bits of that conversation in a bit. But let's talk about another stock on our radar and an important development there for Adani Energy Solutions. The QIP of the company has been subscribed 5 times is what we're learning. Mihika is joining us with more details. Yes, Mihika?
Yes, that's right. Adani Energy Solutions is set to raise a primary fundraise of $1 billion via the QIP route. Now, the QIP is currently underway. It's subscribed 5 times with an approximate demand of 43,000 crores. Now, this QIP deal marks the largest one, first fundraise transaction seen in the Indian energy space as the first primary equity fundraise post-January 2023 when a follow-on public offer of the company was withdrawn. When you talk about where the QIP is likely to close at, where it's likely to close at rupees 1,135 per share, which is 16% higher than the issue price of 976 rupees per share. When we talk about who's participating, existing long-only investors like GQG, QIA, ADIA, and few other US investors have participated. And from the mutual fund side of things, our domestic demand stands at $350 million. When you talk about domestic institutions, including SBI Mutual Fund, SBI General, Bandhan Mutual Fund, HDFC Mutual Fund, 361, and Axis Mutual Fund have also participated, with SBI Mutual Fund submitting bids of 800 crores. And it is key to know that the mutual fund is, with the mutual funds actively investing, it also helps expand the investor base for Adani Energy Solutions, which is a company where 74.94% of shareholdings held by promoter and promoter groups, while 25.06% is held by the public.
Okay, so Adani Energy there with a successful QIP which has wrapped up. Standard disclosures and disclaimers here. You're watching NDTV, which is part of the Adani Group. Now, another stock which has really been on a tear today is Granules India, and in large part because of very, very good numbers that they have seen. Look at the Granules stock right now, even now 7% up. Now, earlier in the day, we spoke to the founder and chairman, Krishna Prasad Chigurupati, and here's what he had to say on his growth outlook for the company's formulations and the paracetamol business. Listen in.
Formulation business, as per plan, will continue to grow as we go forward. And ultimately, we may end up at around 80% or 82%. Coming back to the API and paracetamol, this year, actually from last fourth quarter of last year, paracetamol situation has been very bad. All our customers abroad have overstocked and they have inventories for to last them another 6 to 8 months. And also in the last 1 year, a lot of new capacity had come up in paracetamol, anticipating a huge demand, and there's surplus capacity and no demand. So it's very bad, and I think it's going to take at least 2 to 3 quarters for paracetamol to rebound. So meanwhile, the formulation business and other APIs, actually, or other formulations, the core products used to be about 90% few years ago. Today, they've gone down to 65%, and other products have come to 35%, which is a good growth in our basket. And this is what is helping us in keeping up our revenues in spite of a debacle on paracetamol.
Interesting story of Granules coming through, and among other things that he told us is, of course, they're focusing on oncology products that will be out by about FY26, and they're looking at segments like ADHD drugs. So that's definitely a new area for them that they are going to be looking at. Vijay Chopra, just the pharma space in general and Granules in particular, if you track?
Vijay? The stock has moved up. The stock has moved up quite a bit, and I would say that if somebody has positions in the stock, I think exiting is a good idea. And there are lots and lots of companies where you can invest. I have few stocks, if at all you allow me to speak. Entire pharma space, I think that overall we have seen a decent run up in the big wigs, the likes of Sun Pharma, Cipla, Lupin. So I am expecting some kind of a correction. Although the sector overall looks very good to me, but I think that all these stocks have moved up quite a bit. So a bit of a correction would make these stocks healthy. There are other opportunities in the market where you can shift your money to.
We were talking about this in the morning, that pharma may have had a dull day yesterday, but the commentary from some of the pharma stocks, some of the chemical stocks is very, very strong, particularly the CDMO players, and therefore that is something that you might want to keep at the back of your mind when you're looking to trade these names. Okay, what else? Today, bad numbers have led to a Birlasoft and some of the others come off, but there is some serious strength in media today. So, Z Entertainment on the back of the numbers has gained a little bit. There is strength in Network 18, yet another day of 8% up move there. Last week on the budget week, PVR had some very strong moves as well. So there's a clutch of these media assets which are doing very well. Today PVR may be down, but last week, the budget week, PVR had a good move as well. Ruchit, it doesn't often come up as a trading ploy, media, because these stocks really give up the gains as quickly as they log them. But is there a trade in any of the media names?
So I think yes, we hardly see any movement which lasts for a longer period of time within the media space. But if I just do some comparative analysis of the recent movement, then Sun TV is one stock which has shown very good strength in last 1.5 months, and still there are no signs of any kind of trend reversals. The potential targets for Sun TV in the near term are seen around 1,025 kind of range. So I think if one has to take any exposure from a trading perspective, then better to stay with the outperformer. So Sun TV might see a continuation of the trend towards 1,000 to 1,025.
Okay. Adani Power numbers are out on your screen. Revenues are up 35.9%. Numbers are looking good on the face of it. EBITDA has seen a big jump up actually from 3,514 crores to 6,194 crores. Margins have seen over a 10%, nearly a 10% gain. So strong numbers there coming in on Adani Power after that initial spike. The stock now seeing a bit of profit booking. We'll get you more details on those numbers. EBITDA, they're up 76% as well. All right, some of the other stocks that have been moving in trade today, and I just want to talk, since we talked about M&M already, I just want to talk a bit about Maruti. Now, those are the other numbers that I expected shortly. And Vijay, when you look at a Maruti compared to an M&M, and we're waiting, of course, for those numbers to come in. We'll go to the sales previews also in a bit. What are you expecting?
Well, I think that Maruti should also do fairly okay because, as I said earlier, that this quarter is tepid for most of the auto companies. The expectations are for the next quarter where they're going to launch new models, where, we are going to see a resultant of a good monsoon, where people buy new cars. There's a festive season going on. So I think that, Maruti results should be in line. And I think that, this stock would slowly keep on growing and, maybe we see even 15,000 levels coming on Maruti. So Maruti versus M&M. M&M has a bigger portfolio of products as compared to Maruti. But again, apple to apple comparison, I think that Tata Motors would be a better comparison with M&M. And I think that Tata Motors, for that matter, my long-term target is 2,000 for Tata Motors. So it will keep on growing because it has, lots and lots of products in the pipeline. From trucks to cars to international markets and whatnot. So Maruti also, I'm expecting a decent result. And I think that it would keep on going up. The stock's chart also looks fairly okay. And I think that it can go up to 13,400, 13,500.
Okay, 13,400, 13,500, possibly on a Maruti. Quick view from you, Ruchit, on Maruti and Tata Motors, since Vijay also talked about it.
So the longer term trend certainly remains positive for both the stocks. Maruti, in fact, has seen a good time-wise correction or consolidation in last 3 months. You look at mid of April, the stock prices were trading around this 12,900 mark. And even now at the end of July, it's around the same level. So some time-wise correction has been seen. But in this entire corrective phase, the stock has not breached its support. So which clearly indicates that as the stock witnesses any kind of declines, good buying interest is seen over there. And if we see a continuation of the breakout from this consolidation post the numbers, then I think the stock has potential to rally towards 13,600 to 13,800 kind of range. Tata Motors has already witnessed a continuation of the uptrend recently where it gave such a consolidation breakout. So I think both the stocks technically looks quite positive from a short to medium term perspective.
We're talking about auto. Let's take a look at what the expectations are for the July auto sales numbers. You will see those numbers out tomorrow. Analysts are optimistic about two-wheeler sales picking up. Let's get Puneet in. Puneet, what's expected from July?
Well, definitely, I think two-wheelers as well as, a couple of players in each segment is going to be the flavor of the month for this particular auto sales month of July. Bajaj Auto as well as TVS Motors have performed well, roughly 8 to 9% growth compared on a year-on-year basis for the companies. It's going to be a difficult month for Eicher Motors, continuing its trend of, FY25 not being a very good start at all for this particular brand. Hero MotoCorp will have roughly 7% growth, but that compared to June, which was a very good month for Hero, which was a very big surprise as well, is going to see a 16% month-on-month correction, but on a year-on-year basis, they're expecting good 7% growth. For passenger vehicle space, it's going to be driven by volumes by Mahindra and Mahindra, roughly high single digit of 8 to 9% expected for M&M cars. Maruti Suzuki as well as Tata Motors are going to be see flattish trend. For commercial vehicles specifically,
Puneet,
we are seeing...
Puneet,
yes,
I believe Maruti is out, so you might want to analyze those numbers for a moment, so I'll leave you with that. But come back in a moment from now to tell us what those numbers look like. We are 6 minutes away from market close, but Maruti earnings on your screen. Let's leave Puneet for a couple of minutes while he analyzes these numbers. But the net profit number, and get the Maruti stock on the screen as well, 3649 crores versus the estimate of 3272 crores. So the net profit number, Maruti, is well and truly above estimates. On the revenue front, 35531 versus 34830. So the beat on the bottom line is much more than the beat on the top line. Does this mean that there is an operational beat as well? I think that is something you ought to watch out for. But after the kind of quarters that some of the other auto names have had, we needed Maruti to come up and deliver yet again. I mean, in line with what some of the others have done too. And on the face of it, Taman, on the bottom line front, boy, has it delivered.
Well, Maruti definitely seems to have, beaten expectations, at least on both top line and bottom line. This quarter was something which was also being closely watched because it's not necessarily the best quarter for the industry. And that's something we heard from M&M as well. It will be interesting to see what Maruti is saying and when we hear from them on policy push towards hybrid, etc., and how much of that is going through. But yeah, the market leader in that sense has continued definitely to perform about 1.5% up. We'll wait for Puneet to get more details on the internals of those numbers. Meanwhile, I came to you just a few minutes ago, Vijay, on the auto pack, including Maruti. On that first cut, anything that you want to add? I mean, definitely on the profit side, you have a fairly good bump up, and I can see the stock moving up as well.
Well, yes, I think that the results are very much in line, as I was saying. And this quarter, so to say, is tepid because nobody goes and buys new cars in monsoon. So there are for certain religious connotations to it as well. But again, the next quarter I think should be very good. And I think that I gave a target of 13,300, 13,400. It would be met very soon. So I am happy with Maruti. Maruti would go on, and I think that the stock would be maybe 15,000, 20,000. And who knows what, because they are able to still maintain the lead. I still remember one of the interviews of Mr. R.C. Bhargav where he said that they don't want to get into EVs because the focus was very clear. They got into hybrid cars. So Maruti per se, they understand the Indian markets much better than any other car manufacturer in the country. So hats off to the management. And I think that it's a result which is very much in line with my expectations.
Most certainly. Okay, Puneet, very quickly, what do you make of the numbers?
I think numbers definitely a big positive. Revenue beat definitely on a standalone basis. Margins have also come in above estimates of roughly 11.6%. So a beat of roughly 110 basis points on the margins per se. Just on the profitability, it was expected to be around 3,200 odd crores. It's come in at roughly 3,600 odd crores. So that's a key positive as well. The volume picture was already out there. They had a 5% growth, but definitely just on these four headline numbers, it's a beat on all fronts for Maruti Suzuki on this particular metrics that we can look at. Back to you.
Yeah, the EBITDA is up 51% year on year.
This is a serious move. Puneet, stay on actually.
Yeah.
But Tamanna, this is a serious uptick on the EBITDA.
Serious uptick on the EBITDA. I mean, even the profit number year on year is looking very strong. Look at the margin figure also is looking very, very robust. I mean, Maruti is the giant of the industry, right?
Yeah, and for it to do that, this is serious stuff. So, and while we get other analysts, but Puneet, what could have led to this kind of a beat? Is it better volumes? Is it raw materials? What could have led to this performance on the operational front?
Combination of things that worked for them. One is of course the launch of the Swift that we saw in the month of May, and secondly we have seen raw material prices very on a benign basis in this particular quarter compared to the same time last year. Last year the margins were around the 9.9 to 10% range. That was because of higher commodity costs. So higher commodity costs as well as lower raw material prices in this particular quarter has helped. Apart from that, if we just join that with the launches, so Swift is already doing 15,000 vehicles per month, and that was a much needed push for Maruti because we also Mahindra's 3XO as well as other segments that they had multiple launches in that segment. So the 3XO plus another thing that they did was launch the Dream series, which was to reinvigorate the entry level cars as well. So get that demand for likes of Celerio as well as Alto as well.
You have a 48% bump up on the profit year on year. You're talking about the Dream series. This is a dream set of numbers. I think we have 30 seconds left. But Ruchit, a trading call on Maruti, which I think will have to be taken up tomorrow by whoever's hearing this. But what would be your call?
It's a clear breakout from a consolidation phase, which indicates a continuation of the uptrend. I think 13,600 is where the retracement levels point out, which could be seen maybe tomorrow's trading session only.
Wow. This is a 4% up move. Ruchit, you'll buy it at the current levels, will you? 13,360.
Yes, it's a buy at current levels because the stock has already gone through a corrective phase. Since April till now, since last 3 months, the stock has not seen any kind of price uptrend. And since it is a good breakout post that consolidation, I think even at current levels, it's a good buy.
Okay.
Vinay Bolinchkar is joining in, and even as markets have shut. But the big story at this moment is definitely Maruti. Vinay, hi, if you can hear me. On the face of it, outstanding numbers for Maruti this quarter.
So, it is more along expected lines for us because, your Q1 last year was very single digit EBITDA margins. And the kind of, growth that we have seen in the CNG engines and the thrust, more into SUVs as a percentage of the portfolio has resulted in a very, very good growth in the EBITDA margins. and that is what is causing the the outlier performance. We think that margins can sustain at about 12.8 to 13% for FY25 and can get even better than that. And keeping that in line, we expect we are projecting around 13,860 crores of PAT for the coming year. Profit of 14,165 crores. And, that's a very healthy EPS number of almost 450 rupees in the coming year.
Okay. Vineet, we've seen a couple of names come out. Tata Motors comes out tomorrow, and that stock ahead of the numbers has seen a big rev up as well. What would be the pecking order with the expectations that you have from Maruti? What would be the pecking order on the four-wheeler side?
So we are very, very constructive on Maruti. I think the stock has moved barely 30% over the last 1 year since we initiated on the stock. And we think that one breakout couple of years of performance is still underlying, given the fact that, Maruti is now also going to be focusing largely on exports. So we will see revenue and volume numbers come in not only from a, high value SUV portfolio, but also from very good export numbers. So overall, we think that these combined with the benign cost structure should enable the company to grow handsomely over the next 2 to 3 years.
Okay, Vineet, we'll hopefully have a more detailed chat with you tomorrow morning on India Market Open. We'll talk in detail about Maruti, maybe look out for Tata Motors as well. And we'll also have a chance to see the internals of the numbers, wait and hear what the management's saying. But Vineet Bolinshkar there. Meanwhile, let's wrap up the show, wrap up the markets. We're closing actually on a good note. Let me pull up the Nifty for you and just give you a sense of where we have closed. You're about, 22 points away now, or some distance to go? Some distance to go still. Okay, while you've closed, you've actually corrected down a little. So still about 50 odd points, 49 points away from the 25,000 mark. Will tomorrow be the day is the question. But among the winners, we'll just pull up the heat map before we shut shop for this afternoon. And definitely Maruti with that stellar jump up. JSW Steel, Asian Paint, some of those winners there. HDFC Life, SBI Life also they're on the winning side with this hope that maybe some rationalization on GST. Your consumption pack looking a little weak, not just Tata Consumers, but Britannia as well, and RIL also feeling the heat on the broader indices. And let's just pull up what mid-cap and small-cap indices are doing before we wrap for the day, and what that picture has looked like. Because, you've really seen this last-minute boost in the Nifty because of just a few stocks. The Nifty mid-cap 150 up about 0.5%, the small-cap closing in the red actually, some profit booking going there. The whole theme most of this week has been results. So rewarded if they're good numbers, really punished if they're bad numbers, and if you have good numbers, you've already run up, you still could get punished. I think that's really what the mood of the street has been. But with that, we'll wrap this edition of India Market Close. From Neeraj, me and the entire team that put it together, thank you so much for watching, and we'll see you back tomorrow.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
we also need to be prepared if there is any medical emergency required, if there is a theft or your pet straying away, if there's a third party liability. What if your pet goes and bites somebody else?
Oh, let's hope that doesn't
So there
happen.
could be a liability on you because of that as well. So there are a lot of things that we need to keep in mind. So one is to be mentally and emotionally prepared to have another living being in your family. The other is financial element. So all in all, I would suggest that if you're planning to have a pet, besides the acquisition cost, keep a provision of approximately 10 to 20,000 rupees every month. If you believe that you can afford that kind of money, only then should you get a pet.
Like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hello and welcome to NDTV Profit. You're watching Earnings Edge and I'm your host Mahika Baire. Well, we have an interesting set of companies lined up for you in today's edition of Earnings Edge. And up first is a real estate company called Arvind Smart Spaces. And joining me is Anushi Vakharia, who will, take a lead on this interview. And we're going to have a conversation with Mr. Kamal Singhal, who's the Managing Director and CEO at Arvind Smart Spaces. Good afternoon, Mr. Singhal. Well, up first, I want to start with, margins have slipped to the 12% level versus the average 24 to 25% range. I want to understand what exactly went wrong here.
Yeah, sure. Good afternoon. Yeah, you're right. For the quarter, the margin looked low at 12% as compared to 24-25% that we've been historically reporting. But this is the quarter-on-quarter variation. The way accounting standard works in real estate is that you book top line against the inventory which is completed from construction standpoint and sold, etc. And the expenses obviously pertain to the current quarter in terms of the growth and everything else that is happening in the company. So the moment you book lower top line based on these accounting standards, the margins start looking lower. But for the year as a whole, we are confident and we are sure that we'll catch up with this and it will average out 4 quarters put together.
Hi, Mr. Singhal, Anushi joining in here. Now, I want to understand more on your pre-sales and the collection guidance. You've continued to maintain a 30 to 40% guidance, and even if you look at the quarter's strong performance here, I want to understand going forward for FY25, do we see any kind of revision in this guidance, or this is what we expect to continue for this year as well as the next year also going forward?
Sure, yeah. Pre-sales is one of the most important parameters that one tracks in real estate, and we have been growing at 30 to 40% in most important parameters operations wise. We are sure that we should be able to achieve 30% growth once again this year. We did 1100 crores last year of fresh sales, pre-sales, and we should grow to the extent of 30% this year as well.
Yes, got it, Mr. Singhal, 30% growth in your pre-sales. I also want to understand, more on the unrecognized revenue of over 2,300 crores. By when could we see this getting converted?
So most of the projects that we're doing have a lifespan of anything between 2 to 3 years, 4 years maximum time. All this should enter within a period of 3 to 4 years from now into the books of account. Of course, it depends upon the launch trajectory or also the sales trajectory. But on an average speaking, 3 to 4 years is something that we should take to get all these numbers getting into the books of account.
Okay, so 3 to 4 years is the timeline that we should be watching out for. Now, coming to your project launches, I want to first understand what are the number of projects that we are expecting to launch in this financial year. And coming to your business development side, what's the total number that we are looking at? We've clocked in about 410 crore. Again, are we in line to achieve the 5,000 crore mark that we are seeing for the whole FY25?
Sure. About launches, we should look at anything between 6 to 7 launches this year in the remaining part of the year, out of which 3 major launches are planned, which are new launches, greenfield launches in the city of Bangalore and Ahmedabad. And otherwise, as we discussed before, anything between 2,300 crores to 2,500 crores is the worth of inventory that we should be launching in the remaining part of this year. That's one. On the investment and the fresh pipeline side, yes, we did just about 400 crores this quarter. But then in any case, the entire pipeline creation is little more oriented and skewed towards H2. And we are sure that we are on track to create 5,000 plus crores of fresh inventory for the year as a whole in terms of BD, fresh BD.
So 5,000 crore and more of these are skewed towards the second half of the year. Understood. But how are we planning to deploy funds for this one? Can you expand more on that front?
Sure. I mean, to create 5,500 crore rupees of fresh inventory, we need to invest 800 odd crores in totality. We have three sources of funds which are lined up and kind of closed. Internal accruals have been very strong last couple of years. In fact, we've created more than 800 crores of free cash flows from the operations itself, and that trend continues. So that becomes one of the important sources to fund 800 crores of total investment in the next few quarters. The balance sheet is absolutely debt free. In fact, we have a negative debt of around 50-60 crores on a net basis at this point in time. We can easily raise debt to the extent of 300 crores to 400 crores within the conservative limits of leveraging, so to say. So that's another. And we are working on that. By the end of this year, we'll see some reasonable debt start showing in the balance sheet. And the third source, of course, is the HDFC platform, which is in operation. This is the second platform with HDFC we are doing, which is worth 900 crores, out of which almost like 500 to 600 crores is still left to be committed and deployed. So these three sources put together puts us in a position that 800 crores should not be a problem in terms of investing into the fresh pipeline for the year.
A little bit increase on the debt side, but within the optimum range. Mr. Singhal, I also wanted to get more color from you in terms of the pricing growth and the inventory trends the company is seeing.
So pricing has been pretty stable, healthy. We saw decent kind of increase in prices last year, and that meant that despite increase in cost, the margins were intact. We see prices remaining very stable in this current year as well. Commodity prices and the cost is quite stable for the last few quarters already. In that sense, we are fairly okay on the margin side and price side as well. So they are expected to be remaining pretty stable from here onwards.
All right. And now if I want to shift focus to the kind of projects that we have, of course, we divide it into the horizontal and the vertical part. But I want to understand, while the majority of it has been on the horizontal part, if we see the last year trend as well, is this going to continue in FY25 as well? And can you give us a breakdown on the mix that we are aiming for between the two sides? And what is the differentiating factors here in terms of IRRs, the cash flow, conversion and all that? Can you expand more on this space?
Sure. We have been a little heavy. I mean, of course, we are heavy on horizontal side post-COVID specifically, and we've launched quite a few benchmark projects, if I may say so, in the city of Ahmedabad and also in Bangalore in horizontal space. We have been traditionally doing quite a bit of vertical work, apartments, etc. in Bangalore, but Ahmedabad has generally been horizontal. Post-COVID, there was a specific opportunity, and there was a clear preference that customers showed in terms of having weekend homes, recreational homes, and properties that are a little bit in outskirts, but which gives you a little more space to live and enjoy. So that was an opportunity we worked on, and it has paid off very well in terms of returns, cash flows, IRRs. They are significantly better than our vertical product, which is construction heavy and construction funding heavy. To that extent, the company has created a very, very special niche for itself, both in the city of Ahmedabad and Bangalore, and will continue to do that. So that's one strength which we've developed over the last few years, and will continue to build on that strength. But having said, vertical is as important as horizontal. Coming quarters, 2 or 3 quarters, we'll see a lot of investments actually going into vertical projects. Bangalore will see quite a bit of action on that front, and we are aiming to get almost 50% of the planned turnover coming from, or the fresh pipeline coming from, vertical projects, mainly targeted in the city of Bangalore going forward.
All right, so Bangalore is what we are aiming forward, but are we looking for any addition of other geographies as well? Because our core focus has remained on 3 of the markets that you spoke about, but any new cities that we are targeting, or we are going to expand in the continuous pace as we move forward?
Sure, yeah. We are right now almost 50-50 on the long-term basis between Ahmedabad and Bangalore. These two markets have always been our strengths, and this is where we are operating. But going forward, medium term and short term, we definitely want to enter reasonably into the city of MMR and Pune put together. This is one additional region that we are targeting. We did one project in Pune, which has done well, and we've learned how that market dynamics work, how the regulatory environment works, the business environment works, etc. Having wetted our feet, now we are in a position to invest further in city of Pune and MMR, and you will start seeing some actions happening in the remaining part of this year between these two markets of Pune and Mumbai, along with, of course, Bangalore and Ahmedabad, which are our current markets.
Got it, Mr. Singhal. The company also has several projects under approval as well as under planning right now. Could you maybe give us, details on certain key projects that have made significant progresses, and maybe you could see benefits coming in the next 2-3 years?
Sure. Apart from the existing large ones, which are uplands, which are some very large development in the form of horizontal developments in Ahmedabad and Bangalore, we have 3 very major projects lined up for this year launch. One is a project at National Highway 47 Ahmedabad, which will be in excess of 500 acres. This is one of the very special projects for us in terms of size, scale, and the offering. This should be launched this year. Apart from that, this year should see us our presence in Surat as well. This will be our first project in Surat. More than 250 odd acres, 300 acres of project is being planned there. Land deal is already concluded. Right now, the project is under approval and designing, etc. We should see that project also getting launched this year. Apart from that, one large vertical project in Bangalore is also lined up to be launched in next couple of months. It's situated at Bannerghatta Road in Bangalore, which is South Bangalore. So these 3 are the major ones lined up imminently next 3 to 4 months time from now.
Mr. Singhal, I want to come back to the second project that you mentioned about the Surat one. Are we expecting it to be launched in the Q2, Q3 onwards, or that is the first phase that I'm talking about, or is it going to be the later part?
So we, reasonably speaking, we should see that getting launched around Q3 of this year.
Around Q3 of this year. And what is the size, if we have to see, of this project?
This project should be in excess of 1,000 crores of top line.
Absolutely.
Mr. Singhal, I also wanted to, maybe get more perspective on, the project classifications. Obviously, residential, 98% of the project classification. Commercial is on a very minute size. Do you see this growing ahead, or is the focus going to be in residential?
So the focus of the company is clearly on residential. It's going to be remaining the same. We are a residential focused company historically, and this is how we are planning it to be. The commercial side of it, the small component that you see, is more like an adjacency to a residential project and nothing else. So clearly we are investing in residential, and this is what the strategy is for the medium term.
Got it. And Mr. Singhal, before we let you go, one last question. Now, within the residential space, you have different sectors, especially the mid-market, affordable and luxury. Is there a certain kind of strategy or a targeted mix going forward?
I couldn't hear this properly. If you could repeat the question, please.
Yes. Within the residential, you have sub-classifications like luxury, mid-market and affordable. Is there a targeted mix that the company is aiming at for the near to medium term?
Sure. In terms of affordability, we are broadly present in mid, upper mid and luxury segments. We are almost not there in affordable. Affordable is something that we clearly are not focusing at this point in time. But, even the market is taking more of upper mid and luxury segments for the last few quarters. In fact, this is where most of the action is happening. In fact, the overall proportion of sales in terms of number of units sold in the entire country, or at least in the 8 major cities of the country, you see a clear trend of mid and upper mid segments doing pretty well. This is our focus. This is our most important segment, and this is what we strive to grow in.
Yes. Well, thank you, Mr. Singhal, for joining us, and we wish you all the best for your future endeavors.
Thank you.
Yes. Well, viewers, on that note, it's time to slip into a short break, but do stay tuned. We have lots more lined up on the other side, as we'll be joined by Dilip Panjwani, who's the Chief Financial Officer at Waaree Renewables Technologies, to decode their quarter gone by.
whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Welcome back to NDTV Profit. You're watching Earnings Edge, and now we're now going to be in conversation with Waaree Renewable Technologies, who posted a strong set of numbers this quarter. And joining us to talk about the quarter gone by and the future outlook of the company, we're joined by the Chief Financial Officer at Waaree Renewables, Mr. Dilip Panjwani. Good afternoon, Mr. Panjwani.
Good afternoon, Erika. Thank you so much for offering us this opportunity to come on your platform.
Yes. Let me start off with, asking you your assessment on how Q1 FY25 went by, and if you could maybe give us a outlook for FY25 in terms of top line and bottom line growth.
From our standpoint, if you look at our performance in terms of year on year, we have always performed very well. So from that perspective, we are very happy. We also want to say that, the way sector is offering opportunities, it's very significant. So our outlook remains very, very, hopefully, very strong, both from year perspective and for next, another 4 to 5 years timeline that the government has set for renewable space, to reach 50% of energy coming from renewable space. So they do offer a very significant opportunity for companies like us to keep the growth rate momentum going for a considerable period of time.
Yes. Mihika Barve this side, and I also wanted to get and talk more about your order book. Now, it's the unexecuted order book stands at over 2,100 megawatt power, but you have said that the company will be executing the current order book in the 9 to 12 months. How much of it would be executed in FY25 itself?
So, if you look at our order book in the same period in the last year, we were at around, 800 megawatt only, and now we have doubled in that parameter also. So in the March end, we were at 2.3 gigawatt. Our order book is now 2.1 gigawatt because we have executed around 215 megawatt in this quarter, sorry. And, going by 9 to 12 months, our expectation is that, almost 75% of the order needs to get executed in next 9 months. That's roughly about 1.8 gigawatt that we are talking. That translates to around, put together with Q1, that translates to about 2,400 to 2,500 crore of existing order book. We are not even talking of what we are chasing and what we ought to be. That when you translate to our last year's earnings is again 2.5 times or almost virtually 3 times larger than growth rate that we are speaking.
Yes. Correct me if I'm wrong with, the revenue estimates that you gave. Does that bring the per megawatt revenue potential for the company to around 1.2 crores?
So we are in the range of 1 to 1.2 crore, give and take, what kind of orders we get, whether it's turnkey or balance of system. But your metric is right. We are always roughly in the range of 1 to 1.2 crore per megawatt.
Got it, Mr. Panjwani. I also want to get more outlook in terms of order book growth. How is the bidding pipeline looking like? Maybe on how it's broken down to segment or project type wise, and what's your outlook in terms of order growth potential for the financial year?
The business that we are chasing now has also doubled. At this same period in last year, we were at 7 gigawatt. We are at 15 and odd gigawatt talking to our clients. This includes tender business and the C&I potential that we are talking. So utility scale IPPs also. So most of the utility scale IPPs are again, tariff driven, who have taken biddings from government or NTPC or SECI and those kinds of stuff. So it's a mix of both, but the domination, has been utility scale IPPs for us. That's now shifting to government as well for us. So in the order book also, right now we have 30% from government business. So in the bidding pipeline also that is moving towards 30-40% now. But more trajectory we see now, it's coming from government.
Okay, so that maybe the breakup from government orders could increase, as we grow as well in terms of order book.
Yeah, certainly. If you look at even the last quarter gone by, where 16 gigawatt of tenders were issued in March quarter. And though those are predominantly from government, government driven, policy driven, where government asks NTPC and SECI and etc. to issue tenders. And current policy also framework, government wants to issue 50 gigawatt per annum order tenders in each year. So that's a big, huge business for us that we are looking from the government side.
Got it. I also wanted to get your outlook first on the Indian solar industry as a whole. I know you've identified this segment, especially the rooftop segment, as a potential growth opportunity for the company. So I wanted to get your outlook on the entire industry as a whole first.
The outlook, no one can beat this kind of an environment that the government is offering. There are 3 to 4 opportunities that the government is offering. One is they want to reach 50% of renewable energy. They want to reach net zero. They have firm number plan of 280 gigawatt from solar, 220 from wind, 500 gigawatt put together for the renewable. Now they are talking of battery energy storage system. That's a 42 gigawatt opportunity, roughly translating to 14 lakh crores. There's a pump storage. There's an RTC that's happening. There's a hybrid that's happening. Then there's a C&I opportunity that's happening separately over and above that. Then there's a carbon tax that's going to come in Europe, and Indian companies exporting there must transform their energy to energy transition into renewable space. There is an 100 club that's happening. So there's so much happening, to put a number would be also an underestimate in this sector. The inflection growth is just now being made visible in terms of the numbers that the companies that are reporting, companies like ours.
Yes. I get that, there have been many policy pushes and a lot of support from the government as well. Solar, it's almost 85% of our renewable capacity right now. But from the, what kind of challenges could pose from a company or an industry point of standpoint?
It has been going good as of now. There are no significant challenges that we have observed, including the supply chain challenges that we were talking. And, the module capacity is available. The vendor ecosystem has developed in India. So there are no significant, except, manpower could be a challenge in future, because to scale up very significantly higher, you need a qualified manpower. But from a Waaree perspective, we are good for now, because, we don't need significant manpower to add to deliver this kind of growth also.
Yes. And I want to get more perspective on your ground-mounted and rooftop solar projects. What's the kind of traction you've been getting in both these segments, and how do you see growth, going forward?
Significantly higher orders we are getting still from ground-mounted, but the rooftop opportunity also is between 30 to 40 gigawatt in India. That's yet untapped. So we do have orders from rooftop. In the current quarter also we got one order on the rooftop, but good to speak that we also got a floating solar order. The order may be small, but it speaks that the country is moving in a direction where all forms of rooftop, ground-mounted, floating solar, all these kinds of orders are now coming up, which we have been talking for the last couple of years.
Yes. Ms. Beverages, you also mentioned the opportunity in terms of green hydrogen and battery storage. Could you maybe give us more color on what the company has in terms of orders in hand and, the execution timeline for the same? I believe you all did get a contract to set up a 1 megawatt green hydrogen plant.
So that was a pilot project, but in terms of very significant orders, there are investments yet to happen, and that's a significant opportunity. Apart from those, the lineup of opportunities of RTC hybrid, which I spoke, the green hydrogen also will need solar plants to be set up. So that opportunity we are foreseeing in the coming year to come up for companies like us.
Okay. So am I right to assume, correct me if I'm wrong, that your bidding pipeline could also see some kind of projects related to green hydrogen and battery energy?
Yes, we will be now chasing even those pipeline as well as going forward.
Yes. And lastly, Mr. Beverages, before I let you go, I just want you, if you could talk about the growth strategy going forward in terms of O&M markets, international markets, as well as, growing your EPC segment.
So, EPC segment, as I told you, it's a sitting opportunity, and you have to deliver the best to the customers, like we have been in this business for a decade. But from an O&M perspective, the good to talk about is we are already sitting at 0.5 gigawatt of portfolio of assets. We have 1.5 gigawatt of orders in our hand as of today, in terms of once we complete these EPC projects that will translate to O&M tail business for us. These are sitting orders. We are also equally chasing O&M as we chase EPC. Because the tail business comes naturally to us, because we have been in this business for so long. So that's our strategy going forward, that we keep focusing on diversification into hybrid, RTC, battery energy storage system, O&M, into various forms of O&Ms. That's the strategy that the company is doing. As far as international business is concerned, right now the domestic opportunity itself is quite long. But at the right time, we will definitely, approach international markets as well.
Well, thank you, Mr. Beverages, for giving us the outlook on, the growth process of your company, and wish you all the best.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Welcome, you're watching the Small and Mid Cap Show. I am Mahima Vachrajani. Well, we have a very interesting lineup of managements lined up for you on the Small and Mid Cap Show today. First up, we're joined by Mr. Dinesh Agrawal, founder and CEO of India Mart. India Mart came out with its Q1 FY25 results, good set of numbers, margins have significantly improved. But to discuss more about this, how the quarter has gone by and how FY25 is shaping up for the company, we'll welcome Mr. Dinesh Agrawal. Welcome to the show, sir. Give us some context as to how the quarter has gone by. A good set of numbers. There's growth in margins as well as net profit. Give us some color as to how the quarter has gone by and how do you see FY25 shaping up as a whole?
Yeah, so revenue from operations on a standalone basis grew by about 18% to 315 crores. And EBITDA margin has been expanded specifically in the Q1 because the hirings have happened a little later. But still, it is much higher than the previous quarters. We plan to maintain this margin at about 33-34%. Other income has also shown handsome gains. So that is why the profit after tax is very high right now. In terms of the collections from customer, also has grown at 15% to 341 crores. Cash generated from operations has also grown to 125 crores for the quarter. Currently, we have about a deferred revenue of about 1,421 crores and cash balance at 2,150 crores. Our paying suppliers have grown moderately by only 1,500 customers from 214,000 to 216,000.
Right. So, Mr. Agrawal, since you mentioned, your paying subscribers addition has been muted for this quarter. I want to understand that this is majorly on the back of churn that has been observed in the customers from silver monthly and silver annual packages because you've taken some kind of price hikes there. So, I want to understand that how do you plan to recover this loss that has happened in Q1 FY25? Do you see that prices going back to what they were before this, or is there some other strategy that you'll be using?
We are trying to optimize where we acquire customers from, which industry and which cities that we acquire customers from. We should acquire customers more in the profitable segment, and that is what we have been doing. On the churn side, yes, SME churns have been elevated on the silver annual and silver monthly level. However, we continue to see very healthy retention on the gold and platinum subscribers. As I told on the con call also, about 50% of the customers are in the gold and platinum. They account for about 75% of the revenue. So we continue to operate with a profitable growth mindset, and we will address the churn issue by moderating our algorithms to reduce the competition as well as to increase the relevancy for the suppliers getting buyer inquiries.
Right. So then, Mr. Agarwal, how long do you think will it take for you to, come back to the normal levels as it was before?
Yeah, it is taking some time, so I'm not able to comment on that. We continue to work on that. Maybe another 2 quarters, but let us work closely on that and see how it shapes up.
Understood. And, you've also started cutting back on marketing expenditure overall. So I want to understand that will this overall impact your growth going forward?
No, marketing spend has been nil for many years now. We have not yet started any brand marketing. The last time we did any marketing spend was sometime around in 2016 or something. So we have not been doing any marketing spend. We have had organic and word of mouth growth. Our brand has been pretty strong on the in the market. So we have not needed any inorganic marketing or advertising so far. If we need be, we have enough cash and enough profits to do that.
Right. Mr. Agarwal, in this particular quarter, you've also acquired 10% of Baldor Technologies. So I want to understand that what are the kind of synergies that you're expecting from this particular acquisition, and what is the kind of revenue inflow are you expecting from this acquisition?
See, we have made a minority investment of 10% into ID5. They run a very good digital KYC and digital onboarding process. Apart from that, they have a very good bank statement analyzer and things like that. So we are looking at help in the process of merchant onboarding as well as buyer any kind of a user fraud detection going forward, because as the digital adoption is growing, these kind of technologies would come at help at India Mart also. And we also believe that in the long run, there could be more synergies possible going forward.
Right. And Mr. Agarwal, for FY24, you'd roughly done revenue of 1,200 odd crores, and your net profits were approximately 335 odd crores. So give us some, idea as to what is your target for FY25 in terms of top line and bottom line.
So going by the revenue run rate, currently we are at a revenue run rate on the consolidated basis of about 331 crores. So this looks like if you quadruple it, because most of our revenues come from collection from customers, and collection from customer has been growing at 16, 17, 18%. So similar growth is expected in the upcoming quarters also. In terms of cash from operation or in terms of profit, I think we are doing a lot better than previous year. Previous year we have done about 28% overall EBITDA margin. This year we are expecting at about 33% overall EBITDA margin.
Okay. And, I want to understand that, this quarter you've done EBITDA margins of 36%. So overall, you're expecting a 33% EBITDA margin. Why is that dip? One thing, what will be the overall levers that will maintain the margins at 33%?
Yeah, so last year we did about 28%, and last quarter, January, JFM quarter, we have done some gains because of the certain optimizations that we have done. There is a natural leverage that is coming as the revenue is increasing. The fixed costs are coming as a percentage lower of that. Also, in the April, May, June quarter, because the hiring typically happens towards the end of June and beginning of July, based upon the college outcomes. So we are expecting this 37% margin to dip further to maybe 33, 34%.
Right. And Mr. Agarwal, with respect to your internal targets for the entire FY25 for certain operational metrics like unique business inquiries, supplier storefronts and traffic, what are the internal targets that you've set for yourself?
So we continue to maintain our internal target at 20 odd %. And depending upon, because it's a marketplace and lot more moving parts are there, we are a horizontal marketplace. So daily unique business inquiries have increased 14-15% in the last 2 quarters, and we would want to maintain this at the similar levels. In terms of the supplier total supplier base, if you see, we have about 8 million total supplier base, and that grows slowly and slowly because we are adding about 0.1 million supplier almost every quarter, so about 500,000 supplier in the entire year. In terms of registered buyers also, if you see, we increase the registered buyers by about 3 to 4 million every quarter, so about 10 to 12 million every year.
Right. Well, Mr. Agarwal, thank you so much for giving us those insights on India Mart, and all the best for the entire FY25. But with that, it's time to slip into a short break. But up next, we'll be joined by the management of Jindal Stainless and Sapphire Foods. So stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
you're watching the small and mid cap show. Well, Jindal Stainless is also in focus. It came out with its Q1 FY25 results. Revenue was down around 7.4%. EBITDA was up 1.6%. Margins have improved a tad bit and net profit was down around 12%. But to discuss more about how the company quarter gone by and how FY25 is shaping up, we're joined by Mr. Anurag Mantri, ED and Group CFO of Jindal Stainless. Welcome to the show, sir. I want to understand that what is your assessment of Q1 FY25 and what is the kind of outlook that you'll give for overall FY25, especially for your EBITDA for ton guidance?
So if you see Q1 results, we have done the highest ever sales in terms of the volumes in Q1, so which is a good sign, and this is despite the challenges in the global market and especially the export market, because our export mix in this quarter was also still lower at 10%. So despite that, because we continue to tap a momentum in the domestic market and especially the newer sector which we cater in the stainless steel sector, which continue to grow up the demand of the volume, our volumes. So I think, and especially an EBITDA per ton, if you see, we have seen a sequential improvement in the sequential basis. So we are seeing overall a good positive sign, and our guidance for the year, therefore, it gives a confidence of us that we should be able to achieve a guidance of around 20% of the volume growth in this financial year. And the EBITDA should be around 18 to 20,000, but depending, obviously, a lot will depend on this guidance is how the export market shapes up in H2. Also, the domestic industry is currently under pressure from the lot of imports coming from China, and which has to be addressed at a faster pace, because we are seeing the all-time high imports coming from China at this stage. And last time in the DGTR, when DGTR did an investigation, there was finding that 18 to 22% has been non-WTO subsidies which has been provided by Chinese government to the Chinese manufacturer. We our long-standing demand is that it should be addressed, because otherwise, especially the MSME manufacturers are right now actually really struggling. And in any country, to grow develop the manufacturing ecosystem, it is necessary that entire, right from the bigger player to MSME player, also thrives in that market. So with that, I think that also need to be addressed. If all those export market and the Chinese imports pressure, depending on that, we still maintain our guidance. We said, okay, that 20% should be achievable, but it will all depend on these two factors also.
Right, Mr. Mantri. This is Mika Barve this side. You mentioned, demand in the domestic market, being under pressure, with China's imports. But are there still some pockets of growth that the company is seeing? And if yes, from which sectors? I mean, you all cater to various industries like auto, railways, construction. So which sectors would be driving the demand and growth going forward?
So right now, last quarter, we have seen a good uptick in the demand, which continue to remain strong in railways, automobile, pipe and tube, certain valuable pipe and tube segments, as well as lifts and elevator segment. These demands continue to remain domestic demand remain to be strong. The newer sectors which we cater, because at Jindal Stainless, we are at the forefront of the very high quality products and of the stainless steel. So the newer sector like hydrogen, ethanol, all these should also, the kind of traction which we are getting should continue to cater volumes for us in the future. But right now, railway, auto, PNT, lifts and elevator, they are actually showing a good demand traction.
Got it, Mr. Mantri. And I also want to talk about the latest approved 5,000 crore fundraise. If you could just give us some details. And, companies mentioned that this is for the expansion plans. So how would it be allocated for, the expansion plans that the company does have in place right now?
See, this is an enabling resolution to prepare ourselves for the future growth of the company. I think if you see, as I mentioned, that the domestic demand in stainless steel industry continues to remain robust, and we need to continue to maintain our leadership position and consolidate our positions in the domestic market to tap that. Right? So we are getting this enabling resolution which board has approved for us to tap the organic and inorganic opportunities whenever it comes. So we will because we want, the two things is very key for us. One is the prudent capital allocation. We want to maintain a very healthy ratios. And considering we also want to keep consolidating the position in the for the stainless steel sector and especially the export market and the domestic market both side. So continue to grow more and make in India efforts of that. So with that, I think to tap these two things, it's a more enabling resolution at this stage, and we'll see that how the opportunities unfolds for us.
Mr. Mantri, and to end this, I want to ask lastly on the the timelines for your two main expansion plans. One is the expansion of the downstream lines, and one is the upgradation of the infrastructure facilities. When would we see the full effect of these expansion plans coming into place?
All the expansion plans which we have announced, I think, will be which we have currently announced, will be up and running in next 2 to 3 years. So because these include the melt shop of the Indonesia, the downstream. So it's actually combination and balancing facilities also. So the timings have been that within 2 to 3 years, all these expansions should come on the stream.
Right. Well, Mr. Mantri, thank you so much for giving us those insights on your company, and all the best for FY25. And thank you so much for taking our time and speaking with us at NDTV Profit. But with that, we'll shift focus to Sapphire Foods. Sapphire Foods also came out with its Q1 FY25 numbers, where revenue was up 10%, EBITDA was up around 2.3%. However, margins have taken a hit from 18.6% down to 17.3%, and net profit is down around 67%. So to discuss more about how quarter has gone by, we are joined by Mr. Sanjay Purohit, whole-time director and group CEO of Sapphire Foods India. Welcome to the show, Mr. Purohit. My first question to you is that your revenues have grown 10%. However, your margins and net profit have taken a hit. So give us some color as to why that has happened.
So thank you for having me on the show, Mahima. Firstly, overall consumer demand sentiment continues to remain subdued, as we've seen over the last perhaps 4-6 quarters. And within that subdued demand, I think we've had a steady performance on KFC, and I'll give a little more nuance in a minute. And we've seen an uptick in performance on Pizza Hut and Sri Lanka. On KFC in April, because of the shift of Navratra days, where a non-veg is eschewed by a large section of people, and we see a drop in KFC sales. Navratra was entirely in April this time versus last year in May, and therefore April from a same-store sales growth perspective on KFC was muted. May and June was all right, and as we are getting into quarter 2 also, we are seeing a similar trend. However, because of operating deleverage, largely because of that Navratra impact, you're seeing slight erosion in margin on KFC. So it came down to 18.8%, which is still perhaps the best in the industry. On Pizza Hut, we've had an uptick in performance. We've had about 5-6 quarters of declining ADS trends. But this quarter, on the back of intervention on product innovation, we launched Melts, which is an outstanding product, backed it up with television advertising. We've seen an uptick in performance. And our Sri Lanka business also now has started to rebound, a double-digit same-store sales growth. So overall steady, but because of operating deleverage and Pizza Hut year-on-year being lower, though on sequential basis being a little better, we've seen this margin erosion.
Understood, Mr. Purohit. I also want to understand that I was seeing your channel contribution, and on a year-on-year basis, the contribution from delivery and takeaway is increasing as compared to dine-ins. So I want to understand that what is your strategy going forward? What is the kind of store expansion are you looking at, or will you be cutting down your guidance for store expansion because delivery and takeaway are just simply increasing?
So two parts to the question. What is happening on the channel part? And I'll explain that. There is a marginally gradual shift, if I could say so, from dine-in to delivery that indeed we are seeing. So that is in our hitherto operating hours of say 11 to 11. Over the last year, however, in most of our stores, we have increased our operating hours, and today we are open in some stores till 2 o'clock, and some stores even right up to 3 to 4 o'clock in the morning. Now that slot is almost entirely delivery. There's no dine-in sales there. And hence that channel or that day part coming into the picture has skewed the delivery proportions a little bit. Apart from that, we've seen just a very gradual or marginal shift in the dine-in versus delivery proportions. Right. Having said that, from a store expansion perspective, we had called out that we are on track to double KFC store count by the end of December 24. So December 21, whatever we were, we should be able to double it by the end of the year. On Pizza Hut, we continue to be very cautious.
Right.
In the first 6 months, we've opened just one store. Right. I don't think the next 6 months it will be at that low pace. It will be slightly better than that. And in Sri Lanka also, I think till the economy fully bounces back, we're going to be cautious.
Got it. And, with respect to your same-store sales growth, like you rightly mentioned, it's a double-digit growth for the Sri Lanka business. However, Pizza Hut and KFC same-store sales growth have been, under pressure since the past few quarters. So when do you expect recovery there?
So, first of all, we are doing all that we can to improve trajectory on the business. On KFC, we launched the International Zinger Festival. Right now, the rolls range improves our snacking options that we've got, to offer consumers. We've pushed lunch in a significant manner. The late night occasion is something that we are pushing. So we're doing all that we can. And we've got to still remember that there is a subdued consumer demand environment that we are operating in. I think Q2 should still continue in the same vein, and I believe that towards the end of the calendar year, we should start seeing an improvement. On Pizza Hut, sequentially there is an improvement, but perhaps it will take another 2-3 quarters for us to translate that into same-store sales growth.
Right. Got it, Mr. Purohit. Well, thank you so much for taking our time and speaking with us at NDTV Profit. We look forward to a longer chat in the near future. But with that, it's time to wrap the small and mid-cap show. But remember, India Bulls Housing Finance Limited is now Samman Capital Limited. Jio Samman se, and keep watching NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hello and welcome to Earnings Edge. I'm Anushi Vakharia, and today we'll be speaking to some interesting managements, but we are joined by Mr. Ravi Vishwanathan, the MD of the show, and the Ravi Prakash, the global CFO. Hello and welcome to the show.
Good afternoon. Good afternoon. Thank you for having us.
Now, I'll start off with the Q1 performance now. So this is the third quarter wherein we've seen the profitability continuing. I want to understand from you, what is the road ahead in terms of the profits and as well as the revenue growth picture, if you can give us an outline for the whole FY25.
Thank you, and I think it's been a good quarter one. We had a very good performance from a revenue growth perspective. For the first time in many quarters, we had a double-digit revenue growth, the company growing at almost 11% to 2,539 crores. What was encouraging was the fact that we grew across both our segments, be it the integrated supply chain solution services and the network solution segment. Both the segments grew handsomely, 8.1% on the ISCS and 14.6% on the NS segment. So we are extremely buoyed by that. And that led to our PBT growing for the fourth consecutive quarter. So over the last 4 quarters, we have built a very strong momentum, both in our revenue and in our margins, and that is, resulting in our PBT growth. Our outlook going forward is to continue on this momentum, and we expect to have double-digit PBT and hopefully end the year on a very good note across the next 3 quarters. Specifically, I would say, what is encouraging for us is that on the network solution side, we see significant growth in our volumes, and that's again something which we have witnessed after about 3 or 4 quarters of flat volume growth, and this has contributed very handsomely to the global forwarding business, which resulted in the 14.6% growth in the network solution business. So overall, we are very confident about our revenues and our continuing momentum in our profitability.
All right, so the growth momentum to continue. Can you quantify in terms of percentage, what is the growth number that we should be looking out for in FY25?
I would probably not hazard a guess at this point in terms of our guidance in that sense. But what we are confident of is to continue the momentum and deliver the profit numbers that we are very confident of. So a double-digit profit number across the 4 quarters is really what our focus is. As we continue on our journey to ensure that we are amongst the top 50 global supply chain companies over the next 3 to 5 year period. So that is really the focus of the company. What gives us the confidence at this point in terms of that vision is the very strong pipeline that we have. We are over 4,000 crores of annualized revenue in the pipeline. And the quality of the pipeline is something which we are extremely happy about. Very significant large deals which are now part of the pipeline gives us the confidence that we'll be able to grow on this momentum that we have built. If you look at outsourcing itself as a trend in the Western countries, it is something which we have started participating in a more concrete manner over the last 2-3 quarters. And if you look at what has happened, if I take the UK as a market, our average deal sizes used to be about 2 to 3 million pounds, and that has increased to about 9 million pounds in the last 12 to 15 months on the back of the very large deal that we signed with one of the utility companies in the UK. Similarly, in the US, our average deal sizes have significantly increased from about $4.5 million to almost $10 million. So more than twice in terms of the deal sizes. And that's coming on the back of the fact that we are now participating in a significant amount of tech-led large deals.
Right, that was quite interesting and to understand, and thank you for the breakup over here. But I also want to understand one thing which stood out in your past conference call was the 4,000 crore of pipeline opportunities that you've seen. Can you explain us when we can expect to see this in part of our revenue? What is the kind of conversion that we are looking at for this one?
Right. I think over the first quarter, we announced quite a few significant wins with very large aftermarket solutioning in the Asia Pacific market. We also announced a win in India with a commercial vehicle manufacturer. So we are converting many of these deals, and that is really feeding into the revenue. So about 246 crores of revenue for the first quarter has come on the back of new wins that we have had. So revenue in this quarter coming from new business wins have been about 246 quarters, which is roughly about 10.6% of the previous quarter's revenue. So I think our revenue momentum is significantly assisted by the tailwinds coming from the pipeline conversion.
All right, that's fair. Now, if I want to look at some of your segments over here, so again, I want to understand more on the India side. If we take the integrated supply chain solution over here, I want to understand, we have seen this trend in Q3, Q4, as well as Q1. We've seen a 6% decline in Q1. Now, understand what's the scenario building here? What's the kind of outlook that we should be watching out for?
I would say Q1 was a soft quarter from an India perspective and probably reflects most of the industry. I would be very, we are at least confident of India, especially what we saw in the budget and the boost that the budget has given to the manufacturing sector, which in many ways will feed into the supply chain business. So we are confident going forward. Hopefully the festival season and beyond will give us the required momentum for us to have significant differential growth in India compared to what we're seeing in the rest of the world.
Okay, now coming to you, Mr. Ravi Prakash, I want to understand the margin pressure that has gone in the network solution business. So the last 3 years, if you are to see, 4.7% in FY24 as compared to 7.4%. Now, Mr. Vishwanathan did mention that there was a volume pickup over here. So going forward, can we expect the margin recovery also to come back in picture in this segment?
Yes, it will be, but probably we are about a couple of quarters out. What has happened in the network segment is we have two businesses. On the freight forwarding side, rates as well as cost has gone up because of the Red Sea situation, and therefore margins are getting impacted. And the second part is we have a business called the IFM Integrated Final Mile, which we had already communicated earlier is in the process of a turnaround. And we expect that to probably start giving results from Q3 of this year onwards. So we are conscious of the fact that we need to get back to the margins that we had in the past, and we should start seeing that happening from Q3 of this year. I also want to point out, even though the question was on the segmental margins, that overall as a portfolio, the profitability this quarter we made 13.7 crores, which is a 100 basis point improvement in PBT margin versus the same period last year. So even though one of the segments is kind of holding firm, the other segment, which is integrated supply chain solutions, is helping us deliver better margins. So year on year, it was 100 basis points, which is in line with our medium-term goals. Our medium-term goal is to grow margin 50 to 100 basis points every year. So as a portfolio, we are quite comfortable that we can get there.
All right, Mr. Ravi Prakash, I want to stick with you. I want to understand the outlook which is going on with some of the major cost line items over here, be it the freight cost rates, the volume outlook over there. What is it currently, if we go and compare it to the Q4 picture? How are the cost items looking at the major ones?
If I compare with Q4, a couple of quick changes have happened. You will see that the business mix in some of our supply chain contracts has changed, and that is reflected in the material cost going up. And that's fine because we are actually doing more value-added work in some of our geographies, and that's driving material cost. But as a gross margin, we are still able to manage it. On the freight side, very clearly you'll see a growth in freight costs because of what I talked about earlier, the Red Sea situation. Volume has been good, but then the freight costs have also been up. We expect this elevated freight cost to continue, like I said, for a couple of quarters. Probably by the end of this calendar year is when we can maybe hope for moderation, but it's honestly anybody's guess. What we are doing from our perspective is, in the supply chain side of the business where we have strong revenue momentum, we are focusing on operating leverage to deliver margins. On the network segment where we have cost pressures because of external reasons, we are focusing on internal productivity. And as a portfolio, I keep coming back to what we had said, we intend to continue to deliver the 50 to 100 basis point margin improvement.
The freight cost moderation, maybe we can see it building up from the quarters coming forward as well. But now I want to understand what are the capex plans, if you have to look at, any of y'all can take this up, the capex plans for the overall year that we are looking at, and even if we go forward, this is a second part question to this. What is the mix that we are looking at in our segments? Are we expected to see integrated supply chains being more than the 55% level that we are seeing?
In general, there is a lot of momentum on the integrated supply chain solutions, even for the last few quarters. And we are quite encouraged by it because this is a segment where contracts are sticky, they are long-term, they are predictable. We expect to see strength in that segment. How it will pan out in terms of mix, probably difficult to predict beyond what we are right now, but we expect the segment to do well. Now, to support this growth, there would be some capex required. Normally, we have about 1% of our revenue being spent in capex, unless we come across a very major strategic project where we may have to lay out one-time capex. At the moment, we would say that for this fiscal, we are probably at about 1% until if we come across any large project which requires an outlay, which we would be willing to do because the company's balance sheet is in a pretty strong position right now. Our debt, actually gross debt has come down. Our interest cost has more than halved over the last 12 months. And so we are actually in a pretty good position to use that flexibility to invest in capex if required.
So 1% is the level that we are looking at for the capex for this year going forward. But that was the final question. Thank you, Mr. Vishwanathan, and thank you, Mr. Ravi Prakash, for joining and sharing your insights on TVS Supply Chains and the outlook forward for the business.
Thank you.
And well, with that, we'll slip into a short break on this segment, but do stay tuned into more such updates coming on the other side from NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Thanks for tuning into this conversation. I'm Neeraj Shah. And the reason why we're trying to talk to the company, or we are going to be talking to this company, Quick Heal, is not just because of what they've done in the quarterly numbers. Actually, the genesis of this conversation stems from a conversation that we had with Checkpoint. Checkpoint is a $20 billion company out of the US at Davos, and they had spoken about how they believed that the spends on cybersecurity and internet security will only go up over the course of the next decade, over the next 5 to 7 years at the very least. And on their base, Checkpoint believed that the growth rates could be 20 to 25%. It got me thinking about why is it that we do not have such a business out of India talking about such numbers and focusing on cybersecurity. Pat came the answer about Quick Heal. They have been around for a while, maybe focusing on the retail consumer space. And since the advent of Vishal Salvi, who is the current CEO of Quick Heal, about 12 to 18 months ago, I believe they have shifted the focus to the enterprise segment in a meaningful way as well. So it would be lovely to understand from him how he sees the space over the course of the next 3 to 5 years, and what will Quick Heal's participation or role in this growth story be, if there is one. Vishal, great having you. Thanks for joining in. I hope all is well.
All is well, Neeraj. Great to be here.
Let me bring in some numbers here, and then I'll again shift focus to why is it that a company like yours, I mean, just being in India, would it be the, maybe it's a necessary condition, don't quite know if it's a sufficient one, but let me try and bring in some numbers to the answer that you just gave, right? You spoke about making some progress on the culture, on attitude, etc. It's not quite showing in the numbers, right, Vishal? I mean, I'm looking at your sales numbers. They've largely been flat for a number of quarters now. In fact, the latest quarterly numbers, your margins have really come off. So tie it in with what you're doing at the company level versus what's happening to the numbers.
That way, Neeraj. I would see it from the other way, right? So if you look at in terms of our year-on-year Q1 performance, so we have 37% growth as compared to our last year's Q1 performance. We were 15 crores a negative EBITDA last year's quarter one. We are right now 2.6 positive, so it's a 17.6% increase. We have additional 20 crores in the bag right now in the quarter one itself as compared to last year in terms of performance. We are flattish in terms of our Q1 performance, and compared to that, in terms of the fluctuation that used to have, because Q1 has generally been our a weak quarter traditionally in the organization. We're trying to actually address that and bring in more predictability in terms of how our performance is coming on, both in terms of EBITDA as well as in terms of revenue growth. So I think I'm extremely happy with the way we have progressed. We have always said that, we will gradually demonstrate that, how we are progressing on a quarter-on-quarter basis. And we have always focused on profitable growth. And the last 4 quarters, we have ensured that we are delivering that. We have shown steady growth. If you look at even in the last 2 years, you moved from 20% enterprise, versus consumer split. Today, we are at 42% enterprise and consumer split. So all the trends are moving towards where we want to go. So I'm extremely comfortable with what we have delivered. Of course, we could have done better. We have had some headwinds in terms of how the consumer business adoption is growing. And within that market, while the competition is really struggling, we are sitting pretty in terms of how we are growing on consumer side. On the enterprise side, we had headwinds from the central elections, where a lot of the government deals have got deferred to Q2 and Q3. But in spite of that, we have delivered this result. We feel comfortable, and I wouldn't put it the way you have put it, Neeraj.
Okay, so leave out for the Q1 seasonality. I'm just saying that the operating margins did come off relative to the previous 3 quarters. So that's the point I was trying to make. But I buy your argument that maybe there were one-offs. So are you saying, therefore, Vishal, that quarter 2, quarter 3, quarter 4, I'm right now focusing on the here and now before I focus on the long term. But are you saying that after the Q1, relative to the previous 3 quarters, the slower Q1 growth on the operational front, will it improve in the quarters to come?
Yeah, our track record for the company has always been that, right? The Q2 and Q4 has generally been a very positive quarters for us. And you can expect that something similar would happen. So we are extremely bullish about how we should look at a short term as well as a long term. And we are working towards, giving, that improved result as we have done in past.
Now, a word on the strategy, Vishal. You mentioned about how enterprise is 42, if I'm not wrong, right? I thought it was 37, but 42 right now. So how does this work? Because typically I would believe, and maybe I'm wrong here, so excuse me if that's the case, but I would believe that if enterprise versus B2C goes up, the negotiating power on pricing goes down a bit, maybe the working capital cycle gets elongated, and I believe in your case, the debtor days have moved up. So how does that shape up as you focus a lot more on enterprises, which I presume is the strategy?
Absolutely. The reason I'm here is for enterprise, right? That's really what I do, and that's what I know, and that's what I've done in the last 3 decades, right? So clearly we want to scale and we want to grow. And also that is where the growth is, right? The consumer market is deeply commoditized. We are obviously adding significant value because, we protect, and we have a market share of 33% in India. We have 9 million endpoints. So we are definitely adding value, and it propels our understanding of what's happening in the space and, gives us that edge in terms of building the right tech to solve the problem, right? So we want to make sure we straddle on both the businesses, consumer as well as enterprise. But enterprise is where the growth is. We are, leaders in the SMB and the micro space already in India. And what we are doing now is building and scaling our products in terms of their maturity and readiness so that we can actually meet the demands of the mid-market and later on to the lower end of the large enterprises. So that's really what we are focusing on. There's a huge demand out there. There is a lot of unserved customers who have not yet used some of the products that we have already introduced in the market. So I think we are, from that point of view, focusing on that growth. And India obviously has huge potential, given that we have such a strong digital ambition for the country, both in terms of government as well as private sector. So I think that's really what we are focusing on, and that's what we're investing on as well. And we believe that 42% will become 60%, 70%, 90%, because that's the place where the growth is going to come for the company.
So could it have would you be able to do that while simultaneously maintaining your operational metrics or improving them maybe, and at the same time keeping a lid on the elongation of the working capital cycle?
Yeah, I think we are actually very comfortable in terms of our cost. If you see, one of the things we are very predictable is our prudence in cost management. With the advent of AI and tools and automation, actually the amount of the value that we can create in terms of creating better software more productively is higher, and so which means that we will have better control in terms of how faster and how cheaper we can build our products, and I think we feel very comfortable in terms of how we are managing our cost, and we will continue to do that. We both building in the right productivity measures as well as not shying away from investing where we need to invest. While that continues, I think the focus is going to be on how do we create that value layer by looking at all the data that we are having in terms of the signals that we get from the 9 million endpoints that we manage, and build solutions like threat intelligence, malware analysis platform, and so on and so forth, and bring that to our customers where we can make an entry in the large enterprises because they see significant value. And we are the only Indian player who understands these signals so deeply in terms of what's happening in the country and give those unique features back to them. So I think both of these together, I think we feel we are very comfortable in terms of what we are building for the future, especially in terms of our cost. So that structure is there. And I think to address your earlier question about the negotiations and the value. See, enterprise deals are always going to be on a deal-to-deal basis in terms of how we negotiate and how we, give the right value proposition on every deal which is there. We feel very confident that we build the right solutions and the right rates to meet those demands. So I don't think there's going to be a challenge. Also, the DSOs are far better in enterprises as compared to consumer business. So I think over a period of time, as we start, adding more and more enterprise business to, I think our predictability of collections and our capital workflow is going to get better. And that's what we've seen so far as well.
Wish you all the best for this, Vishal. Thanks so much for taking the time out and speaking to us. Really appreciate your time.
Thank you so much, Neeraj. Nice talking to you.
Likewise. And viewers, thanks for tuning in.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Good evening and welcome. You're watching The Big Story on NDTV Profit and I'm Nupur Talwar Suri. Now, the market regulator, Sebi, has flagged close to 9,000 instances of misleading or unlawful posts on social media in what is being seen as the beginning of a crackdown on finfluencer or financial influencers. Now, Sebi has called on leading platforms including Facebook, Instagram and Telegram as well as YouTube to take strict legal measures against the accounts disseminating false claims about the stock market. Sebi chairperson has also said that the new rules will combat misinformation by prohibiting associations with unregistered individuals while allowing for educational content. Let's listen in to begin with to what Madhvi Puri Butch has said.
We recently had, a regulation which we will be notifying fairly soon on this issue of influencers. And as you know, and as I've articulated, that we do not have jurisdiction over just anybody, right? I mean, the fact that it's called social media, at the most granular level, it starts with me advising my brother on something, right? It starts from there. And also the platforms on which they operate, we have no jurisdiction over them. So the way that our regulation is now framed and about to be notified is that our regulated entities, people who come under us, brokers, mutual funds, exchanges, etc., they cannot have any association with entities who do these following wrong things. And what are those wrong things? Basically two. Either if you're giving investment advice when you're not registered with Sebi, or if you are making claims of performance which you are not entitled to make and not permitted to make, then these two things are not allowed. So therefore, none of our people can actually associate with them. So which means that wherever there was advertising, sponsorship, association, brand association, etc., with many of these people, which is an important source of their revenue, unless they are truly educational in nature, they will not be able to have such association from our regulated entities.
In fact, let's go across first to Charu Singh of NDTV Profit to explain to us what this really means for influencers. Hi, Charu. Charu, break down what this could entail for finfluencers.
The Security and Exchange Board of India had long back in the month of June only had come up with a consultation paper with regulations saying that there should be no association of regulated entities with unregistered entities, that is the financial influencers, the finfluencers. And now people are waiting for these regulations to be notified. In fact, when the submission about the 9,000 social media posts being flagged as unlawful was submitted before the Rajya Sabha, and Sebi had said that it is reaching the social media platforms itself against these posts. Even on that day, Sebi chairperson Madhvi Buch at an NSE event had said that they are planning on notifying these regulations soon. And let's see how that plays out for the regulator.
All right, thank you very much, Charu, for joining in. We are also now joined by our partner at FinSec Law Advisor Sandeep Parekh and market veteran Sunil Subramanian for more insights on this. Thank you, both of you gentlemen, for joining us, and good evening. Sandeep Parekh, if I could come to you first. Now, SEBI's latest action, of course, comes as part of consistent effort that we've seen since, I think, 2023, to curtail stock and investment advice from financial influencers. What do you make of it? And is it in line with what other countries and their regulators are doing to deal with this?
Right. So, I think in terms of what SEBI is trying to do is, I think they're trying to come to grips with a phenomena which has kind of enveloped literally millions of investors and, with all these so-called influencers. And, on the one side you have, the freedom of speech and people's ability to say whatever they want, versus the need to kind of register people who are kind of trying to provide advice for a fee, or, it's very often it's undisclosed fee, it's coming from somebody else. And the investor doesn't really know about this conflict. And of course, lots of mischievous recommendations, etc. So I think SEBI's realized that it can't go after millions of people or even, tens of thousands of influencers. So they want to kind of protect their domain by saying that people within the regulated space would not be able to interact, promote, do business, do commerce with these influencers. So I think they're kind of approaching the problem from a different perspective instead of passing all these orders against thousands of people. I think that this is something which they believe they can enforce far more easily.
Right, and how do you see this in terms of what other countries are doing? Because we have seen action coming in from other regulators in other countries as well.
So, I think most countries are grappling with this phenomena of, in the US they're called, TikTok people, and, so I think it's kind of quite a common phenomena the worldwide. And I think, again, I think Western regulators are battling with it even more because, the kind of freedom of speech, they have under their constitution is far more liberal than ours as well. Ours. And therefore, I think they're finding it difficult to kind of go after these people unless they're able to prove fraud. And, the kind of deals, the backroom deals which these influencers are kind of getting into is not something which you can easily catch because, it's happening inside people's offices, inside rooms. And therefore, I think the problem is much bigger than I think the regulators have been able to digest.
Right. Mr. Subramaniam, your thoughts on SEBI now stepping in, and also just to bring some context to this conversation, the fact is that consumers seem to have a lot of trust in influencers. In fact, we'll just run those graphics for our viewers. There's a report by ASCI that suggests that 79% of consumers on the internet actually trust social media influencers. So the amount of sway they hold is quite evident, Mr. Subramaniam.
So I think that this is part of a larger problem. And I think this is one angle to it. So if you look at it, there's the derivatives trading problem. There is the actual stock trading, intraday trading problem. And then this is the actual buying of stocks through influencers. So all of these are essentially coming from a fact that the mass public, in the absence of proper knowledge, has this gambling instinct, right? And they have driven by greed. And typically, if you see, I think it's started with COVID because it's during COVID that with the lockdown and people working from home, so they had a lot more time. The explosion of the internet and Google and YouTube and everything meant access. So, and the youth of India, I think India is probably one of the youngest populations in the world. It's a combination of these three that people are just, and I would actually treat all of these three, the derivatives trading, the day trading, as well as the influence-based action, as a part of a larger desire to get rich quick in the people. Now, you mentioned that trust. Now, if he's coming from a place where he says, I want to get rich, and somebody is giving him a stock idea which can, double in a few days, so naturally he's happy with those people. He's trusting them because these people put up fancy charts. And one of the big problems with our industry, and not just our industry, but is the fact that there's so much jargon involved. And especially with technical analysis, there's so many, head and shoulders, double top, double bottoms. So kind of jargon, and people use that. And when people get swayed, and the problem there is actually financial literacy. People don't have any knowledge about the intricacies of the stock market and what happens. And on top of it, the problem you refer to other countries. Now, the difference between other countries and India is the very low liquidity of our market. You see, the BSE 500 or the NSE 500 index, it's a 500 stock index, right? Top 100 companies account for 74% of the market cap. The balance 400 are just 25%. And what about the balance 5,000 other stocks? So most of these influencers don't deal with these large caps or larger mid caps. They're dealing with the micro caps, penny stocks, telling them it's a get rich quick scheme, it's a Ponzi scheme. So I think what Sebi is doing is, I think, very, very good. And they're approaching it in a way where actually, if you see, nobody can give advice without registering with Sebi. That's very simple. So all these influencers who are advising people to buy stocks are actually in violation of Sebi. The problem for Sebi is internet is an open world. Facebook and Google and YouTube and Telegram and WhatsApp, they cannot go use the police force to go and arrest all these people and put them in jail. Well, technically they can. So that's why Sebi is going through this by two things, right? One is they are circulating the media, WhatsApp, Facebook. They are trying to get them to not allow these kind of things to happen. Now, none of them are headquartered in India. They're all foreign things. The extent to which Sebi's regulation has an impact, I think there's a lot of influence which will need to be used. And I think the IT and Telecom ministry will also get involved. But that's one way to make sure, because when you get to other kinds of content like porn or political or terrorist content, the country is able to get these websites to stop and control that. So I think similarly, if these kind of stock advices can be stopped at that level, that would be wonderful. We'll have to see the progress they make. The second, of course, is registered entities. And like the chairman's speech you saw just now, what he said is these people offer their services free to customers very often because they're getting financed by a regulated entity who is using them as a kind of an investor expansion program, saying if these guys come in, then maybe we can tap them to come into our business, whether it's brokers or mutual funds or whatever. So I think cutting off that chain of income for these influencers is a very significant step. And I think that as and when those regulations are actually notified, you will find that a big source of income will dry up for these. Now, that being said, right, you can see that the large increase in demat accounts. I think today we have 15 crore demat accounts, but there are only 5 crore mutual fund investors. So clearly, as you can see, mutual funds, which are a vehicle for long-term wealth creation, have only 1/3 the penetration of somebody who wants to get rich quick through stocks. So I think clearly one of the other things is to do financial literacy. And I think Sebi, along with the National Stock Exchange, they have a Patal Ganga facility. I think literacy of the people, making them understand that stock market can be a powerful wealth creation tool, but it's not a get-rich-quick scheme. And I think that gambling mentality which is driving people, I think we have to tackle that at the root. So I would say some more regulation, some more action on the financial literacy front will be also expected in the coming days.
Absolutely. Mr. Parekh, just touching upon what Mr. Subramaniam said, while, Sebi can put in place a framework largely to deal with this, do you think that some of this burden of educating these first-time investors should actually also lie with brokerages and investment advisories and so on and so forth? Because they also, a large number of them also associate themselves with these financial influencers.
No, so I think that's of course part of the solution. But I think the real bigger picture is that we are not talking about idiots, right? They're not fools. They just want to gamble money. I mean, I mean, we've seen the statistics twice over now from Sebi. 89% of them are losing money. Yet they continue. So I don't think they want to learn, really. They want to kind of gamble. And, if you bar them from one thing, they'll probably start doing something else. Maybe go into sports gambling or buy some lottery ticket from one of the states which allows. So, I think it's coming from there. It's not coming from, poor literacy, really, or poor financial education. So, it has to be handled at a cultural level as well, and not just as seen as a kind of an uneducated, illiterate people.
Right. Mr. Subramaniam, any final thoughts on what he's saying? Because there are many arguments being made against SEBI's action in various places, saying that this is a free market economy and we should let people learn on their own. So any final thoughts on that?
Yes, there's another overarching thing which is there in SEBI's mind here, apart from the people getting misled and doing these things. That is that these influencers, right, are probably also being influenced by insiders. So this pump and dump you have heard of, right? So what these influencers are also doing, right, is to pump a stock up and then dump it when these retail investors buy it. Now, some retail investors will make money because they would have bought it and sold it, but those who hold on make a loss. But that's a very severe thing because that's insider trading being expanded through these thousands of influencers. So I think there's a larger issue which also SEBI is trying to solve here, is this pump and dump strategy of influencers, where they're actually probably acting as the arm of people who want to do insider trading, are pumping the stocks, dumping them and making profits. And that's a huge criminal thing. And that's also, I think, something that SEBI will go after and wants to go after. And shutting this tap has another reason there, which is to stop the spread of this kind of insider trading, so to speak, in a pump and dump manner.
Right, absolutely. So you feel that this is part of a larger racket as well. Both of you, thank you very much for joining us on the broadcast. Well, it's time for a very short break, but do stay with us as on the other side, we get you all the action from the Olympics.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Well, let's shift our focus now to the Summer Olympics in Paris. India's athletes are shining at the tournament, from PV Sindhu to Lakshya Sen in badminton, Srija Akula in table tennis, and ace boxer Lavlina Borgohain have all come out, all guns blazing. Now, Rika Roy is joining us from the games. Let's start with badminton, Rika. A good day for Indian shuttlers, both PV Sindhu and Lakshya Sen advancing to the round of 16.
That's right. It's been a great day at the Paris Olympic Games for the Indians. So no medals today, but both PV Sindhu and Lakshya Sen have reached the round of 16 in this edition of the Games. In particular, one has to mention the match of Lakshya Sen. He came out as he was a underdog. He came out as a giant killer, beating Jonathan Christie, who's an all-England champion, who's number 3. Lakshya came into the game seeded number 18, but he always has this no-holds-barred attitude, and that is what he displayed in the badminton arena in Paris today. He's made comebacks after comebacks in last 1 year, and he showed the kind of tenacity that he had in making comebacks. In fact, in the first game, he was down 8-2. From there, he came back to win not the first, but the second also very, very convincingly, and thereby being termed as a giant killer. And right now, one of the real medal prospects from this edition of the Games. PV Sindhu, of course, is a returning medalist. She was taking on an Estonian shuttler who was unseeded and was able to finish off a game in 33 minutes. It wasn't a long game or a tiring game for PV Sindhu, but now she is also in the round of 16 at the Paris Olympic Games.
All right. Now, the other person we wanted to speak about was Lavlina Borgohain, who is now only one more win away from a medal. So how's that going?
That's right. Lavlina Borgohain made it to the quarterfinals at the Paris Olympic Games. In fact, I'm coming to you from outside the boxing ring in North Paris, where Lavlina has just finished her bout against a very good boxer, Hofstad. In fact, she's also 75 kilograms, as tall as Lavlina. But one really has to speak about Lavlina's attitude and the nimbleness with which she approached the fight, her footwork, and the range of shots that she displayed today against Hofstad. In fact, the first 2 rounds went completely in favor of her, all the judges ruling in favor of Lavlina Borgohain. The last one, there was a split verdict, but given the way she fought against her opponent boxer, it was Lavlina written all over the bout, and she was in a very, very cheerful mood. And it seems like it is not just this bout. She is all prepared to go up till the gold medal match and perhaps win the gold here in Paris.
Right. Right, Rika, really soaking up the atmosphere over there. But just to talk a bit more about Lavlina, she's now going to face the dangerous Li Qiang of China in her next match. She's a tough one to crack.
Yes, she will be meeting a Chinese boxer in the next round. That could be a tough and a tricky fight. But given the way Lavlina was during her round of 16 bout and the attitude that she displayed, it seemed that she is well prepared for any challenges that are thrown at her in this edition of the Games.
All right, now Swapning Kusale has qualified, of course, for the final round of the 50-meter rifle 3 positions event. So good news on that front as well, Rika?
Right. Swapnil Kusale was not one of those expected names to make it to the final of the Paris Olympic Games. He's a bit of a surprise for everyone, but it is really good news that he has now made it to the 50-meter 3P final, and the final will take place tomorrow at the Chateauroux shooting ranges. He finished in the 7th position. We'll really have to wait and see whether he turns up with India's 3rd medal or not.
All right, Rika, thank you very much for joining us. And bringing that for us. Now, a few big names have been there in the news since the morning. Those, of course, are of PV Sindhu, Lakshya Sen and Lavleena Borgohain, starting with the Indian contingent leader, PV Sindhu. The two-time Olympic medalist led the Indian team at the opening ceremony at the Paris Olympics. Now, earlier today, she registered her second victory in the Paris Olympics. PV Sindhu challenged Estonia shuttler Kristen Kuba in the round of 32. The match lasted just 32 minutes. After the smooth win, she advanced to the round of 16. Now, she is the only Indian badminton player competing in the women's singles event. She has been in full attack mode from starting of her matches in Group M at the Olympics. Lakshya Sen is, of course, the new badminton star from India. The 23-year-old has now entered the pre-quarters after defeating Indonesia's Jonathan Christie. The match went on for 50 minutes when he defeated the world number 4. He's the first Indian badminton player to qualify in the knockout stages in the men's category. Sen already has a silver medal to his name from the 2022 Commonwealth Games. He also played an important role in the Indian team that won the Thomas Cup. In the same year, Sen has been trained at the Prakash Padukone Academy. And Lavleena Borgohain is the next person we're going to be talking about. She's just one victory away from clinching a medal. Now, this after advancing to the quarterfinals of the women's boxing in the 75 kg category. With her early punches, she dominated her opponent Hofstad Suniva and was given a direct pre-quarterfinal entry. Lavleena comes from a remote hamlet of Assam. She was inspired by her elder sisters and took up boxing. The 26-year-old boxer claimed a bronze medal in the Tokyo Olympics in 2020 in the women's welterweight category. With this, she became the third Indian boxer with an Olympics medal. The other two athletes, of course, are Mary Kom and Vijendra Singh. All right, let's also now go on to Manu Bhaker, who has now become the first athlete in Indian history to actually get 2 medals in one outing. And NDTV spoke to her father.
क्षण था ना, वो तो सच्ची में देखने लायक था। आप उस टाइम पे थे नहीं, वो तो अलग ही पल था। तो वो खुशी मतलब जब एकदम निकलती है ना, वो फिर दोबारा से नहीं निकलती। अचानक अंदर से बाहर झलकती है वो तो अलग ही पल होता है। वो फिर हमेशा ही एक पहचान बन के दिल में ही रहेगा कि उस दिन वो खुशी कितनी बड़ी खुशी थी।
All right, let's quickly take a look at India's next set of events at the Paris Olympics. The Indian boxer Nishan Dev will be fighting in the 71 kg category against Ecuador's Jose Gabriel. After winning the last match on a high note, the hockey team will be playing against Belgium. And after the exceptional performance in shooting by Manu Bhaker, the Indian women's shooting team will be playing the 50-meter qualification match. On that note, it's goodbye from us, but do stay with us for more news.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
You have a missed
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hello and welcome. You're watching NDTV Profit. I'm Harsh Saita. With us is Mr. Nilesh Kambli, who is the CFO at Star Health. Results, of course, continue to be in focus, and Star Health's numbers, while not really impressive, sir, talk to us about what's the kind of at least growth glide path that one can expect in FY25 to start off before I come to ratios and start talking more numbers.
Yeah. Good morning and thank you for having me on the show. In terms of growth, we have grown by 18% in quarter one, taking our premium to 3,476 crores. In terms of growth for the full year, we are confident of achieving 18 to 20% growth. All our engines of growth, which is we are naming it as a ABCD, agency, banker, corporate, and digital. All the channels are doing well. There is an improvement in the productivity of agents. We continue to add new agents. We continue to add sales manager stations. In terms of digital business, we have increased our telesales capacity to 2,000 people. We see impressive growth in the fresh business for digital business. In terms of banker, we have 61 plus partners, and we continue to do good business with all the partners, both on the benefit as well as indemnity side. In corporate, we continue to focus on SME and MSME segment. This channel has grown at more than 100% for the quarter. So all across, we see some good growth numbers coming in all the channels. One more thing, we continue to focus on profitable segments. So that is where, in terms of agency, while the growth can be slightly subdued, it is in desired geographies. We are giving up portability business. We are giving up loss-making territories. And this growth is by design, is what we want to say.
Oh, that's very interesting. Let me delve a little bit into that. So what territories are you, or what business are you willing to cede? Where are you seeing loss-making business more? What's the kind of competition you are seeing there? Is it pricing led? Talk to us.
Yeah, so when we talk about giving up loss-making geographies, it is not about competition, but it is about fraud, wastage, and abuse, the cost of hospitalization. We see some nexus between the various elements who continue to claim. Some parts of North, some part of Gujarat is where we see some impacts. We have this data.
When the whole day passes like a blur,
Hello and welcome. You're watching NDTV Profit. I'm Harsh Saita. With us is Mr. Nilesh Kambli, who is the CFO at Star Health. Results, of course, continue to be in focus, and Star Health's numbers, while not really impressive, sir, talk to us about what's the kind of at least growth glide path that one can expect in FY25 to start off before I come to ratios and start talking more numbers.
Yeah. Good morning and thank you for having me on the show. In terms of growth, we have grown by 18% in quarter 1, taking our premium to 3,476 crores. In terms of growth for the whole year, we are confident of achieving 18 to 20% growth. All our engines of growth, which is we are naming it as a ABCD, agency, banker, corporate, and digital. All the channels are doing well. There is an improvement in the productivity of agents. We continue to add new agents. We continue to add sales manager stations. In terms of digital business, we have increased our telesales capacity to 2,000 people. We see impressive growth in the fresh business for digital business. In terms of banker, we have 61 plus partners, and we continue to do good business with all the partners, both on the benefit as well as indemnity side. In corporate, we continue to focus on SME and MSME segment. This channel has grown at more than 100% for the quarter. So all across, we see some good growth numbers coming in all the channels. One more thing, we continue to focus on profitable segments. So that is where, in terms of agency, while the growth can be slightly subdued, it is in desired geographies. We are giving up portability business. We are giving up loss-making territories. And this growth is by design, is what we want to say.
Oh, that's very interesting. Let me delve a little bit into that. So what territories are you, or what business are you willing to cede? Where are you seeing loss-making business more? What's the kind of competition you are seeing there? Is it pricing led? Talk to us.
Yeah, so when we talk about giving up loss-making geographies, it is not about competition, but it is about fraud, wastage, and abuse, the cost of hospitalization. We see some nexus between the various elements who continue to claim. Some parts of North, some part of Gujarat is where we see some impacts. We have this data at a pin code level across the country, and these are more targeted decisions depending upon the locations.
Okay, yeah, okay, I take your point. I want to try and shift focus more towards market share. Do you expect that you will continue to retain that 30% plus market share even going forward for the foreseeable future? Or do you think that some of these losses may actually leave you in a place where you're willing to cede market share at an overall level?
So if we look at an overall level, yes, we have given up some market share, but with the kind of growth that we are seeing in the kind of distribution network that we have created, we are confident and we have a strategy in place to grow in line or higher than the market growth rate and continue to improve our market share. The drop in market share that we see is more a temporary phenomenon, and we have plans and strategies to grow it higher.
Understood. And what would those be, if you can give us a flavor of that, and how quickly will they play out?
See, we have given a long-term objective of doubling our business to 30,000 crores, which is an 18% growth rate over the next 4 years. The growth in business will come from agency channel, where we are continue to add 1 lakh agents every year. We have certain productivity improvements that we are seeing in our agent productivity. In terms of digital business, as I spoke, we continue to add telesales workstations. We continue to improve our web sales top line. We continue to add partners to our bank assurance portfolio. We continue to grow our corporate business as well, especially focusing on SME. So these are the channels and the drivers of growth for us.
All right. Let me come to ratios. Before I come to combined, I want to talk a little bit about both your commission ratio as well as your claims ratio. Are you happy with the numbers that have been clocked in Q1 on both these metrics? Do you believe that you can bring that down further? What are the trends that you're seeing which are impacting some of these ratios?
Yeah, so in terms of commission ratio, to look it on a standalone basis will not be a correct number, because these are interlinked. One has to look at the expense ratio, and we have seen a 0.8% drop in our expense ratio, and we continue to do well, continue to enjoy operating leverage as we invest in our cost-saving initiatives, our digital initiatives. When it comes to loss ratio, the loss ratio has increased by 2.2%. We have mentioned in our investor presentation that we continue to invest in preventive healthcare, OPD, wellness channels, which is more a long-term investments. The benefits of it will come over a period of time. We have spent around 0.65% of the loss ratio on this initiatives. What we saw was some increased impact of fever and infectious diseases in the month of May, which is quite uncommon. So we see this as a one-off event, which had an impact of roughly 100 basis points. So if we exclude this, the loss ratio is well within our comfort zone, and this is only Q1. We have full year to make good some of this excess, which is around 30-35 crores, and we are confident of achieving our full year guidance.
Understood. And on your overall combined, right, you're now at 99 plus, at least in Q1. There's been a bit of a drag when I'm looking at it year on year. Do you expect to more than make up for this number when I'm looking at it full year FY24 versus FY25?
Absolutely, yes. We have stated that we'll improve the combined ratio by 100 basis points over FY24 for the full year, and we have plans and strategies in place to, to stick to that guidance.
Understood. And the levers, sir, for that?
So the levers we just spoke about, in terms of growing the fresh business, in terms of improving our cost efficiencies, bringing in operating leverage through our digital and tech initiatives, improving our claims efficiency through control on fraud, wastage and abuse, network negotiation of rates, the hospital network negotiation, which continues to be very, very strong for us. The severity of the claims is in line with our expectation and the scale at which we operate. So all these initiatives will ensure that, we maintain our combined ratio guidance.
Understood. You've spoken more about scale. What about and expense ratios probably coming off? But what about the industry as a whole? What are you seeing on the pricing side of things? Are you expecting to increase prices, hike prices? Is that at all on your mind? We had a large PSU insurer hike prices, of course, general insurance, but hike prices substantially. Do you expect to possibly follow suit, or do you believe that you've hiked enough, which you did do in FY24?
Yeah. See, we see at an industry level, the loss ratios have increased, and that's an industry phenomenon as well. When it comes to Star Health, we have always maintained that each and every product will be monitored on an individual basis. And whenever a certain product reaches a threshold loss ratio level, we'll go in for a price increase. We had taken a price increase last year in Family Health Optima, which was steep at 25%. As we see, we have one product where we have already implemented a price increase. We have two more products which will go in for a price increase in the next 1.5 months. So price increase will be a continuous phenomenon. We continue to monitor the loss ratios.
All right, but nothing at the moment in terms of price increase plans.
As I mentioned, one product has already went in for price increase as we speak, and two more products will go in the next 1.5 months. So,
okay,
so it's an ongoing.
Understood. And how much will that contribute to growth, value versus volume?
Yeah, so if we say around 25 to 30% of the portfolio goes in for a price increase of 10 to 15%, in terms of value, it will add around 3 to 4% on a 12-month basis. For the current year, on a 12-month basis, it will be 3 to 4% value increase. For the current year, it can be around 2.5 to 3%. If we purely look at the impact of price increase.
Understood. And with the expenses of management guidelines kicking through, what are the changes you are seeing at a ground level from an insurance perspective? Of course, you seem to be decently insulated, but your peer group not as much.
Yeah, absolutely. The EOM guidelines kicked off last year, effective 1st April 24. This is the second year, and as per the regulator, they have provided 3-year glide path to some of the insurance companies who are well above the desired ratios. While we are in the middle of the implementation of these guidelines, we see that some of the peers are under pressure to improve the expense ratios. And while we continue to be comfortable at 31% for a full year, vis-a-vis the allowable expense ratio of 35%, but we see some impact on the players.
All right. So how is that translating? Is that leading to lower competition for you?
See, we'll have to see playing it out. So some of the players are trying to manage it through more corporate business. The group health business comes at a lower expense ratio, but which has an impact on the loss ratio. So things are playing out as we see, but we believe it will benefit a large player like Star Health, who continues to operate at a lower expense ratio.
All right, I take your point. Thank you so much, sir, for speaking with us, giving us all of that perspective on Star Health, and wishing you all the very best for the rest of FY25. Hope that combined falls from 96.7 to 95.7. Of course, we'll chat with you post the Q2 numbers. Thank you so much, sir.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
All right, we're in the thick of earnings. First off, welcome to NDTV Profit. I'm Harsh Saita, and we continue to focus on numbers. And we have Zaggle Prepaid, a very strong set, at least where it comes to growth. Very, very strong set of numbers. And to try and break those down a little bit more, we have Avinash Godkhindi, who's the MD and CEO at Zaggle Prepaid. He's also the co-promoter there. First off, welcome, Avinash. We've spoken to you at various points over the last quarter. Orders continue to trickle through for you, and at a very strong rate, I must admit. Just talk to us. You've guided for a roughly 50% growth on top line versus last year, which is FY24. You closed FY24 at 770. You've done 250 plus in this quarter, and likely you will only go up from here sequentially. Would you therefore revise your top line guidance, because you'll be well past 1,000 and well past 50%?
We're tempted to, Harsh. Thank you so much for having me on your show. We're tempted to, and if you look at the year-on-year growth, it's 113%, right? 113% in revenue, and of course, PAT has been 713%, right? So let's keep the PAT number on the side for a minute. The revenue numbers have grown very strongly, and we expected them to grow well, but this has exceeded our expectation. So two reasons: one, the demand in the market for digitization as such with enterprise customers, and also we are getting the benefit of being the clear market leader in spend management as a space. And when you get market leadership position, the participants in the ecosystem tend to gravitate towards you. So we are tempted to up our guidance, but so far we are going to hold our guidance of 45 to 55% overall year-on-year growth, which would be about 1150 to 1200 crores for now. Depending on how Q2 goes, we may up our guidance.
Got it, Avinash. Let me zoom out, Avinash, and for the benefit of viewers, give us you're a fintech plus SaaS. Give us a lowdown and try and simplify this business for us, for the viewers, to try and give us a lens as to what the business is all about, and what's the growth potential like, and what's the kind of traction you are seeing in terms of demand. More on the business, less on the traction and demand.
Sure. So if you think of it, right, any company, and NDTV is a customer of ours as well, any of your enterprise and mid-market customers are all trying to figure out how can they manage their spends better, right? You want to reduce leakage, you want to reduce friction, you want to make it very convenient for your users, whether it's your employees, whether it's your vendors, whether it's your channel partners. And that's the way the world has evolved. That's the way India has moved. And we are very clearly the number one player in the fintech space in the world today as India. And, consumers and corporates demand that the solutions are working seamlessly. So it's not about software or a payment instrument. What the customer is asking is software and payment instrument, and the entire experience has to be integrated and seamless. That's what we are able to provide through our platform, whether it's Save, which is our employee expenses and benefits platform, or Zoya, which is our vendor payments platform, or Propel, which is our channel incentive platform, where each of these platforms integrate with the ERP on the one side, with the HRMS on the other side. And all these integrations are bringing in data, information, allowing corporates to set policies, limits, as well as to be able to view the data of the spends in a single unified view through very easy to understand dashboards, whether it's pie charts, bar graphs. So any layperson can understand what's happening in terms of the spends, not just your accounts folks. Historically, it's only the CFO's office which has been responsible for controlling costs, and it's been an old complaint of CFOs that revenues seem to be the prerogative of everybody in the company, but cost control is the burden of only the CFO. This allows you to spread that responsibility across the organization.
Got it. Okay. So yes, more simplified, but if you can also give us what's the kind of market share, if there is one, if there is a metric, what's the kind of market share you have in the space? Because for one integrated player to be doing all the businesses that you're doing, that's unique in itself. So if you can give us product wise, or how does it work?
So Harsh, we are clearly the number one player in the spend management space in India today, right? And the market is recognizing it. The rest of the competition is highly fragmented. It's hard to create an ecosystem the way we have. And I say it with all humility that it's taken us a 13-year journey, and we've just scratched the surface so far. Right, so it's hard to be able to integrate with all these systems, acquire these corporates. Today we have 14 bank partners, some of the best banks in the country, like SBI, ICICI, Access, etc. So market share wise, we are very clearly the market leader. To pinpoint a percentage is hard because there's a lot of fragmentation in the market when it comes to point solutions which others offer, whether it's expenses, whether it's benefits, whether it's channel incentives. But overall, if you look at it, we are a top 5 player in the commercial card space today in India, credit card. We are one of the leading issuers of prepaid cards in the country. So that way you would obviously see where we stand. Overall, to say that this is our market share is a little tricky because this is yet a nascent industry, very fast growing, and with the tailwinds of DeMon, GST, COVID, all kicking in towards digitization. So there are a lot of those tailwinds. So the market continues to expand very rapidly on a daily basis.
All right, let's talk margins, profitability. First off, with regard to your adjusted EBITDA margins, as you would call it, which for viewer context just about excludes ESOP. So margins excluding ESOP, you've suggested that number should be 11 to 13% in the medium term, maybe a year or two is what I guess. Give us that guidance as to how quickly you get there, because currently you are fluctuating between the maybe 9 to 12, 11 odd % bracket.
Yeah, so Harsh, we are this quarter at about 10.1%, and our guidance is that for this year we'd be in similar levels. By FY28 or so, we'll be in the range of 15 to 16%. And the way we look at the margin expansion is, if you think of it, how do typically margins expand? It's firstly the growth in top line. I'm talking of a growing industry and growing company, right? So your top line grows, then your gross margins grow. Our gross margins have started to grow very healthily. So this quarter, our gross margins were about 57% compared to the same Q1 of last year, which was about 51%, right? So we are seeing expansion of the gross margin, and eventually in the next 2-3 years, it will flow right down to PAT through EBITDA and into PAT. So we're seeing the expansion, but right now our guidance for margins for adjusted EBITDA is around 10% for this year.
Got it. And so maybe a year or two from now, we'll make the journey to 13, and thereafter FY28, 16 is my...
So we would have to understand how that goes, Harsh. Sometimes, these things take a little while longer, but we are fairly bullish about the fact that by FY28, we should be in the range of 15 to 16%. Whether that happens, right off the bat, or maybe it takes a little while and then it kickstarts in a big way, we'll have to wait and see.
Right. And you've guided for doubling of revenue versus FY24. FY24 at roughly 770 crore, doubling by FY26. Where should that go? Because you're growing at nearly 50% over FY25 and 26. If that were to continue to happen, you'll likely double, maybe 50 and 40, and you'll likely double, to around 15 to 1600 crore. Where does that go? Because the base gets higher then. How much of that is annual recurring, and where does that go to?
So, Harsh, one, we are very confident of comfortably doubling, in 2 years. We potentially would outdo that. The beauty of being in a country like India and in a market like spend management is the market size, or the TAM, so to say, is so large, and we are now experiencing the benefit of being the market leader. I can't emphasize this enough. How enterprises and mid-market customers gravitate towards somebody who has a high quality solution which is established in the market, and given the number of startups and fintechs who've had a tough time, being listed, being profitable is a very big sign of stability. Last 5 years, we are profitable at a PAT level, and the corporates and banks really give a very large premium to that profitability. So we are very confident that going forward also, after those 2 years, the growth will be very robust. What it would be, maybe a little premature for me to say, but internally our targets are very robust right up to 2032.
Got it. And I want to try and understand if your EBITDA margins are 16%. So currently margins are at around 10.5. Your PAT margin is roughly 6.5, 7. Once they reach 16, your EBITDA margins, where does PAT margin lie? Because you'll have a significantly higher cash flow coming in. Likely those interest expenses will go away. Your depreciation is largely insignificant compared to the larger top line you'll have by then. So I want to try and understand, will that completely flow to bottom line? Is that the right way to look at it? Is that the right way I'm looking at it?
So Harsh, you're very, very bang on, right? I mean, it would very largely flow into PAT. Of course, there's a tax component. So obviously there's there. But from a PBT perspective, a very large portion of the expansion and EBITDA will flow into the PBT and, of course, the PAT as well.
Got it. And with regard to cash, where are you deploying? Where are you investing your free cash? It's a high cash generating business. So just want to get that as well.
See, on cash, if you look at it, our cash would go into organic and inorganic growth levers. And we are looking at opportunities for inorganic growth very seriously, both domestic and international. We are also looking at opportunities where these acquisitions are EBITDA accretive. The challenge there, Harsh, is profit or EBITDA accretive acquisitions are rare to find, especially in the spend management space. But we are looking at them. And if not, then we would definitely make sure that acquisition is bringing significant value to us on the product side or the geographic expansion side. And a lot of investment is going on in adding high quality talent in the organization, leveraging technologies like AI. We've spoken extensively in the analyst call as to how AI and OCR and NLP are really making a big difference in the lives of our users and corporate customers. And we'll continue to invest and double down on that.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Welcome, you're watching the Small and Mid Cap Show. I am Mahima Vachrajani. Well, we have a very interesting lineup of managements lined up for you on the Small and Mid Cap Show today. First up, we're joined by Mr. Dinesh Agrawal, founder and CEO of India Mart. India Mart came out with its Q1 FY25 results, good set of numbers, margins have significantly improved. But to discuss more about this, how the quarter has gone by and how FY25 is shaping up for the company, we'll welcome Mr. Dinesh Agrawal. Welcome to the show, sir. Give us some context as to how the quarter has gone by. A good set of numbers. There's growth in margins as well as net profit. Give us some color as to how the quarter has gone by and how do you see FY25 shaping up as a whole?
Yeah, so revenue from operations on a standalone basis grew by about 18% to 315 crores. And EBITDA margin has been expanded specifically in the quarter one because the hirings have happened a little later. But still, it is much higher than the previous quarters. We plan to maintain this margin at about 33-34%. Other income has also shown handsome gains. So that is why the profit after tax is very high right now. In terms of the collections from customer also has grown at 15% to 341 crores. Cash generated from operations has also grown to 125 crores for the quarter. Currently, we have about a deferred revenue of about 1,421 crores and cash balance at 2,150 crores. Our paying suppliers have grown moderately by only 1,500 customers from 214,000 to 216,000.
Right. So, Mr. Agrawal, since you mentioned, your paying subscribers addition has been muted for this quarter. I want to understand that this is majorly on the back of churn that has been observed in the customers from silver monthly and silver annual packages because you've taken some kind of price hikes there. So, I want to understand that how do you plan to recover this loss that has happened in Q1 FY25? Do you see that prices going back to what they were before this, or is there some other strategy that you'll be using?
We are trying to optimize where we acquire customers from, which industry and which cities that we acquire customers from. We should acquire customers more in the profitable segment, and that is what we have been doing. On the churn side, yes, SME churns have been elevated on the silver annual and silver monthly level. However, we continue to see very healthy retention on the gold and platinum subscribers. As I told on the con call also, about 50% of the customers are in the gold and platinum. They account for about 75% of the revenue. So we continue to operate with a profitable growth mindset, and we will address the churn issue by moderating our algorithms to reduce the competition, as well as to increase the relevancy for the suppliers getting buyer inquiries.
Right. So then, Mr. Agarwal, how long do you think will it take for you to, come back to the normal levels as it was before?
Yeah, it is taking some time, so I'm not able to comment on that. We continue to work on that. Maybe another 2 quarters, but let us work closely on that and see how it shapes up.
Understood. And, you've also started cutting back on marketing expenditure overall. So I want to understand that will this overall impact your growth going forward?
No, marketing spend has been nil for many years now. We have not yet started any brand marketing. The last time we did any marketing spend was sometime around in 2016 or something. So we have not been doing any marketing spend. We have had organic and word of mouth growth. Our brand has been pretty strong on the in the market. So we have not needed any inorganic marketing or advertising so far. If we need be, we have enough cash and enough profits to do that.
Right. Mr. Agarwal, in this particular quarter, you've also acquired 10% of Baldor Technologies. So I want to understand that what are the kind of synergies that you're expecting from this particular acquisition, and what is the kind of revenue inflow are you expecting from this acquisition?
See, we have made a minority investment of 10% into ID5. They run a very good digital KYC and digital onboarding process. Apart from that, they have a very good bank statement analyzer and things like that. So we are looking at help in the process of merchant onboarding, as well as buyer any kind of a user fraud detection going forward, because as the digital adoption is growing, these kind of technologies would come at help at India Mart also. And we also believe that in the long run, there could be more synergies possible going forward.
Right. And Mr. Agarwal, for FY24, you'd roughly done revenue of 1,200 odd crores, and your net profits were approximately 335 odd crores. So give us some, idea as to what is your target for FY25 in terms of top line and bottom line.
So going by the revenue run rate, currently we are at a revenue run rate on the consolidated basis of about 331 crores. So this looks like if you quadruple it, because most of our revenues come from collection from customers, and collection from customer has been growing at 16, 17, 18%. So similar growth is expected in the upcoming quarters also. In terms of cash from operation, or in terms of profit, I think we are doing a lot better than previous year. Previous year we have done about 28% overall EBITDA margin. This year we are expecting at about 33% overall EBITDA margin.
Okay. And, I want to understand that, this quarter you've done EBITDA margins of 36%. So overall, you're expecting a 33% EBITDA margin. Why is that dip? One thing, what will be the overall levers that will maintain the margins at 33%?
Yeah. So last year we did about 28%, and last quarter, January, JFM quarter, we have done some gains because of the certain optimizations that we have done. There is a natural leverage that is coming as the revenue is increasing. The fixed costs are coming as a percentage lower of that. Also in the April, May, June quarter, because the hiring typically happens towards the end of June and beginning of July based upon the college outcomes. So we are expecting this 37% margin to dip further to maybe 33-34%.
Right. And Mr. Agarwal, with respect to your internal targets for the entire FY25 for certain operational metrics like unique business inquiries, supplier storefronts and traffic, what are the internal targets that you've set for yourself?
So we continue to maintain our internal target at 20% and depending upon, because it's a marketplace and lot more moving parts are there, we are a horizontal marketplace. So daily unique business inquiries have increased 14-15% in the last 2 quarters, and we would want to maintain this at the similar levels. In terms of the supplier, total supplier base, if you see, we have about 8 million total supplier base, and that grows slowly and slowly because we are adding about 0.1 million supplier almost every quarter, so about 500,000 supplier in the entire year. In terms of registered buyers also, if you see, we increase the registered buyers by about 3 to 4 million every quarter, so about 10 to 12 million every year.
Right. Well, Mr. Agarwal, thank you so much for giving us those insights on India Mart, and all the best for the entire FY25. But with that, it's time to slip into a short break. But up next, we'll be joined by the management of Jindal Stainless and Sapphire Foods. So stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downward,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Welcome back. You're watching the small and mid cap show. Well, Jindal Stainless is also in focus. It came out with its Q1 FY25 results. Revenue was down around 7.4%. EBITDA was up 1.6%. Margins have improved a tad bit and net profit was down around 12%. But to discuss more about how the company quarter gone by and how FY25 is shaping up, we're joined by Mr. Anurag Mantri, ED and Group CFO of Jindal Stainless. Welcome to the show, sir. I want to understand that what is your assessment of Q1 FY25 and what is the kind of outlook that you'll give for overall FY25, especially for your EBITDA for ton guidance?
So if you see Q1 results, we have done the highest ever sales in terms of the volumes in Q1, so which is a good sign, and this is despite the challenges in the global market and especially the export market, because our export mix in this quarter was also still lower at 10%. So despite that, because we continue to tap a momentum in the domestic market and especially the newer sector which we cater in the stainless steel sector, which continue to grow up the demand of the volume, our volumes. So I think, and especially an EBITDA per ton, if you see, we have seen a sequential improvement in the sequential basis. So we are seeing overall a good positive sign, and our guidance for the year, therefore, it gives a confidence of us that we should be able to achieve a guidance of around 20% of the volume growth in this financial year. And the EBITDA should be around 18 to 20,000, but depending, obviously, a lot will depend on this guidance is how the export market shapes up in H2. Also, the domestic industry is currently under pressure from the lot of imports coming from China, and which has to be addressed at a faster pace, because we are seeing the all-time high imports coming from China at this stage. And last time in the DGTR, when DGTR did an investigation, there was finding that 18 to 22% has been non-WTO subsidies which has been provided by Chinese government to the Chinese manufacturer. We our long-standing demand is that it should be addressed, because otherwise, especially the MSME manufacturers are right now actually really struggling. And in any country to grow develop the manufacturing ecosystem, it is necessary that entire right from the bigger player to MSME player also thrives in that market. So with that, I think that also need to be addressed. If all those export market and the Chinese imports pressure, depending on that, we still maintain our guidance. We said, okay, that 20% should be achievable, but it will all depend on these two factors also.
Right, Mr. Mantri. This is Mika Barve this side. You mentioned, demand in the domestic market, being under pressure, with China's imports. But are there still some pockets of growth that the company is seeing? And if yes, from which sectors? I mean, you'll cater to various industries like auto, railways, construction. So which sectors would be driving the demand and growth going forward?
So right now as last quarter, we have seen a good uptick in the demand, which continue to remain strong in railways, automobile, pipe and tube, certain valuable pipe and tube segments, as well as lifts and elevator segment. These demands continue to remain domestic demand remain to be strong. The newer sectors which we cater, because at Jindal Stainless, we are at the forefront of the very high quality products and of the stainless steel. So the newer sector like hydrogen, ethanol, all these should also the kind of traction which we are getting should continue to get our volumes for us in the future. But right now, railway, auto, PNT, lifts and elevator, they are actually showing a good demand traction.
Got it, Mr. Mantri. And I also want to talk about the latest approved 5,000 crore fundraise. If you could just give us some details. And, companies mentioned that this is for the expansion plans. So how would it be allocated for, the expansion plans that the company does have in place right now?
See, this is an enabling resolution to prepare ourselves for the future growth of the company. I think if you see, as I mentioned, that the domestic demand in stainless steel industry continues to remain robust, and we need to continue to maintain our leadership position and consolidate our positions in the domestic market to tap that, right? So we are getting this enabling resolution which board has approved for us to tap the organic and inorganic opportunities whenever it comes. So we will because we want, the two things is very key for us. One is that prudent capital allocation. We want to maintain a very healthy ratios, and considering we also want to keep consolidating the position in the for the stainless steel sector and especially the export market and the domestic market, both sides. So continue to grow more and make in India efforts of that. So with that, I think to tap these two things, it's a more enabling resolution at this stage, and we'll see that how the opportunities unfolds for us.
Mr. Mantri, and to end this, I want to ask lastly on the the timelines for your two main expansion plans. One is the expansion of the downstream lines, and one is the upgradation of the infrastructure facilities. When would we see the full effect of these expansion plans coming into place?
All the expansion plans which we have announced, I think, will be which we have currently announced, will be up and running in next 2 to 3 years. So because these include the melt shop of the Indonesia, the downstream. So it's actually combination and balancing facilities also. So the timings have been that within 2 to 3 years, all these expansions should come on the stream.
Right. Well, Mr. Mantri, thank you so much for giving us those insights on your company, and all the best for FY25. And thank you so much for taking our time and speaking with us at NDTV Profit. But with that, we'll shift focus to Sapphire Foods. Sapphire Foods also came out with its Q1 FY25 numbers, where revenue was up 10%, EBITDA was up around 2.3%. However, margins have taken a hit from 18.6% down to 17.3%, and net profit is down around 67%. So to discuss more about how quarter has gone by, we are joined by Mr. Sanjay Purohit, whole-time director and group CEO of Sapphire Foods India. Welcome to the show, Mr. Purohit. My first question to you is that your revenues have grown 10%. However, your margins and net profit have taken a hit. So give us some color as to why that has happened.
So thank you for having me on the show, Mahima. Firstly, overall consumer demand sentiment continues to remain subdued, as we've seen over the last perhaps 4-6 quarters. And within that subdued demand, I think we've had a steady performance on KFC, and I'll give a little more nuance in a minute. And we've seen an uptick in performance on Pizza Hut and Sri Lanka. On KFC in April, because of the shift of Navratra days, where a non-veg is eschewed by a large section of people, and we see a drop in KFC sales. Navratra was entirely in April this time versus last year in May, and therefore April from a same-store sales growth perspective on KFC was muted. May and June was all right, and as we are getting into quarter 2 also, we are seeing a similar trend. However, because of operating deleverage, largely because of that Navratra impact, you're seeing slight erosion in margin on KFC. So it came down to 18.8%, which is still perhaps the best in the industry. On Pizza Hut, we've had an uptick in performance. We've had about 5-6 quarters of declining ADS trends. But this quarter, on the back of intervention on product innovation, we launched Melts, which is an outstanding product, backed it up with television advertising. We've seen an uptick in performance. And our Sri Lanka business also now has started to rebound, a double-digit same-store sales growth. So overall steady, but because of operating deleverage and Pizza Hut year-on-year being lower, though on sequential basis being a little better, we've seen this margin erosion.
Understood, Mr. Purohit. I also want to understand that I was seeing your channel contribution, and on a year-on-year basis, the contribution from delivery and takeaway is increasing as compared to dine-ins. So I want to understand that what is your strategy going forward? What is the kind of store expansion are you looking at, or will you be cutting down your guidance for store expansion because delivery and takeaway are just simply increasing?
So two parts to the question. What is happening on the channel part? And I'll explain that. There is a marginally gradual shift, if I could say so, from dine-in to delivery that indeed we are seeing. So that is in our hitherto operating hours of say 11 to 11. Over the last year, however, in most of our stores, we have increased our operating hours, and today we are open in some stores till 2 o'clock, in some stores even right up to 3 to 4 o'clock in the morning. Now that slot is almost entirely delivery. There's no dine-in sales there. And hence that channel or that day part coming into the picture has skewed the delivery proportions a little bit. Apart from that, we've seen just a very gradual or marginal shift in the dine-in versus delivery proportions. Right. Having said that, from a store expansion perspective, we had called out that we are on track to double KFC store count by the end of December 24. So December 21, whatever we should be able to double it by the end of the year. On Pizza Hut, we continue to be very cautious.
Right.
In the first 6 months, we've opened just one store. Right. I don't think in the next 6 months it will be at that low pace. It will be slightly better than that. And in Sri Lanka also, I think till the economy fully bounces back, we're going to be cautious.
Got it. And, with respect to your same store sales growth, like you rightly mentioned, it's a double-digit growth for the Sri Lanka business. However, Pizza Hut and KFC same store sales growth have been, under pressure since the past few quarters. So when do you expect recovery there?
So, first of all, we are doing all that we can to improve trajectory on the business. On KFC, we launched the International Zinger Festival. Right now, the rolls range improves our snacking options that we've got, to offer consumers. We've pushed lunch in a significant manner. The late night occasion is something that we are pushing. So we're doing all that we can. And we've got to still remember that there is a subdued consumer demand environment that we are operating in. I think Q2 should still continue in the same vein, and I believe that towards the end of the calendar year, we should start seeing an improvement. On Pizza Hut, sequentially there is an improvement, but perhaps it will take another 2-3 quarters for us to translate that into same-store sales growth.
Right. Got it, Mr. Purohit. Well, thank you so much for taking our time and speaking with us at NDTV Profit. We look forward to a longer chat in the near future. But with that, it's time to wrap the small and mid-cap show. But remember, Indiabulls Housing Finance Limited is now